Welcome, everybody. How's it going? I am Steve Tileman here with Trade the Pool. We are going to be talking about oil today. We're going to be talking about the war in Iran, what it means for the markets, and most importantly, how we can play it. So there's lots to talk about here. Definitely a lot up for interpretation. We're still, this is a very fluid situation, no pun intended. So we gotta watch the news consistently and keep up to date here. But in my eyes, this is not a cut and dry story like it has been in many of the previous Iran conflict cases, where it was a quick spike and then continued sell off. So we're going to talk about why this is potentially different this time and what these possible scenarios could be and how we're going to play each one if they arise. Welcome, little buddy. Thank you so much for joining. Always good to see you in here. We had some shaking and baking with some of our plays there, huh? ONDS once again trying to break out in the morning, getting bopped down back to the 10 level. So maybe next year, maybe next week, we we still have hope. As long as there's conflict, there's going to be hope for pops in these war names, these defense names, and we'll talk about that too. So, how's everybody's week going as we wait for people to come on in here? You guys catch any good trades here? Catch any this short today? I'm kicking myself, man. My system said, "Hey, watch for 671.50. If we flip that, go long. If we don't, go short." I had to go out to a doctor's appointment this morning, and I come back, and it's just like hit 671.50, drop like a rock without me. So yeah, that's it's the price you pay for not watching the charts. So be sure to be in front of the screen when the moves can happen there. Hey, Talk, good to see you, man. Hey, Eric Russell, welcome. Yeah, it's been a crazy week, so we're gonna talk about that. We can get into some charts if we have time after, but I got a little bit planned for you here. So let's start with that here. Yeah, we got enough people. All right, guys. So what first? What actually happened? There's been a lot of conflict in the Middle East in the past, couple decades, and what makes this time stand out compared to the past multitude of times? Well, the biggest thing is that the Strait of Hormuz closed. It went from 20 million barrels per day to zero, and that's a big deal. So the kind of timeline here is that on the 28th we launched kind of a joint operation with Israel into strikes onto Iran. On the 9th, the Strait of Hormuz effectively closed, and there's been like hundreds of tankers just anchored outside doing nothing here. So that's why we've been seeing just crazy moves in the energy market and a lot of kind of shifting geopolitically as everybody kind of scrambles to figure out what they're going to do with this big supply chain disruption. So this doesn't just affect oil. We're going to talk about some other ways that are some other corners of the market that got heavily affected. But really, this affects everything because energy is required for just about every industry. I can't think of a single industry that doesn't use any energy, even if it's employees driving their car to work or something. No, but obviously there's it's deeply ingrained with economies, and we have a lot to contend with in either situation based on how it goes here. But the big kind of the headline here is that every single number you have on your screen right now is wrong. If the strait stays closed for months, everything is going to be affected. Oil is going to be much higher. Most other things going to take significant hits, and we're going to just kind of have to work through that as we keep getting new data points to add to the picture here. Talk, you got the four days up, 1 day down. Love that. All right, good to see you, little buddy. Take care. Have a great weekend. Yeah, Talk. I had a flat day today because I didn't trade. I guess it's a red day because I think some of my swings were. I actually haven't checked, so I'm probably up a little on some crypto positions. Probably down on most everything else except for the hedge. So we're going to assume the hedge hedged, and I'm roughly flat. Yeah, it's about that upward trajectory, right? So 3 days up, 2 days down, good to go. Good to go. Especially if, as you get better, you're going to start being able to trade your wins better for more profit, right? So you're not you're going to be making more and more each time with those bigger days on the 3 days, and you're going to continue to learn how to size your risks down, or then continue to make your losses smaller on the two red days. So all about that forward trajectory, and it's not going to be linear. We say three green days, 2 red days in a week, but you know what? Some months it'll be 3 green weeks, 1 red week. That's going to be pretty common too. Every once in a while, you might have a red month, and that's when you can really get introspective and start figuring out what's going wrong there. But other than that, success isn't going to be completely linear, and there's going to be ups and downs. So be kind to yourself on the red days, and appreciate the green ones. All right, back to it here. So oil, there's a lot going on here. Who's going to benefit from this? So there's a lot of different industries that are going to benefit, a lot of different entities, political and otherwise, that are going to benefit from this. And it's important to remember that oil has always been not just a commodity, but a financial and a political asset. So the big piece of the puzzle here, I think, is the petrodollar system. So oil priced in dollars equals a constant demand for those US dollars. And obviously, the U.S. shale producers are going to be a big beneficiary. Pre-war, WTI, which is crude oil, was heading towards $60, and it was just constant supply pressure, or systemic pressure to the downside. There was just too much oversupply. So the U.S. producers weren't particularly living their best lives. Whereas up here at 95, over 90, what are we at now? I believe we're at 90. I don't know where we close. Somewhere high, somewhere high. They are making a lot of money, so it's great for domestic production, or it's great for these companies who are making huge margins essentially. So the defense contractors, they're obviously going to be another huge beneficiary here because who makes the stuff that's blowing stuff up and getting blown up, right? So the net effect here is our GDP is in war does very well. And this was ever since we changed the calculations to include defense spending into our GDP. And so, this looks really good for whoever is in charge in that sense, right? So it can be an economic boon in that sense. And it can also, like we were talking about, provide that demand for the dollar. Because I don't know if you guys have been checking lately, but the dollar has been having a hard time in the past year or so. So in the past couple months, it's been stabilizing in a range and just barely holding on the bottom of this giant pennant. So the dollar basically has been at this decision point. Well, it's one thing that can really stabilize a dollar if there's a lot of oil and a lot of dollars in oil being traded around this. So I don't know, just speculating a little bit there. But another big aspect here is that this introduces a lot of financial volatility into the system. So this isn't to get conspiratorial or anything. It's just to say that, there has been not much teeth to the regulatory industries regarding, financial speculation and whatnot. Seems like there's been a whole lot of insider trading. And, these big whippy moves do create a lot of money in that regard too. That's not why we're doing this, of course, but it is an interesting component because we're talking about the market side of this. So this is what we have to watch for: these big asymmetric opportunities where you can make a ton of money if these things which seemed unlikely previously, but now seem to be an impending reality. This is something like the Strait of Hormuz being closed for an extended period of time. Then you still really start being able to see some trades where you get crazy risk to reward. Or at least in the sense that oil made a very small percentage of my position at the start of the year. It didn't look particularly appealing, but you know what? They were just these dull charts, these sleeping charts that I knew if something bad happened, these would do well. So as we started getting some more buzz around the Iran stuff, we started accumulating positions in Exxon, in Schlumberger, in what else? We played Borr, the offshore drilling company. All of these names started to work together. And this started to kind of inform us that maybe this time was a little bit different and maybe that we were headed to some kind of conflict. Hey, Adrian, good to see you in here, man. Hey, Roz, welcome, guys. Hope you've had a good week. And Mike, yo. What's good, brother? So talk, you're jumping ahead here. We're going to be talking oil. We've been talking oil. We're going to be talking natty gas. We're going to be talking some potash as well. Potash, helium. I didn't put helium in here, but that is another absolutely key component here, which has been all of a sudden the dynamics have changed drastically with the Strait of Hormuz. So let's start talking about some of those as we go along here. So will history rhyme? That's the question. That's the question I'm asking myself. In 1990, when we invaded Kuwait, or when Iraq invaded Kuwait, I should say, in 1990, here, oil was at $17 and it shot up to 36 in only 3 months. So that's a 112% increase there. So that's a pretty astounding move. And, we haven't seen one like that at all until, since the Ukraine war to any even remote level of magnitude until now. So we've had quite an explosive pop here. We're settling up like 50%, but at the peak, it was what, 75%, I think, 78%, something crazy, just a crazy jump on the year there. So the interesting things to note when comparing this situation to the 1990 Gulf War, well, the first thing is prices actually fell on the day that Allied bombing of Iraq began. And that was January 1991. And you can see it is that spike on the chart there. So 1990, we spiked like crazy there from $17 to 37 or 36, and then we sold off very abruptly. So there's a few interesting things about that. First off, it just goes to show that technical analysis is not a new thing, right? Because look at this previous higher high in 1980 from, I believe that would be the Iranian Revolution, right? 1979, right there. So one big geopolitical event moves it from about $15 to $40. The resolution of that moves it back down to $15. Another geopolitical, event, but both of which, the U.S. had quite a large hand in, by the way, if you didn't know, sends it right back to the same level. It spikes and drops off right back to the same range, So, I mean, I don't know. It's a lot of money in this. But it really just goes to show just just how important levels are on these markets. And people will always say like, you can't trust technical analysis on commodities, especially on oil, because they're so prone to, well, manipulation with oil, with OPEC, with the supply, and also just geopolitical factors. It's hard to predict when conflicts might arise in certain situations and countries might need to stockpile certain resources or whatever. That can change the dynamics. And of course, it's hard to predict when something could happen to shut them down, like this. But it's hard, but it's not impossible. So that's why I think it's important to note that this time in this oil spike that we've been seeing, it isn't just a spike. It's been a really long-term gradual base that's built out, and it's been a very constructive breakout until very recently when it's gotten insane. And then it's been a blow off, and now we're kind of renegotiating whether we can continue straight away. The thing that I think a lot of people aren't considering is that how do I put this diplomatically, I guess? It doesn't seem like there's been a huge amount of foresight regarding a lot of the blowback of this and just how tough it will be to end this conflict shortly with only the stick method, with no, usually it's a carrot and a stick, right? So by taking away a lot of negotiating leverage that, we had with Iran in terms of like, we had a nuclear deal, and now we're definitely not in a negotiating kind of mood. So it might be quite a prolonged conflict if the current administration does not change their tune in terms of what constitutes a victory. We might be starting to see that. I've heard Trump say, it's so hard. One day he seems to be responding to a red market. He does respond to the market. He listens to the market more than anybody else, I'd say. But then the next day he says, we're going to keep fighting until until he feels it in his bones or something. So I don't know what that means. So my big point being, it's going to be hard to concisely predict when this is going to end, and it's going to be a lot more binary than the market is pricing in right now. If this doesn't resolve soon, prices will keep going higher. It will be pretty aggressive, as we've seen. The Strait of Hormuz is a very, very big deal, and we just really got to keep watching these oil prices and these news headlines, because one headline can change prices very drastically. What is important though is on these headlines, it might be hard to be able to quickly analyze like whether this headline is actually super meaningful or whether it's just some small volatility introduced into a volatile trade. So what you can watch for is on these pullbacks for really quick snapbacks. And you saw a couple today and a couple yesterday where headlines that should have been bearish for oil got bought up very quick, and that's a sign that the market is looking at small term or short term dips as a buying opportunity now. And so that they are starting to predict that this conflict is going to go longer, and the market will keep going in that direction, offering a higher level, a higher price until there is a reason for it not to. So, gotta respect this trade and not try to step in front of a freight train and short it. We need the signal, the catalyst for us to go short. And that's going to be our scenario B. And if there's a reason it's scenario B for me. Scenario A is that, things are still developing. It's not neat. It's not tidy. It's going to take time and it'll be higher for longer until it's not. And I know that's kind of a cop out, but I think it's really the way this goes. So what we can do is position accordingly so that we can make money on this powerful trend, but be ready in case it fails. All right, let's check in on those comments. Tanks don't like sand. Tanks don't like sand. And you know what? It's hard to invade into mountainous territory. Iraq was flat, and sand is one set of problems, but mountainous terrain is very different and feels a lot more like almost like a Vietnam levels of like difficulty in terms of the terrain compared to Iraq. So I really hope we don't have to do a boots on the ground invasion because, of course, many lives will be lost, and that's always a tragedy. So we don't want that. We definitely don't want that. We want some type of peaceful resolution ASAP, even if that kills this trade. I would love this trade to die and the world to get a little bit more sane. It's horrible for invasion, absolutely. All right, all right. Let's see. Got somebody asking about Discord. So I will drop my Discord link and you're welcome to reach out to me. I'll do that now before I forget, and then we'll keep on trucking here. So yeah, this is my free educational Discord server. You guys are more than welcome to join. We have very active and very good traders there. My elevator pitch is always, I am not the best trader in there, and that's why you should be in there. If you think I know a little something, hang out and you'll learn from people that I've been learning from too. And hey, we got people that got a lot of years on me in this room. So definitely the community to be in, guys. Trade the pool. We attract smart people who want to keep learning, hungry for knowledge. All right, let's see. Catching up here. Yeah, Adrian mentioning that it really is all about the Strait of Hormuz. It's what constitutes a war being over can be relatively subjective, depending on who's dropping the bombs. So, and who's getting bombed, of course. So it will be much more matter how many ships are getting let through. So we heard a headline from the Iranian Navy that they are willing to coordinate with ships to pass through. You just got to coordinate with them. And it's like, okay, I don't trust that. They're saying they're letting Indian ships through. Okay, maybe trust that. I don't really know what to believe, but I know that oil keeps going up and the dips from these headlines keep getting bought, which tells me it's more smoke and mirrors. And just keep trusting the price over what a country that is being attacked is saying, because they might say some things that aren't true, just like we say some things that aren't true, just the way it is with war. All right. Yeah, Adrian saying the war itself likely doesn't matter for markets. It's never been. It's always been about the oil, I would say, in terms of bearishness. Long term, wars are almost always good for us. It boosts our GDP. It's usually we're doing it for a reason. Usually we get something strategically, whether it's an outpost closer to an adversary, whether it is just in general getting somebody in power that's more in line with our interests or is less of a threat to our interests, something like that. Obviously, Iran ticking a lot of boxes. There's a lot of reasons why a good resolution here would be good for the markets and for I would say for the world, community, not a very nice guy. So we're hoping for stability and something better. Just how we get there is going to be rocky is probably my best assumption. So let's keep trucking here. Oh, let's see. Did I cover everything here? Yeah, we talked about the full spike. So far the 65 to 70 level. This is kind of like the before times, right? That's where we go back to when this is all just a memory. I don't know if that'll be anytime soon. So the 80. We're actually, let's talk levels in a slide or two. We got them coming up. So let's first talk these two scenarios. We kind of started talking about it, but let's get into it a little bit more. Yeah, talk saying the amount of misinformation is bothering, absolutely, and it's what I will say is if you're following this trade and if you're following just the news in general, which I mean, we all are to some degree or another, even if we try to avoid it, just take breaks. It's depressing stuff, Go watch a comedy, go pet a cat. That's what I do. Center yourself because it's tough thinking about all the lives being lost and all the better things we could be doing than having our tax dollars blowing our other tax dollars up back and forth, but good for GDP. So the first scenario is what we've been talking about, the prolonged closure. So Hormuz stays blocked for 60 plus days. That would send WTI oil up to at least 150, I'd say. My technical level is 158. My technical level is not what I'm really, that's a rough guide. That's a signpost, it's like a general area of interest. The 150 level, of course, is going to be all eyes on that. So, just taking profit above 150 when it loses momentum essentially is the big target trim. Um, and this could lead to global recession risk, would likely lead to a global recession risk. It would likely or potentially lead to stagflation, and that's like rising inflation, in the face of all of this. So these are the kind of the worst cases, and we of course hope this doesn't play out. But if so, it's going to be really important to have something to hedge everything else you're holding. So there are easier ways to play this and harder ways to play this. Like you might just be thinking tankers, that's the easy play, right? Well, it's not so simple because if they can't actually pass, well, then they can't actually make money. If they can kind of pass, but they can charge a big premium, then they're, of course, uh, a lot more desirable. So that I would consider that a hard trade. Easier trades are going to be, well, just the actual commodity as a small percent, for a hedge. If that goes up, or if everything goes down, it'll be because this is going up. So there's that way to play, and we're going to talk about some more in just a few slides here. But in general, you're going to be playing the oil long, and you're not going to be expecting too much out of tech. You're going to expect commodities to do a lot better than kind of speculative stuff. So the companies that we might be looking to dip buy in are stuff like, well, we'll talk about it as we go on here. But in general, things that are producing companies that are producing real things, and not so much growth that's priced for very optimistic short-term future, if that makes sense. The scenario B is the diplomatic resolution, which is what we hope for, even if it's not necessarily what we expect quickly. A short war, ceasefire, or a partial reopening, anything like that could definitely do a lot to ease tensions. Of course, as Adrian says, the big thing is the Strait. If we get traffic resuming as normal, then it doesn't really matter what else is getting blown up. To be completely honest, because that's really really the name of the game here. So that's what we watch most closely, of course. But in this situation, WTI is likely going to snap back quite hard to. We have some levels. The 70 level is quite notable for sure. There's a big volume node building out like 88 to 85. So it might take some time and do some jagged bounces on the way down. But that 70 75 is kind of the area where it's like, okay, we're not getting scenario A, but we're not sure if it's completely going to back to structural supply oversupply levels. It might hang out there, and then eventually the trade would be to short it all the way back down there long term. Just assuming that we get a peaceful, diplomatic, smooth transition of power, which that always happens, right? So there's a lot of ways to play. For prolonged closure, we talked about some easier ways just being energy sector ETFs. So XLE, that gets you a lot of broad exposure to things that use, that produce energy, that are involved in the energy process there. You have OIH for that is going to be oil services. And well, I always get them confused. There's XOP, is that producers, and OIH is oil services, I believe. I'm sure Talk will talk screaming at a screen if I'm wrong there. Um, you have some U.S. producers that are capturing a lot of this premium in ExxonMobil. That's XOM, Chevron, CVX, EOG, and a lot of other names too that are smaller. So there, you can kind of do your own research, and there is some room to find some diversification here in terms of like hedging structure. And there's other ways that a company could outperform one to the other here as we get this crazy rise. One of my favorite ways to play that I feel like is only, I mean, it's definitely not it's nothing new. We've been talking about it a few weeks. It's not like they haven't started running already, but one that I think have a lot of legs whereas some of these oil companies maybe need a little more time to consolidate before pushing higher. I really like the fertilizer plays. So we've been in NTR since 74. We can talk about that trade. CF, I mentioned that one as well. So that one I believe is going to be the most diversified fertilizer play, and they're doing absolutely amazingly. Mosaic, they're going to be what they don't use. I believe they're what are they, nitrogen based? I forget, to be honest. Obviously not it's been a long time since I've traded these names, but it's fun to finally get to whip them out. The last time was literally the Ukraine Russia conflict, and they're a fun little basket. So we'll be learning more about the intricacies of these as we go forward. But the important thing to note is that potash is very short supply right now because 30% of that global supply came through the Strait of Hormuz, and this came at the worst possible time for fertilizer when everybody needs it to plant. So for the agricultural world, this is like kind of a perfect storm. And this is why we're seeing the fertilizer names outperforming even the energy names recently in the past week or so. So keeping a close eye on these and look for buying opportunities. I'm looking for opportunities into the 9-day EMAs, the 21-day EMAs, basically expecting these dips to be continuously bought until we get this resolution. As soon as we do get the resolution, these trades get closed. I am not in the business of holding these through the downside of the resolution, because we're all about, in the same way that in the tech bubble we were pricing all of these crazy expectations into the growth or into these stocks valuations for these tech companies, these do nothing.com companies. Well, you know it's a little different when you have a physical commodity like this, but in the same way we are getting ahead of ourselves, and the market will continue to get ahead of itself in a sense that we're looking a little bit in the future, essentially, right? So the second this does resolve, these will fall off quite steeply, and we can see that on the long-term charts previously. These guys basically squeeze, and then, as with all things, what goes up must come down there. So another interesting play that I think doesn't have or hasn't ran quite as much yet, so has some better potential here to kind of play catch up if we do get some kind of continued broad move in the energy sector, which we would, is natural gas. And so the LNG demand essentially surges as an alternative because, hey, you gotta replace it from somewhere. If you got LNG from the Middle East and all of a sudden you don't, so Europe primarily, that's going to be quite an issue, and it's going to cause a lot of money to be made on the companies that essentially export natural gas. So VG is a very appealing chart to me. I'm still deep diving their financials, but they seem to be a cool, interesting play. And obviously, it's kind of a binary in a sense of when it's coiled tightly and we're going into a weekend. So I bought calls because I wanted to define my risk. So I'm in May 15 strike VG calls as a little LNG play, because I sold my leveraged positions on like PBR. That was my big one in energy. Still holding my energy shares, but I don't know. I felt kind of naked here going into the weekend, so I wanted to pick up something. Nice, Adrian. You're in VG too. Very cool. Nice. Yeah. So it's yeah, exactly. Seems to be a solid bet or a solid way to play this kind of exporting of natural gas themes. I also saw a lot of Oxy flow. I know that Oxy. Let's see. So do a lot of stuff regarding carbon capture, and I believe they do produce a lot of LNG as well. So I don't know. There's a few that have been kind of beaten down, and the often names that have high LNG exposure are kind of beaten down compared to the oil ones, or at least lately since I've been looking around. So these are some names that we can look up for a catch up play, as if we do see this closure continue. So it's kind of like when you get a catalyst that a sector isn't sure if it's going to stick or not. Like the leaders will move, but the laggards might wait. And then by the time things kind of play out, the laggards never really got a chance to do much of anything. They just start moving and then fail. So if the move is continued, or if the strength in the sector is continuous enough, though, you'll see that rising tide lift all boats. And so that would be the situation we're kind of looking at for some of these LNG names, I'd say. So the last I would say is gold and commodities. So this is a little bit different than in the past, I would say, just because gold has been trading so much like a risk on asset. It's been trading like a, it's been going up with SPY a lot. So when it is still trading at a relative premium to historical levels, we can debate whether it's justifiable or not. I would even say it is. It could still get kind of taken out when liquidity comes out of everything else, and I would expect that to happen. So don't expect this one to work in the same way energy or a put or VIX call would work, But I do think long term, these are the names that are going to show relative strength on the dips, and ones that you should probably be accumulating for the next period of time if you're playing for this prolonged prolonged closure and into maybe sustained just geopolitical tensions in general over the next couple of years. Not a bad bet, and kind of where my head is at. So, not being too bearish, not calling a top for a long time. I think we do go higher, but it's just going to be a messy, choppy period of time here until we get some clarity. All right, talk is putting us on here. Apparently, ExxonMobil and Linde are large producers of helium. I had no idea. Adrian also putting out an interesting little tidbit there. We are exactly at the level of Buffett's entry. Yeah, very notable level, just massive amount of volume there. And we can see if the Buffett level is going to be the base that pushes off, and if Buffett was right all along. Yeah, VG was on the mat, exactly. So these guys still have room despite being up a lot recently. So what else we got? We got levels to watch. We're almost done, guys. Don't worry. I feel like I've been rambling. I guess it hasn't been that long. All right, so levels to watch here. So on crude, this is WTI. There's different ones you can watch. In the Trader Evolution, I usually use USO. You can also watch the futures themselves. They're all going to have slightly different levels. But, the basic points here are that we have a big base. See this giant volume cluster on the right side here? So the first point of interest is this level in the middle. This is the point of control, noted by that dotted line there. So this is the highest level of volume. This is going to act as the pivot and like a magnet when price is away from it until it's ready to move to an entirely new range. So whenever we were above this pivot, previously we'd come back down to it. Whenever we were below, we'd come back up to it. And this is where the most of the volume would trade. So we moved away, but we came back again. This time we pushed through very strongly on a higher volume than we have in a long time. And this implies that this point of control wants to migrate higher. So likely it would migrate up here as we retest this a few times and the volume builds out there to a higher point than there. Or it's just ready to launch pad much further and just make a new high and expand the range essentially. That would be saying, hey, we've spent enough time down here in this range. It's time to move on up and out. So obviously it's not as easy as other charts when it is oil. There's a lot of levers that can be pulled, especially with OPEC in terms of the supply. So it's not as easy as charting a small cap with a tiny float that's squeezing. It's a little different than that. But at the end of the day, it is supply and demand, right? So the levels we're watching to the upside are this band that we encountered above 105 here, 105 to 120, especially 105 to 110, though. That's a high volume node that we have marked out here. This is the level where when we tried to squeeze before in the Russia-Ukraine conflict, this is where we fell off. That's where we broke down from. So that represents kind of the top of the shelf And then there's just a little bit of volume to clean up before we squeeze out higher there. So that's a level we definitely want to watch. There's also that fib level there, the 786 fib at 105.50. So between those, that's the kind of the gatekeeping level, I would say. If we can get through that, I think that we surge pretty quickly to all-time highs. That would be through the 126 level. So through the 126, things can get wild. And like I said, things just get worse and worse the longer this is closed. So expect every single day, more or less, every single day expect oil to be up unless there's some headline which might cause it to do a small mean reversion. And that's just going to keep happening until the Strait opens. So with that in mind, where are we looking to the upside? The big target is going to be this 150 to 157 zone. So 150 to 160, let's call it. This is, notable for a few reasons. This is where people far smarter than me, doing far better napkin math than I, are saying is a fair estimate for WTI if the Strait is closed for a couple months, and it's not set in stone, but it's a good ballpark to kind of, work with. And for me, I like it too because it fits with my technical setup here, where, whenever a range breaks, this previous high to this previous low, I always look for the interaction at this 1.27 fib because that's usually where we find out whether it's going to see continuation or whether it was a fake move out of the range and it needs to come back and revisit the previous range. So because of that, that makes it the first big target on any breakout. If we get up here and we still have no sign of resolution, that would be pretty grim. But then we would start looking up higher in the 175-ish area, 1 to 180. That would be the 1.6 extension of the range. And any higher than that, then we're really in trouble. So got to expect intervention. All right. Adrian's still in the NVIS trade. I love it. Got in at 93, sold 30% at 113. Beautiful. Holding the rest. Yeah, that one's cooking very nicely. Yeah, we can take a look at natural gas and oil as well. I think I like trading the equities a little more right now. It might just be a preference thing, but yeah, definitely worth keeping an eye on. I think that there's a big play there because, well, you got to use something to heat things, right? I don't know. To heat things, power things, all that good stuff. We need energy, is the point. All right, guys. So here's the summary. You trade what you see, not what you fear. There's two basic scenarios here. If it's a prolonged situation, we're talking prices starting at 115, 120, going all the way up to 150, 160, and it could go higher too. Just depends on how long it takes for Trump to get his act together and for the world to figure out how to get along. So until then, we all bear the brunt of that at the pump, and we gotta figure it out here. 85 WTI, that's your signal. 85 to 88, that's that high volume band that was kind of put in that is forming our support as we build out there. As long as that holds, roughly at the very least, there will be shake and bake with these headlines that you will see coming in, introducing volatility to the trade. But as long as that rough zone holds, I think that we are due for higher for longer until we get that catalyst. So energy longs. XLE I like still, just nice and simple. If you don't know what to buy, that's a good bet. I'm in Exxon. I'm in PBR. That's a Brazilian company, a Brazilian oil company. I'm also in EC. That is a Colombian oil company. And I just entered VG. That is my LNG play that we talked about. So some scenario Bs that you could either pick up some small positions of these for a hedge if you think that resolution's around the corner, or you can just put these in your back pocket and start thinking about these setups and finding levels and getting ready. So you could be looking for the simple play of USO energy puts, or you could get a little spicier and long airlines for a mean reversion because they got beat to heck. Airlines are always one of the things that dies first and dies hardest, and for good reason, because they move so much with that energy cost. So what else? Don't put all your eggs in one basket. You can always go make more eggs, but just don't be too risky. Just remember that we are dealing with a big stratification of outcomes. We are either going to have something really bad for a while, or it is going to resolve very quickly. I don't think it's going to resolve that quickly, though, personally. So I don't know. Who's to say? We'll play what we see. That's what I got on the war, guys. If you have any questions or comments, come on in and drop them off in the comments here. Josh Blinzer, good to see you in here. All right, who else we got? BE. Oh, yeah, that's an interesting name we need to keep an eye on. Yeah, need the diamond hands. I have one share. I'm down to one. I can't do it. I can't do it, Adrian. It's too stressful. I've been looking for easier trades, and that has not been an easy trade. So I bought a few times at like 135 ish, under 150, and then I sold when it would just go over 150, and then I have one share left from that, and I'm just too stressed to do anything else with it. I don't even know what it's at right now. Couldn't even tell you. Okay, as a hedge, you're shorting Taiwan for now. Interesting with Grab and TSM. What else we got? We can all agree that new bottom levels will be established in energy. I 100% agree with that. I 100% agree with that. I would not be expecting a full reversion back to the oversupply levels down at 60 under 60. I think that's something that in the same way of, let's go back and look at this other chart. When we're talking about oil prices, I mean, look at this dollar per barrel here. The trend is up, even when it drops 50% at times, right? We just boosted up 70%. We dropped massively from that. All in my timeline, I'm hearing about it was the short of the century. I turn around and look at the chart at the end of the week here, and what do you know? It looks like a healthy chart that's going higher to me. No, I wouldn't say healthy. It's pretty crazy. It's a crazy chart, but it doesn't look done, is what I would say. So yeah, grab as transport like Uber. Fuel deficit is super bad for them for sure. Yeah. What else can we think about for some kind of interesting plays here? I think I'm mostly keeping it kind of simple, just sticking to the stuff with high volume and keeping it simple. What else we got? Let's pull up some charts. I'm gonna switch screens here. So, guys, I am still fighting this cold, and I don't have a ton left to share with you, but I want to give you your money's worth. And let's shoot for an hour here. We've been going 43 minutes. So I'd like to, if you guys have questions or charts or anything you'd like to bring me, we can talk about whatever you guys want here. And yeah, the floor is yours. While some of those questions or charts or ideas or anything else start coming in here, yeah, Mike, go rest. You are a diligent keyboard soldier. You are a chart soldier, and I respect you. But stand down. It's time to chill. That's what I'm about to do. It's really important not to get burnt out because it's so easy, especially with all this going on in the world and the markets. Hey, Hercules, what's up? How you doing, man? Hey, Kevin, good to see you, man. Speaking of oil, DPA for Sable. Oh. So Sable offshore, SOC. This is my most degenerate play. I didn't even mention it to you guys because I don't want you to get hurt. I'm trying to save all the cash from all the winnings for myself. This is so this is a California offshore drilling company. What a wonderful business to be in California, right? No regulations or anything to worry about there. So yeah, anyways, they seem dead in the water. They have multiple lawsuits stacking up against them. It is a situation which makes the stock go from $20 down to $5. As usual, crime pays, and it was heavily accumulated down here and is currently trading back up at 18. As last I heard, Trump was entertaining the possibility of, doing what he had to do to get them up and running. So it's a Trump play. It's an oil play. It's a very speculative play, and it's got a lot of volume coming in here. I don't know where it could go. But we can do a little charting and try to find out. Yeah, this is a wild mover for sure. And I want to look at Battle too, BATL. That's such a fun chart. So what is so interesting is SOC. I've been watching this chart for a long time, and I couldn't really make heads or tails of it because at times it looked like it was going to launch out of this massive launch pad up into the stratosphere. But these rising patterns always weird me out and usually make me think that we need to reach down lower. One that did this was NNE and SMR. A lot of the nuclear plays did these upward jutting things that showed a ton of strength, but also that there was massive sell pressure too. Catch up on the comments real quick. Imperator has a really good and important question that we're going to talk about before we get back to the oil stuff. Advice for accepting losses. This is one of the hardest things for me personally, historically, and for most traders that I talk to, especially newer traders. So you're in a play, it seems good, something happens that you don't expect. At first, it's small. At first, it's just one candle that's not acting very good. Then it turns into a 5 minute candle. Next thing you know, you're stuck in the trade. It's been 15 minutes and now it's going against you. How do you accept the loss? How do you pull the band aid? How do you get yourself out of there? You got to be able to reset because it's unintuitive for people because a lot of people have a freeze response. When you encounter stress, people you fight, you flight, or you freeze. So the fight response usually looks like averaging down into weakness. He said, "Hell no, they're not going to win. I'm not scared. Mama didn't raise no punk. We're gonna hold through diamond hands, baby. And then you end up with a pile of zero DT options worth a cent. Or you end up stuck in a penny stock that you thought was going to be a long, but you said, "Hey, I'll just average down." Well, that thing went from $7 to $20 to $4. You held it the whole way through. Stuff like that can happen. And you're not a bad person. It's just a human nature thing that sometimes you freeze. Sometimes you fight. You do the wrong thing, right? And sometimes the right answer is just flight. Sometimes you should just get out of it. So the big thing is you have to, before you get into the trade, know when you're going to be wrong. Know when you're going to be wrong. Know what level will invalidate the setup. And then you gotta have that stop in. You just gotta have that stop. And the thing is, you gotta take your hands off. If your question is more like, how do I just like mentally accept a big loss? That's also very important and very difficult, right? So that at that point, it's really just about just radical acceptance. It happened. That money is gone. It is not coming back. You will make more money in the future. You are not going to make that money back. That's a huge thing. People are always saying, "How can I get my head right again so I can make my money back?" You won't. You can make new money again. You can make new money. You can make more money than you had, but you won't make that money back. Stop trying to chase that money. You lost that money doing this, whatever you were doing. So it's important to take some time off. First off, take a break because the worst thing you can do is keep chasing it and keep trying to make it back immediately. The market will always be there, especially when there's so much violence and pain out in the market right now. A lot of people are getting hurt. A lot of holdings are getting, aired out. It's a lot of red in the market. You don't need to rush into it. So that's the first thing. When you're ready to kind of assess with a clear head, you got to identify what you did wrong. Probably you know what you did wrong. Probably and it's something you struggle with. If you're like most traders, we're usually not like, I have zero idea what I did wrong. We're usually like, I could be safe here, take a small win or a small loss, but I'm gonna roll the dice and see what happens. Or it's, I could stop out and wait for a better entry, or I could say I don't want to do that. I want to just keep buying more and just assume that I'm going to be right and stuff. It could be whatever it is. You probably know that it's not a great idea, but you're trying to sneak it, right? So that's the big thing. And then just keep on going. Remember that every single successful trader that I know personally has blown up at least one, usually a lot of accounts. I've blown up multiple accounts. I probably will blow up another. I probably won't, but I might. There's always weird stuff that can happen. But if you minimize your risk, like I might blow up an account, but I gamble with $500 options accounts, you know? So we learn ways to not hurt ourselves in the same way going forward. So it's about it's about having this be for something. Whatever this loss was, make sure that it wasn't for nothing, right? So that's my advice there. Just keep going once you have your head about you, but don't rush to make that money back. It'll come back when as an incidental. It'll just be a byproduct of you doing the right things that you're learning. That's what I got there. Okay. So Donnie T is trying to force Newsom to open up SOC again in California, correct? If that happens, SOC is going to fly, correct? Let's see any new news there. Let's see. Sorry, trying to catch up here. Adrian is in UMAC at 15. I have some shares from 17 something. It was a tester position that just got destroyed when I entered it. I bought it and just like a week later I looked and I was like, oh no, why did I do that? I bought at 17. Yeah, right here. I bought here. Thinking we broke this and held. We did not hold. Boom, all the way down. Did I add more? No, I lost interest. And that's why you got to keep these on your screen. Now it's doing my initial idea. And I'm like, oh, darn it. I only have enough shares that I didn't even notice when it dropped to 11. Wow. Yeah, it dropped to 11. So what should I have done? I should have kept watching it. That was the whole point of the tester position. I just haven't even looked. It's just I just scroll down and it's like a few shares that it's just red. I'm like, all right, well, all right. I should have had alerts set for these moving averages, and I should have waited for these bottom wicks to start forming and started to buy a little more. And then as it started working, I would have noticed a lot faster. And let's see if there was a specific day that was a good entry. Oh yeah, it got so tight too. That was so pretty. So it was on those weekly moving averages, and then it did that. It did a really, really tight pennant right into those moving averages, and volume dried up, and that was the trigger bar on the 27th. So right before the big pop and everything started, you'll see volume was very, very low. Let me see if I can find the exact reading of the volume. Doesn't look like I can. But the volume was exceptionally low, the lowest it's been in that I can see on this whole chart about, except for this candle right here, which again was a trigger bar. Trigger bar. So it's an entry. Incredibly low volume, and the close and open price are quite close together. Usually you want to see the open and the close very close, but they can be like within 50% of the candle. Like here, still within 50% of the candle body or the candle overall size. So that's what constitutes a trigger bar. You have tight consolidation at a high time frame zone of interest, and then you see incredibly low volume compared to the historical, and you see a very small body on the candle. And this is implying that the shares there are just drying up. There's not any more shares available under 1350 here or under, call it 850 here, you know? We'll find one more example as well. Let's pull up another chart. Battle. How about that? I bet we can find one on Battle. All right, what's our criteria? We want to see a pullback into a meaningful level of support. Pull back into a meaningful level of support. And we're going to have to zoom in here to see the volume. Oh, that's tough. We're going to do it on the other chart. Oh, sorry, Discord guys. Let me change the chart for you guys too, or the screen for you guys too. I apologize for that. There we go. Oh, my indicators aren't showing. There we go. Thought things were looking a little spacious, a little vacant. All right, this is going to be a perfect chart for this. First, we're going to look for the initial one. Get that big volume off the screen so we can actually see the difference. And now what we can do on here is I can pull this to a separate window. Move to, there it is. Here we go. All right, so I'm pulling the axis up here so I can see where that volume really gets super dry and small. Now I'll pull this chart up so we can see where it starts to expand. That's very low volume here. I would say this is probably the trigger bar, but you could also argue that bar right there. So again, open and close right at the same spot here. On this low volume, open and closed within 50% of the overall candle size. And both of these provided really good entries that you weren't in too much pain at all. You got some spots to trim and add back into this key zone that was forming out that you were watching. And what you can also do is you can also draw a level from those trigger bars. And this provides a pivot that you can play going forward. And as long as this is holding, you can keep adding off of it. Like what if you bottom ticked right there? That'd be pretty cool. But realistically, you'd see that it was hard stopping there. And as it starts to move up, getting a little bit higher. But still, regardless, this is a nice little way to, or thing to look for on these big explosive setups. So here again, this trigger bar, it kind of needed a reset, right? So it was a trigger bar. It seemed valid. Didn't end up playing out, but it did get a nice pop of volatility from it. So even if you aren't getting the move, you will usually get a move. This one here, this move got stuffed on high volume here. Big volume green and then red. But even then, you still get a nice little pop. So definitely something to look out for there. Then the last one I wanted to look for was in this consolidation up here. See if it gave us one there. So we look for the low volume. It's not the most beautiful candle, but it is a pretty, yeah, it's, I wouldn't say this qualifies, to be honest. But in general, just looking for the volume to dry up here, you do see that over these 3 days, as the volume was very low, it did end up being where that volume dried up and we got the nice pop starting. Then we get a better one here. Nice low volume compared to all the other days before. Sharp drop off each day. And the body closed right back up where it opened after dipping into that 9-day there. So nice look there. Okay, going back to this guy. Hey, Callie. Didn't see you in there, Callie Otter. Good to see you, brother. It's one of the OGs. We go back, what, 4 or 5 years by now? Maybe more. Shout out to the old, we'll call it J. Arlington's community. The secret place. So sorry, Imperator. I'm just seeing this. Comments were going fast. So 10 profits in a row in one day lost everything. Yeah, that's a common thing. It's not just you. So what I have to do, even now, I have to have a max daily loss. So for me, my max daily loss is the same size as my daily target. So, ideally, I'm not ever losing more than I make on average. That's the goal. So then 3 steps forward, 2 steps back, I'm a profitable trader. If I'm making more than I'm, losing on my winning trades than my losing trades, which is the case, I, have a good in general, I have roughly a 50% base hit, or hit rate, and I make a lot of money because, not a lot. I do well because my wins are much bigger than my losses, not because I'm always crushing every single trade. So you got to kind of find your own personal stats based on your system there. But the big thing is that on any one day, I can't hurt myself too bad. And that's essential because that's usually how it goes. If we just traded just based on our instincts with no framework in terms of risk management, it would probably go profitable, profitable, red, profitable, profitable, red, profitable, profitable, big red at some point, just because we'd stick with one idea that we got in our head was right and we just follow it a little bit too much because that's what the risk management's for. So it happens. Don't beat yourself up too much, but identify what it was that went wrong and make sure you have some hard stops in place like that. It's that after a stop I start trading each setup with more risk. Yeah. So you can't, whenever things aren't working, we got to size down. If we're not going to stop trading and things aren't working very well, we got to size down. And then if they start working again, then you are allowed to size up, but you don't get to size up because they aren't working or, or you really shouldn't be trading less when you're doing well, right? So that's the other side. Some people get scared when they're on a win streak. It's like, no, keep trading. But just if it stops working, then stop, a size accordingly. Talk saying he used to write out all his losses. That's a really good one. That one will get stuck. Hercules Jack wants AAOI. We can talk about that. Got to have a read on ONDS. Absolutely, brother. Absolutely. Let's hit the drones and the photonics there. Yeah, Scott, a lot of shady stuff going on with any company involving Trump. Interesting. Stay long Corning, GLW. Absolutely. That's the quality photonics name in my book. The other ones, they're probably quality too, but I don't know. My fundamental traders say light CIEN. I don't know. I think they're bad long term. And I said, I don't know. I don't know about that. I have no idea. What I do know is they seem to still be being repriced. And in the sector that's being repriced, I know GLW probably has the most staying power, the most long-term viability. But I'd be open to any of these other companies establishing themselves as a powerhouse going forward. I don't really, have a strong opinion, but some fundamental traders did not like that I called COHR and LITE, Lumentum, quality names, high quality names. So maybe I'm wrong on that. Maybe they aren't. I don't know. Let's start with AAOI. So what the heck's it doing, guys? I got to say, I think the move is done for now. I think this one got here too late to the party to be ready to push more already is kind of what I'm thinking. So like the first ones that broke out, like Light, for example. Light, I think it can pull back a little more and then start pushing again. Micron, for example, and SanDisk, they're kind of already pushing, it seems. It seems like they're kind of shrugging everything off, and they were kind of the first to spark this whole crazy parabolic move. They were the first insane ones this year. For AAOI, I could see a potential little head and shoulders playing out. Let's draw that. What if it's doing this? And then it needs to retest breakout here, or even breakout here. A measured move of this head and shoulder would be, no, I did it wrong again. Because on TradingView, it's the opposite direction. So I always go the wrong direction there. Okay, bottom to top on this one. So projected down, a 1.6 measured move of this range breaking down would be right back here. Not saying it's going to happen, but it definitely has for companies that have done crazy moves like this. Let me show you one that it kind of reminded me of here. Pull back to a weekly and we should see it. There it goes. So I would say that this looks pretty similar, wouldn't you? We'll draw out the similarities. And we'll draw out, we'll bring up, what is it, AOI? Yeah, AOI next to it here. So AOI and ALAB. See the compression, the big expansion, then it smashes through the 9, smash through the 9 here. So a similar look for AOI would be a path like this. Comes down, comes back up, rejects the 9, the blue again, makes a new low, bear flags for a while, and starts pushing down. Something like that. Who's to say? Who's to say? But I would expect this bottom to hold for a while at the very least, this 85 kind of level. I wouldn't be getting in these names, though, is my biggest takeaway here. If you want to get into Photonics name, I would bet on the quality one. Don't shoot me. I think it's quality. Chart sure is telling me that people still like it, but at the same time, I don't think it's ready yet. Oh, goodness. What am I doing there? Still in draw mode. There we go. So this is what I'm hoping these names are doing, and it's not 100% sure for sure. But this is my thesis. I think it's a high and tight flag. And I think that it's going to need to make one new low maybe, but maybe it doesn't need to make the new low. Maybe this is enough. I think it's a flag. I know it looks sloppy. I know it looks kind of scary. And this isn't the best weekly close. Daily close, whatever. Either way. But I would say that if we do get, this would be my ideal path. You know, go off and do some crazy stuff. That'd be cool. But in general, I'd like to see one sweep down, kind of to the bottom of this flag, and then retest the top of the flag and these moving averages, then form a higher low, then kind of, you know, break on up and out of that flag. That's what I'd like to see. What you don't want to see is more of a head and shoulders type look. And that would be, I think that's not really a shoulder is the thing. Oh, won't it let me keep drawing? Stay in drawing mode. Do I have to click that? There we go. Roughly could be head and shoulder, rough neckline. If that broke down, it would probably end up revisiting this big range. Oops. So that wouldn't be super great. I don't think that's what's going to happen, though, to be honest. I think that it's going to carve out and then end up trying to push higher. If it doesn't, well, you know, then it's the leaders not following through, and that's probably a sign for the whole market as opposed to just a photonics thing. But hey, it could be, market could go up, photonic could be done. I wouldn't bet on it, though. I think that this is still a dip buy name. I'm looking to get in at 500, I think would be really nice. 500 to 530 is kind of where I'm looking. Something like that. Yeah, Adrian gets the playbook in at the 50. In at the 50. So the 50 is this white line. And that's what I'm kind of looking for. Because this looks not, here's the idea. You get in on the moving average if it seems like it's still got power. So for example, when it's sharply moving up like this, heck yeah, I'll tag in at the 9. Heck yeah, I'll tag in at the 9 all day long, right? Is that the same thing as tagging in at the 9 up here when it's flat and when it's curled down? No, it's not. Now it needs to reset. Just like down here, the time to get in wasn't here when it's flat and curling down a little bit. The time to get in is when it's curling up and you get in off the long. So we're not there yet. So you can accumulate a position for longer term, but you got to be able to do it off of a key level. So in this flag, it was off this rising 50, see, roughly. I would love to see that again here, rising 50. And that would be constructive, healthy price action that could keep going just higher and higher, you know? Just like this flag did way down here at 150, and then it ended up forming a new base up at double that. There's no reason why this thing couldn't flag out for 2 months and then, you know, find new fair value at 1,000 or whatever, you know? That's what price discovery is. It's discovering what the price is, you know? Like if it's a company you know and it doubles, you're like, "Oh my god, I can't believe it doubled. How did it double?" But it's like it's all pretty arbitrary, you know. To some extent or another, there can be a lot of a very good company can be priced much cheaper than it quote unquote should be due to perceived risk, whether it's management or geopolitical or otherwise. And you know, a company that has no business trading at what it does could continue to trade higher and higher and higher, like a Palantir, for example. You know, so expectations will change with price over time, and price action is what really matters. So as long as the price action is constructive, yeah, I'm sure there were people screaming that it was overvalued at 400. You know, doesn't seem like it. It was only 2 months ago. They were. I remember them. I remember them screaming about it being overvalued at 400. Yeah, well, guess what? You're wrong. So that's kind of my thoughts on light, as well as coherent, COHR, as well as SanDisk, Micron. I know they're slightly different, but they're all in the AI trade and the leaders of it. GLW, AOI, late to the game, but still in the same basket, I'd say. That's what I'm kind of saying. All right. Getting on down here. Sorry, guys. I know I'm late on the comments. I should really start reading them up from down. What I really need is a monitor on this side so I can see them a lot easier. Soon we'll upgrade. I should name my show Steve's Nightcap with charts. I like that. Yeah, just a little end of the week. Yeah, we can look at BTU there. Let's see, that was your coal play from last year, and you're still in the chart. Actually looks more than fine. Last time I checked, it was hanging out around 35, and it looked totally good to me. That looks beautiful. That looks really nice. Looks like something we should be buying more of, right? So all the moving averages, they're flattening out, right? So if they start to curl up, then we buy with that. I like this. So it's a nice cup, a nice handle, nice respectful flag going here. Whoops. Why am I fighting with this thing? All right, it's still in draw mode, I see. There we go. So this is a healthy flag. So remember we were talking about light and what we wanted to see it do? Light is like right here. Light is still deciding, hey, am I a double top? Am I a double top? Well, many double tops are just the start of a healthy progression. It's a failed bearish pattern that turns into a successful bull pattern. And is it even a fail? Is it even a fail if you played the double top? Did you get your move? You got your 1.6 move. It's not a fail. The pattern completed, and lo and behold, that's where we bottom out. Now we got a new pattern setting up. It's respectfully testing this top level here. Respectfully. Why do we draw it here? Well, we match 1, 2, 3 points really neatly, 4 points really neatly. That's what's important. So we in general, we're looking for as many neat taps on one of the sides, and that will draw our line from there, and the parallel level will also align with multiple spots. We can just adjust to see where it aligns with the most. And the point isn't to get it exactly to the penny. The point is just to roughly identify these zones. So it's kind of like buffer zones on either side of this line, especially to the inside. So you could even draw, I like to draw channels like this because this tells me more. See, when it's in this zone, it's going to reject until it flips. When it's in this zone, it's going to hold unless it doesn't. Flush out, but reclaim. Back to the races. Fail there. Failed here, failed here. If I just had this lower line, I'd get stopped out, or confused or something. If I just had this this upper line, for example, I'd get stopped out multiple times there. But waiting for a close below or a close above, and you're safe. So we got a close above. It retested moving averages. So it's kind of checking boxes, right? So that was a bullish test of that, but it didn't succeed in closing over this previous swing high. It did test it, though. So now it's coming back testing support in the middle of this internal range. So this is how a constructive flag plays out. When you have like light, it's still here. So it still probably needs to come down to the 50 like we're talking about. It might need to hang out there, flush out, go over, come back, form a higher low. And that's all while this is all digesting and these moving averages are continuing to flatten out. See, this 50 is flat here. So you might think, hey, it's ready to go. I buy it here. Well, these are still down. So every time it pops up into them, there's sell pressure. Now this pop is what reset the moving averages into an upward trajectory again. Even though they're coming down a little bit here, they kind of like, now it's a higher low. This was the bottom in the volume coming in. You see that high volume. All right, that's the anatomy of a little flag there. So now we keep on looking for entries off these moving averages as they curl up. I like the BTU chart. We can also look at some other coal while we're here. METC, I saw some flow on this name. This is also a rare earth metals play, if I recall. This one's been beat to heck, but it's at the bottom of a range. You can keep an eye on that, but BTU definitely looking better. BW is a coal, but really it's a, oh wow, they came back. Might be time to get into BW. This one's a really cool narrative play. They are an old coal plant, power plant company, like 150 years old. They have completely pivoted they had a nuclear division that they spun off. That was BWXT. You might have traded that last year. It was a massive mover in the uranium space. And they just got a contract to basically convert a bunch of old coal plants into nuclear plants. So this is a very interesting play. And there's one that I'll put on your radar as well that I'm starting to research. I do have a very small starter position. It's very speculative. And Ryleaf. Ticker's, yeah, Riley, I believe. I'm going to save this for next week because I want to make sure I have everything correct on this one. But basically, it's a holding company that holds 30% of BW. And I think they're undervalued. So anything else that we need to talk about? Adrian's in CCJ. I like that. Yeah, CCJ is not speculative. That one's a high quality mining name. Great way to play uranium. You can also play with URA, that's high quality, or URNM, and that's an ETF of the uranium miners. All good options. Don't buy SMR. Don't buy OKLO. Unless it looks really good, but I wouldn't. All right. Yeah, METC isn't great. Yeah, just doing nothing. Hey, Solzberg Cat, welcome. Yeah, let's take a look at RDW, and then it's your last chance, you guys, to get some tickers in. And I'm gonna wrap it up. Yeah, we went over an hour. We hit there. RDW, I'm still in a small position of this. I trimmed a lot as it was going up. We got in at 750 average in this consolidation. Trimmed when it swept this, so 1180. Trimmed at, I forget if it was 14 or 15. I think it didn't quite get to our 15 target, and I just sold some more somewhere here. Probably realistically a little lower. I think it was probably back here, honestly. Regardless, I have a little bit left from down here. Yeah, and it almost went break even. I didn't add. I wish I did. It's back up. And it's consolidating nicely, and we're starting to get the lift. So now we can watch this one for next week for sure. See the pinching of the moving averages, the curling, the flipping of the 9 over the 21, over the 50. A lot of consolidation too. And look, this We're looking for trigger bar now. We're looking for really low volume here and a really tight close. Another kind of similar chart, less strong, but similar. ONDS starting to get really, really tight. Stay at decently low volume. They keep trying to break it out each morning, it feels like, and it keeps getting batted back down to this moving average cluster. So, I mean, hey, we keep watching, we keep waiting. I think it's going to explode one of these days, but there's the possibility that it dies. There's a possibility that it just dies. It's basically at the apex of a very tight pennant. And they had some questionable stuff with their debt structure, from what I remember. Been a couple months now. It's getting pretty tight. Last time I did this, we took this trade and it worked very well, but it was not a comfortable trade as it was basing in the same area right here that it is now. This is actually looking a little bit tighter, but I just don't like this top wick and rejection. Last week's candle felt very bad, but this week was a nice reset here, and it could serve to form a higher low, like so. So we'll see. I hope it works. I'm in it, so we'll see. CEO is great, absolutely. Eric Brock, or yeah, Eric Brock. He was on CNBC recently. They have like 2 contracts every week. Yeah, absolutely. They're just grinding. Fly is interesting. Fly is interesting, and I have also gambled on it. I lost on my gamble, but it was just a weekly option based off of a potential what do you call it? Flight, rocket launch. I'm burning out, guys. All right, I gotta wrap it up here. There we go. It could be the bottom. It could be a double bottom. Very possible. We are watching the space theme. I'm in Rocket Lab. It's just playing games with me. Might end up being wrong. It's just a tight consolidation. The weekly candle wasn't great. Daily candle wasn't great, but it's not dying. It's just pinching. It's getting tight. We'll see. I don't know. They're trying to wear me out, but I'm not stopped out, so I'm hanging out. Yeah, Adrian has a starter at ONDS at 10 flat. I like that. I like 10. Yeah. You looking for an entry? I've been adding under 70, and I added into 70 last time because I thought it was starting to curl over and work. Seems like I was a little premature. It's just getting so tight, right? And now it's starting to look like, man, why can't it get over these moving averages? Every day it tries and fails. I don't like it. I don't like that. So I think it maybe needs to flush out and then go. But I think it's worth being in. I think it's a high quality space name. I mean, all of them are speculative and probably, you know, they're either worth 5 times as much or a zero. Probably. Who knows? Yeah, it's extremely tight. Absolutely. If it wasn't for the war, I think it probably would have gone. Yep. I saw you in here again, and I was like, this feels like an Adrian chart. This feels like a chart he would like. Anyways, we'll find out next week, or not. Probably not. Probably another week of torture between 71 and 68. But but hey, we'll figure it out eventually. All right, guys. I need some sleep, and I need to rejuvenate for next week because we are going to have more volatility. More volatility till we won't. So, we got to keep playing.
Oil wants 200, baby.
You ready to get back to the trading action?
You aim, you shoot, and make money.
It's going to be a great day. You guys know where you're at. What's going on, traders? How we doing? Good morning. Welcome back. It looks like we're in another fast market, meaning that the market's moving, and it's moving off of a truth headline. Yes, the good old Trump coming in here with some news, or maybe no news, or I don't know what it is, right? Because that's the fun part, right? You always got to figure it out with Trump, if this was actual real news or fake news. But it did move the markets. Markets ripping higher off of that at 7 a.m. We got that news. It went from 643 all the way up there to 666. And the SPY is pushing higher here. So we might have to make some positions in the pre-market if we want to catch this rally. But are we just going to see a shake right back to the downside? That's what a lot of traders are coming in and questioning for themselves, right? The war, of course, might have an off-ramp, as President Trump did stun markets on Sunday night by announcing that the U.S. and Iran had held very good and productive talks aimed at complete and total resolution of hostilities, as he ordered a 5-day pause on strikes against Iran power plants and energy infrastructure. Crude was cratering and futures were surging as the market had closed on Friday at its worst levels of 2026 in the wake of the biggest relief rally in weeks. The question now is this ceasefire, or is this just a head fake? You're seeing the market right now push higher, and I think we could start to climb here. So we're going to have to pay attention, because we might have to add some more positions, especially on my swing account. Don't want to miss this rally, right? But we are getting a rally in the Qs. We're getting a rally all around, guys. I think this is why it's important to take a look at this. Another thing is, will we see the complete takedown of some energy names? And we're seeing it right now. So the question is today that day where we continue this rally? Can it hold? I think one of the important ones we'll be watching NVDA, of course. Last week, it crapped. It crapped. That's the truth. It just didn't go anywhere, and it had the best day, week that it could make the move, and it couldn't. But now it could swing traders back to the upside. Everyone got out on Friday on the panic after NVIDIA with their conference went down on their conference. Well, now they're starting to come back. I think this is one name that we can look at potential trades today. We'll keep watch to see what happens in a name like NVIDIA, of course. It had to come down massively. Look how it popped on that move there. So we'll look to see what happens now as this is pulled back during the conference and can make a move back to the upside. Let's keep taking a look around the market today. Of course, Trump kind of back and forth around the weekend. At first, he was saying that he was giving him an ultimatum, right? That he would strike these kind of power plants and energy infrastructure. But then he came in just one day after that and then changed it up, right? So a little bit of a pivot from the ultimatum to a pause is definitely dramatic here. Markets are treating it as the first real de-escalation signal since the conflict began 4 weeks ago. We'll see what happens here as crude is cratering, and we'll see if this can continue being what writes off the script for oil. All right, of course, Iran's counter move, though, is targeting treasury buyers. Even as the diplomatic signals is getting a little brighter, Iran did say that it isn't backing down on all fronts, and Iran's parliament speaker warned on Monday that the U.S.-linked financial institutions holding American government bonds would start being targeted alongside military bases. This is an escalation threat aimed at the financial system rather than the battlefield. And the warning adds a wild card to the otherwise bullish tape. It underscores, though, that even a pause in the kinetic strikes doesn't eliminate geopolitical risk entirely. We'll see what happens there. Moving on as we keep going, of course, we can take a look to see what happens in the Sarah week. S&P 500 Global Sarah week kicks off today and runs through Friday. It's one of the most important annual gatherings of energy complex. This year's conference leads an extraordinary moment for 4 weeks in the Middle East war. that has sent Brent crude up to 100, disrupted LNG supply from Qatar, and reshaped the global energy map. Expect government officials and industry leaders to address the Iran conflict, the Strait of Hormuz security, and surging energy demand from AI data center infrastructure. Any off script comments on supply, pricing, or the diplomatic opportunity here with, of course, Iran and that outlook could move the markets in real time. Of course, the Sarah Week focuses on energy, so look for more energy comments to be coming. Pre-market movers. Let's take a look here. Let's go to some surging airlines this morning as we're seeing Delta Airlines and United Airlines make a little bit of a pop here. It was, of course, battered last week after surging on jet fuel costs, but Delta fell about 5.7%. United and American each dropped 6% over the worst spike in oil, but an 8% drop in WTI directly improves the fuel cost outlook and revives the travel demand. So we'll see what happens here as we're getting a quick reversal on these airlines, and now they're pushing to the upside. Market continuing to push to the upside here as the SPY looks to break right back into the 661 area. Will we get a climb here? And one thing I've mentioned, 10-point rallies, right? 10-point moves is what we've been seeing. We've already seen a move from 643 past the 653 and then past the 663. So we've already made a 20-point move there in the S&P 500. So that just tells us more and more we are rallying here. Now the question is, will the shorts be on the run? Anybody that was short into the weekend is definitely on the run right now. And the question is, will they hit that out in panic at the open? We're seeing that drive back come in here. We're almost back to 661. We could see some stocks really start to lift side, right? And I will be watching a name like Microsoft. I've been talking about how I've been wanting this name. I've been dip buying. We've been taking opportunities, chances. Now I think it's another chance to take an opportunity here. The question is, what price will I be able to get Microsoft on the pullback? We'll go to some playbook action right now, but these are just names that I'm bringing up. And I think this is a conversation that everyone needs to be talking with themselves right now, because Microsoft just made a move from 379 to 391. Right, that's a massive move, and now has pulled back towards 384, about 10 points away from the high. Of course, oil energy stocks moving. We'll keep a look at that. Defense stocks also under pressure. Lockheed Martin can show you that, guys, as we're starting to get a little bit more pullback in that defensive name, of course, with the war situation. If we look at the consumer discretionary area, the bid in the sector stands to benefit from the pullback in energy costs after squeezing households' budgets for week and lowering gas prices translate directly to more spending power. I don't know if this is will really kind of transition over. You're talking kind of your XLP, but you could see a little bit of some relief rally today. We'll see how long that can last. Cruise lines, of course, one of the worst ones last week. Of course, I talked about it, how I wanted to get short on Viking and how this one made sense going into Thursday and Friday. It was a beautiful move. It went down there from 71.50 all the way down there to like about 68. By the end of the day, it was right there. Now it's starting to bounce back. Cruise lines getting a big bounce back after, of course, the oil dip comes in. You can see it in CCL this morning up there now towards 2560s. RCL also getting lift this morning. We'll see how these names start to run, but we are getting that relief rally, and it's holding right now for the time being. Let's see what happens. Of course, this was off of a tweet that literally Iran came out minutes afterwards and said, what talks are we even talking about? Like, where did Trump get this? Well, that's just how the market is right now, guys. That just goes to show us that in this day and age, you would think that we would get news that would be truthful, but it's kind of funny. It's from a platform called Truth, but it's not the truth right here. Trump announcing productive Iran talks and pause and strike. So we'll see what happens here. Crude definitely getting crushed, and now we got to take a look to see what the next move is. The potential, of course, circuit breaker on the geopolitical spiral has driven crude above 100 and pushed Dow to 2026 lows, broken the S&P 500 below its 200-day moving average. A 5-day pause, though, gives the market some breathing room, but it's a window, not a resolution. And if talks stall here or the Strait of Hormuz remains to be contested, oil snapback could be right back to the upside. We'll see what happens. Trade the relief, but respect the risk. And 5 days goes by fast, doesn't it? All right, let's talk about some trade ideas. This is where we shift over and now bring you guys over to the playbook. Let's get to that action. Let's talk about some trades that are going on. All right, traders, let's talk about a little bit of some trade action this morning. We'll be taking a look to see what happens out there, but I got a couple ideas for you guys. What about a long on a TSM and KLAC? All right, some of the names that I'm looking at here. So let's take a look here. TSM Semiconductor. We're up there to 334, starting to recover, trying to get back there to the 340 level. I'll also take a look at a chart, KLAC. I really like this chart on the longer term. It has a really nice outlook on the daily. It did give us a nice little big volume bar also. I think this is important outlook as it starts to break above this trend line, hold the 1500 breakout, and could be making its way right back there to 1600 and 1680. We'll see what happens there. Definitely names to watch. Also would be a name like AMAT in the space, and it's already getting the big boost this morning. Stocks are just running away with the ideas, and that's what's going to be hard. By the time you get to the open, the idea might be done already. STX, a storage breakout. I've talked about computer systems and how they could see a lift. I was talking about this name last week. It got a nice lift into the move on Friday. We'll look to see if it can get another move back above the 437.50s. But this morning you were seeing WDC already getting the lift there. SNDK pushing strong. So I don't think these names are stopping anytime soon. And with that being mentioned, you could see Micron recover right back to the upside. And you guys are seeing that move right now. Another trade that could happen off of this is a long on APO, right? And looking to see what happens on that as we could see another lift come into play here, right? So I think these are all names that I could definitely see a move here. Now, the question is, what would happen, right? This is a sector that has been weak, but this is an area in asset management that could see some strength come back in with the market coming back. The breakout is above 115. It's already there. It's hit 114.95 just a second ago, and we could be going higher there in Apollo. We'll see what happens in asset managers and credit services for that mention in the financial space. There's always more trades for you guys. Like always, you guys can catch them on the Discord action if you guys want to see more. That's where you need to be. If you haven't joined the Discord already, you're missing out. We'll see what happens in the market. I think another thing to look at today is, of course, a TLT to see what's driving the boat there, see what can get back up, right? If the TLT starts to drive, that's another thing. As bonds have been pretty much going as equity's been going, and we'll look to see if we can get some actual lift today. Another big shift here is for the VIX. The VIX was up there in the morning at 38.27. I was thinking this was going to break out big. And this morning, with that news, with the tweet, this brings it from 37.50s right down back to 33 and below, and now going even further, right? So I think this is one of those where it's such a wicked spin that you're going to see a lot of traders trying to panic out at the open. We'll see what happens there. SPY continuing to climb there, almost back to 661. The question is the move on the day done? Did we see the high already for the day, or will we get back up there towards that spike? All questions to be had. And of course, we'll talk about the competition my screen right back. There it is. Boom. All right, guys. Sorry about that. A little emux cut out. We'll keep it going. We'll take a look to see what happens. But the market just lifting off here. Now NVIDIA up 4% and continuing to climb as traders are coming in with their buying shoes and they're buying the rip. Question is, do we go after it also? I think that, we're a little late, but there's nothing wrong with trying to take a shot here. I think AMD is one name I'm looking at, maybe dip buying on the longer term. I really love the outlook off of the 200. So I think right now what we need to be thinking about is monthly charts, right? Not necessarily daily charts. Monthly charts are going to really help us. I'll show you how. On AMD chart, you can start to take a look there as you're going back through this 206. You can either use a weekly or a monthly, whatever you want to do, but you want to be kind of looking at longer term supports. Did you just undercut a support that you can rally out of? And I feel like that's exactly what I'm seeing there on AMD and others. So I will be looking at ASML, names like that, looking for the drive right back to the upside. Right. You could even look at, like, let's say some metals and minerals as that starts to bounce, right? 5440s for FCX because it's copper outlook. Alcoa had a huge reversal last week, right back at the support, right? Are we just going to see a lift right back on this name? We'll see what happens. Also taking a look to see what happens in the agricultural space. Definitely seeing some pullback there in CF. And then we'll be watching to see if we get some other action. Will we see gold actually lift with this mention? I don't know. I mean, it's something to think about. Gold has been coming down significantly overnight, and look at the rally that is driving back right now. So a lot of trades to be had, and you got to keep your head on the swivel, especially when we're at the realms of course, Trump. Shao, what's going on out there? It's good to see you guys out there. And who else is in the house? Larry, howdy. Jerry, what's going on out there? Discount code Jerry. We'll get the discount. We'll get the Discord right back up here. There you guys see the link there in the chat. You guys could click that, get over to the Discord. You don't want to miss out. All right, let's keep going. We'll see what else is out there. And just catching up within the chat. Steph, URGO. Let's take a look really quickly at a penny stock here brought by Steph, URGO. All right, just give me 1 second as I pull up the competition here. I just want to see if I have an update here for you guys to keep moving forward in our competition. Just trying to grab the link here for me. Give me 1 second here. There it is. All right, here you go, guys. Let's pull up the link here. Let's see what's going on. Let's see where we're at in the competition, and then we'll take a look at that UGrow. Let's just go first to UGrow here because I don't even think I have it. UGrow, there you go. UGrow up there to $4 has been making a nice little run. Just pulling back now back towards the 350s. We'll look to see. This has done a 1, 2, 3. Now it's in that correction mode. I'd like to see it come back towards like 320s and then start working its way back. We'll see what happens there on UGrow. Let's go to the competition. Let's talk a little market madness as, of course, we've kicked off the competition. I hope you guys have been enjoying it as we'll take a look to see who continues on, right? The opening round is now determined down now to the Elite Six. Yes, I've made it through. We got there, baby. We made it. Mitch is now going against the man, the myth, the legend. Why am I going against Kevin? That wasn't the original bracket. Who changed this bracket? Oh, we're gonna have some fighting words. I don't know who changed the bracket, but we're gonna have to talk because I wasn't supposed to go against Kevin until the championship, but I don't know how that one worked out. We will see what happened there, but looks like I am now going against the man, the myth, the legend, the rug pullers, Kevin, that completely annihilated in the opening round and just absolutely killed the man, the myth, the legend, the bot, Michael Noss. Down $58,000 and Kevin up $167,000. Too bad this isn't real money because I know Kevin would probably give Michael that 58,000 and take the 100. But that's just life, guys. We'll keep it going. We'll see what happens. I was in the competition of the best losers. Best losers being who could win, right? I love how they put me in green. They make me feel better here. I was down about 15K. Josh finishing down about 32K, but that puts me in the lead, right? Just as being the best loser and continuing to move forward. There was some other, of course, notable names. Chris H with 179,000, just absolutely killing it. Actually taking first place away from Kevin there right at the end. Tony B, really good outlook there. My man killed it. 111,000. Valerie at 135, and then Airplane Jane and the other battle of the best loser, as Airplane Jane only losing 2,900 versus Steve's 52K. So definitely some good action there. Now, as we get over to the Elite Eight, you'll be seeing us open the positions. It's just going to be the same tickers, just might be different sizing and allocations and maybe going short. But with the way this market's ripping right now, I don't know if anyone's going to have the, how can I say this in a nice way, the to go after a short here. But we'll see what happens as, of course, Tony B and Airplane Jane moving on against Chris H. Well, you guys will see us kind of kicking things off towards the open. We'll talk a little bit more about this as we get to the open and continue. Did you pick the right coach? Let us know in the chat. Is your coach still alive? Are you guys still in the battle? Let us know in the chat. I'd love to hear how you guys are going. Or maybe you picked your own top 5. Let us know, guys. It's good to see you guys. All right, let's go ahead. Let's bring on our traders here. First up, we got Michael Noss in the house. We bring him on. Let's go ahead. How we doing, Michael?
Doing amazing. Look at this, right? As I was sweating a little bit this morning as someone who bought a bunch on Friday. We can talk about why a little bit later.
Honestly, you got lucky, man. You got lucky here. Let's be honest. As lucky as can be with a fake tweet. A fake tweet, man.
Well, I'll show you guys why. Right, everything's systems based, but just looking here, if you just run a simple test, it's when the market's down 4 weeks in a row, you got like a 65% chance up the next week. Right?
Well,
better than 50-50. So
the quarter landed on your side. Let's just say that much, man. It was a little bit hard to guess.
Right?
I mean, 64-50. There ain't too much different there. But,
well, the difference between an amazing, awesome super trading plan that will make you millions of dollars of your career and breaking even, right? A 60% win rate versus a 50, right? Give me a 1-to-1 with a pretty sustained 60-65% win rate over the long run. You'll make a ton of money, right?
There you go.
Right?
Take the edge. Take the edge there. There was some edge there. You took the edge and got rewarded, my friend. As, of course, Trump came in with the fake C's because he was talking to no one. I think he was talking to the mirror. But
yeah, so I was reading a bit about it, and again, it's funny. I'm like when I'm reading about this, I'm certainly not trading off it. I'm reading about it like same reason people watch like what is it, Real Housewives or whatever the latest drama show is, because he's saying that he was, I guess, on Fox Business this morning after Iran. So he tweeted out, we're having chats. Iran tweeted out, no, we're not. And he was back on. He was saying, I can give you guys some of the transcripts of our chat last night. So it'll be interesting. I hope that he keeps going. He ends up like bringing receipts and dropping them off.
It's ridiculous. Iran came out like 20 minutes after, and we're like, what are you talking about, dude?
Yeah, so then he came back out on Fox Business and says, "Listen, I can give you the phone calls if you guys really want."
Do you really think there was a phone call?
Hilarious.
Do you think there was a phone call?
I don't know.
Let's be honest.
I let's show it. It's like it's like a drama of like two celebrities breaking up.
This is
like
telling me that there's a new China deal. There's been a China deal about 60 times. We still have yet to see a China deal. At some point, I think
I love about this.
Go ahead.
Well, the thing I love about it from a technical point of view is I saw so many technicians saying, "Well, we broke and we closed below support. Time to short." It's like you're shorting after we're down 4 weeks in a row. That's when you're shorting, and then people will look at it and say, "Well, I'm not going to buy when the market's up 4 weeks in a row." That's chasing. Like,
Yeah.
what's the difference, right? So if you're not going to buy when you're up 4 weeks in a row, why would you short when we're down 4 weeks in a row? So I just look at it and go, if you're, people will be totally fine avoiding chasing to the upside, and then all of a sudden, because things look bad, they're right. They're totally cool with chasing to the short side, knowing that in my opinion is way more dangerous than doing the other side, right?
Yeah, it's how it goes. Let's go ahead. Let's bring on Airplane Jane and talk about what's going on with her, and we'll take a look into the market and see what's going on here. As of course, we are on the downside here. How you doing, Jane?
I'm good, thank you. Can you guys hear me okay? I'm on a remote setup, so just want to make sure that you all can hear me okay.
All good.
Yes, I think that this week we've got a lot. I'm still seeing red on the inverse indicators. I am still seeing red across the board. They have not flipped their position just yet on the indexes, so I am still short biased. I see
So question
Monday,
about that.
Tuesday as a bounce to sell into, potentially going forward. The Strait of Hormuz is on the horizon with, are they going to shut it down, ripping oil up, and they're threatening to cut those cables. Are they going to cut off the internet, and what's going to happen to your positions if you can't get to your broker, except for by phone?
Well, so I don't. Does our
That
internet
would
get
be
routed
epic.
through the Middle East?
So you
Does
might
that?
want stops on long-term positions.
But
That would be epic.
does it? Like, does our internet need the cables in the Middle East, or would that just be for that region? Like, I
If
Well, where are the
legitimately
Iran had the
servers? More
all ask
importantly, where are the
complexity.
servers for the companies that you use?
if,
Where are they
if
housed? Because you could have a U.S. company and their servers are
New
in Poland.
Jersey,
if
yeah,
Iran
mostly New
took
Jersey.
down the internet, that would
They
be
did
the
it
most
with the
epic.
Red Sea, remember?
Yeah, I'm with you on it, Jane. If they're able to accomplish that, that would wreck the markets, I think. Absolutely, completely tear it. I don't think the odds of that are too high, but I do think that they could shut down the strait here in kind of a battle, right? That's the battle that I think that continues moving forward here. I think the only thing that moves a little bit closer towards the finish line is more and more how this is now more on negotiations. I think that everyone needs to just continue thinking this is negotiations that matter now moving forward, right? Of course, you're going to get some more updates about what's going on in the strait. The truth is, nothing's going to change from there in the short term, but oil is starting to cut down, and just that mentality will start to weigh in on investments today. That's why we're seeing a little bit of that drive up. Of course, this is not just only the Trump tweet, it's more the oil reaction. Oil prices not lying, right? In that case, right? That's actual price action that we're getting from that, right? So now we kind of have to drive from that price action to see where we're going. My biggest question for the technical analyst out there and the CMT here is, I don't know how big he's on it, but how do you feel about stage analysis? And are we moving into a stage 4 kind of markdown territory in the negative side of the mentality here as we're seeing the market start to break? Or would you see ourselves in a stage 4, or do you see us in a stage 2, like breakout mentality? What do you see?
So, so first of all, just for the cable cut thing, I just asked Perplexity while you guys were talking. So I did Interactive Brokers and TD. If there's anyone else you want me to look at, let me know. It says most major companies have co-located servers across the world. Interactive Brokers has 6 main data centers in the US and 1 in Europe. So we'll be fine who trade through Interactive Brokers. TD Ameritrade's the same way. I checked the exchanges. All those are located only in the US by law. They're not allowed to have, makes sense. You don't want the New York Stock Exchange servers to exist in Iran, or right, you want them to exist in the US somewhere that can be tapped. So if you're dealing with a company that is either small enough that they only have 1 server located over there, or the country is their base there, then it might be a problem. But yeah, and a lot of those. So just again, love AI, so we can just look at these things. But so stage analysis. So the problem with stage analysis, it's like a lot of things where it's only good after the fact.
Can you put up my
So
screen,
you
please?
only know. Oh yeah, that's a great chart. If you want to bring up Mitch's chart there, because it's a good. So Stan Weinstein, again, a goat. He's one of the greatest investors out there, still kicking, still living today. And he came up with this basic idea of the market moving in these 4 stages. Right, you have an accumulation stage that's at what we talk about all the time. That I love, these low bases in which the stock or whatever you're trading gets down to a level where value investors say, hey, it's a good buy here. And that creates these low bases. And then at some point, there's some sort of change in fundamentals or whatever, and the thing starts an uptrend. That's your phase 2. Then phase 3 is some sort of distribution phase, and then it goes down. Problem with this is it assumes that the market is secular in some way. It's not, right? You zoom out on the S&P 500 for any length of time. Just because something goes up doesn't mean it needs to go down. It's just not ever been that case. As long as companies make more money, the market drifts higher over time. And you see that every bear market, every prolonged bear market was having to do with companies making less money in some respect. So I like it, but the problem is, especially with this phase 3, which is what Mitch is talking about, if you go to my chart, you don't know whether or not that this is a phase 3 or a phase 1 until it either breaks down substantially and starts a downtrend, which we're certainly not in. We're right here. We're up here at some point, right? So we're up above this support. So you probably wouldn't know until you're into like the 620s or something before you'd actually see some sort of prolonged downtrend, or you don't know if this is just another phase 1, which is another accumulation type of phase, right? And same with, I saw someone talking about Wyckoff, and Wyckoff is great, but the question is now, is this a Wyckoff distribution? Or if this bounce holds, I could show you the schematic that this could be a Wyckoff accumulation, right? So, like with a lot of, like with every pattern, you don't know it's a bull flag till a bull flag breaks out. It's one of those things that I just think you need more time, and you need to look at the pattern more in hindsight than use it as like a current trading indicator.
All right. I like the perspective there, of course, given multiple. I think one of the things that we need to keep in mind, right? It doesn't mean that it's right, doesn't mean it's wrong, but it's something to look into. What I love about it is that it includes more of a psychological outlook into things, right? Not just the price action, but also to look at the psychology of things. And I think that we need to be thinking, are we in a time where it was led by extreme retail enthusiasm met by hidden institutional selling? That stage 3, and then leading into stage 4, where it's fear, denial, and forced liquidation and capital destruction. Have we
But you
seen
could
that already?
But you
Right?
could also say that in the tariff tantrum blow, right? Because remember, we saw
Yeah.
retail accumulating crazy down
Right
here, and then we had
before.
the institutions being short. And that was before like an epic bull market where the institutions were short the big guys
Well,
were
I don't think
short the entire
retail.
time.
I don't
I,
think
I
the
want to give my
retail.
perspective on where that big money is.
Okay.
I
Sure.
Yeah.
was
Jump in.
bullish back on the tariff tantrum. Now, when we have 2 years worth of big volume up here, I
Mhm.
cannot go long when I see that there's 2 years worth of volume up above us. To me, that
Yeah.
is just saying, like, hey, I'm going to go jump off a cliff. And I know that it's going to be okay because there's an airbag, and it's always an airbag. And okay, but how long is it going to drop before we see the reversal? Right now, I see that the momentum is to the downside. The bigger money is selling. And until they get below us, I'm not going to go long because I can't fight the billionaires. Can't do it. So
We'll see what
I'm going
holds
short
here.
buys this week, 100%. Except for Bitto long because I feel like they're going to rotate into Bitcoin.
We'll take a look at that. Another thing that I've been thinking about is more and more kind of the 2 or 3 year rally, right? If you think about that, right? We've had pretty much a bull market, I would say, since 2020. I don't think that little tariff tantrum can actually be called a bear market there. So if we include, of course, the rally from like kind of 2023 until now for a lot of stocks, that's a huge run. That to me is your stage 2 run. And
And
now
it
Yeah.
looks
would be kind of more your
But
stage 3. right?
It's
problem
looking
is
to
then
me like
you're
2020.
assuming.
The pattern of the larger money is looking like 2020 to me. So when I see the patterns of the big money movement, I cannot fight it.
And
So
understandable.
just two things quick. So Jane, how do you parse the I know what you're talking about with the volume above, because there's a lot of price action above, so there's a lot of volume above every time.
Right.
With the fact that large institutions are net short S&P 500 contracts and have been shorting like this entire time. Like, so I know you look at the equity side of things, but could it be that the equity side of things are a hedge for the future side of things? Because like this is one of those things that's like an inescapable objective. Like if you trade with a broker, they give this data to the CTFC. So we know 100% the large institution, the large speculators are net short the market. So they're betting against it. So you're looking at that and you're saying you're going with them. Because it's funny, because I just think it's always hilarious, because I just do the exact opposite. So I guess that's what makes a market, because I just look at it and say every time these guys get short, man, I want to buy stocks, right? So this was 2020, this was 2022, 2023. They're all short as heck. This was the tariff tantrum. They shorted in through there. So I'm looking at them as short and saying, well, what if they're wrong? Doesn't that create like rocket fuel to just surge us higher? Because they
It
got
could create
really
rocket fuel,
short
but when
last
you look
couple
at
of
the
weeks.
retail traders, we make up 8% of the market. If that bigger money is adding and adding and adding to the short side, because it's the winning direction for them, until the way that I have my volume point of control set up is that when that bigger money moves, I see it go from up here down here. And as long as it's staying up here, I cannot go long. I will get burned.
Yeah, I just look at it as that, these guys fight each other. These large money guys are not friends, right? They're battling each other at all times. So that's why I think that when institutions see that institutions are hugely net short, just takes one guy with a big bat to come in and say, right, I'm going to pitch this up and you guys are going to have to come chase because you're short, right? And if you are losing money, like Citadel, I've heard capital calls for Citadel rumors on the street where people are saying, man, if you guys lose for another year, if you guys can't beat inflation for one more year, I'm going to take my money. I'm going to go with Joe Blow down the road. So I always just wonder that is that because these large money guys hate each other, right? And they're always at each other's throats all day long trying to steal. It's like a den of thieves kind of thing, right? If you have a client, that means you're making money. Well, I want to steal your client, so I'm going to do whatever I can to sabotage you in whatever way, or if I see that you're positioned and you're kind of hurt, I'm going to lean on that position the best I can. Just at these extreme levels of, being long or short, I just wonder if there's someone out there with the opportunity to kind of smash things the other side, especially, right, when the president of the United States is trying to push markets up. At what point do these institutions that hate these guys that are net short just, lean on them and say, well, let's make you cover?
I also look at the bigger overall macro view, right? Right now, the US is the leader with the US dollar, right? Everybody looks like we've talked about with the DXY, it's 70% of it. So what happens in the US is going to happen around the world. So when the US doesn't have funding, and they're constantly trying to go back and to reissue bills to fund the government. And then you start to see that we are run on derivatives. And these derivatives, when we start to get big money, like Citadel getting capital calls, we saw that the silver run created some margin calls and they started selling with the silver. If you look at the coordination of the silver top as the top of the market, they started liquidating because they were getting calls. They were getting capital calls because the bigger banks were also shorting silver, where there's no denying that silver was manipulated. We've seen that announcement come out. And we saw the price action. You can see the disparity between the Shanghai spot price, where they say there's no more calendar spread basically to hedge. You can just trade long or short in the short term. And that has created a premium difference where the price of silver is decoupled around the world. So looking at this and saying, All right, we are starting to get calls. It's a snowball effect, like March of 2020. When we saw that these capital markets were getting called because of margin calls, it created a snowball effect into March 17th, which was pretty much close to the bottom, where we actually had our first circuit breaker stop since 2001. September 11th. So seeing that we are having all of that big money above, very similar pattern, noting the pattern of the big money. If I see that it flips and we start to get massive buys, okay, no problem, but I'm not seeing it. And I can only go with what I've seen following that really big money for the past 9-10 years, that you don't fight it when it's up above.
Well, I
So
will
what's
bring in.
the? I was just gonna say, what's the invalidation point, right? So at what point, like, what's your level right now to say, yeah, maybe this rally does have legs. Maybe I should go with the old POTUS. Like, what's the level sitting at now?
Right now, let me go to the SPY over here. Hold on, I'm on a 5-minute chart. Let me come back.
Because that's the beauty, and everyone should be listening to what Jane's saying, right? Whether, you have to have a system like that. It doesn't matter what the system is, right? As long as you've got the game plan and you got the point where you say, all right,
682.76. So that's a long way up above.
Smokes, yeah.
And until I see that bigger money comes in below, and hey, if the big money comes in at 628 and I start seeing accumulation right there and I start seeing bigger volume coming in, all right. But until we get above 682.76 or 682.76, until we get above that, or I see the money flip back down below, I'm not willing to say I'm going to go against the billionaires selling at the top. The big money will come in. We will see it. But for now, everything is above. Everything is above for the year. Everything is above for how long now? For about 9 months. We're starting to see if NVIDIA breaks that 182 level for the Qs, that's when we're going to really see boom. Down go the Qs, down go the S&P 500. RSP is below the 198.96 level. That's where we are for the past 2 years as well. So until we can reclaim that, why would I want to go long if I see the big money selling?
That's good. It's very trend follower approach, right? Because if you're buying way up there, it's in tackle like this, it's kind of very turtle trader-esque. You're waiting for, instead of trying to pick any sort of low or having a plan to do any kind of mean reverting, you're just saying, let the market look like it's going to break out and I'll buy it kind of when it hits that level, right? And we know in the long run, it can be frustrating, but we know trend following works. It's like the only thing that's been studied over like 100 years of trading. Eventually, if you're just buying the market when it goes up, you have a plan to sell it at some point when it stops going up. Eventually, you end up making money. In choppy markets, you can get a little frustrated, but there's no system in which it won't frustrate you in some sort of market, right? So, good question. Someone asking if I can change my coach for this week.
I got to get my orders set up. We got orders going in 6 minutes. So I'm going to step off a little bit and just get that set up. If you guys want to chat, that'd be awesome. And then I will deal with getting myself logged in over here.
Can they change their coach, Mitch? Or if you picked me, you're just done.
You're just done. You're just done. You just got wiped out. That's how.
Sorry, guys.
That's how the other tournament works, right? Your team loses, you're out. Well, you picked the wrong coach. That's all I can tell you guys, my friends.
Well, hey, you could talk a little smack from the side. Yeah, that's what we get.
Again, of course, our other trader here with us, another big
bad winner. What's going on, my friend? How we doing?
Hey, good morning, man. How you doing this morning? My name Mitch and Michael Nas.
What's going on?
And Jane, Airplane Jane.
How you doing?
I feel like I'm the loser hanging out here with all the winners. Just
pretty much that's what it is, dude.
Like
Don't
the
worry,
little brother that just got taken along.
We'll let you come to the party, right?
Oh, you can't hear me? Can you
Oh, we
guys hear
got
me?
you.
We can
We
hear
got
Yeah, we
you. We
you.
got
got
you.
you, my friend.
Good. I don't know if you guys can see me, but I
Yeah.
don't have enough screens
Yeah.
here.
Hey man,
Yeah, we got you, my
Jane
friend.
was
How we doing?
we're doing very well. Jane was speaking some science, man. Michael Noss is right. People should listen to what she's saying because she's definitely on point with what she's talking about, especially with this geopolitical uncertainty that's going on. It's affecting the techs. It's affecting the big sevens, the ones that we like to play. And everybody is selling and running the rotation to safety. You know, they go into consumer staples and energy right now. So even though we see this pop, I put in the chat over discourse that today's trading word of today is range. So we just gonna have to look for that range, find that range. Me and Money Mitch talked about this the other day. How Trump pulling on the strings right now, and it's what you say, Mitch. You buy the pop and fade the drop, fade.
Yeah.
Buy it. You buy
Sell
it
the
when it
rip.
goes up, and
Sell
you
the rip. Buy the
sell the
dips.
rip. There you, there
It's
you
the
go.
only way to
Ju-
play right
Just
now, man. It's quick too. It's fast.
just so happened, this particular dip was bigger. That's all.
Yeah, that's it. That's it. And we have to adjust, right? In different type of markets adjust, right? It's not just the kind of the swing and hold strategies that were working last year, right? Those were the strategies that were working, and strategies adjust, markets adjust, current environments change, right? And just like we're on a whim of one tweet right now and one Truth Social, well, that's just how the markets work, guys.
And
You can get
it's
mad about it, or you can adapt, right?
and it's 100% right, and it's easy to say, but in the moment, right? It's no one faults you for not, like, I'm very happy that I bought the dip, but no one faults you for not being able to pull the trigger when the time comes, because it's kind of like I always say that fundamental data always looks best at the top and worse at the bottom. Just how
Oh yeah.
and every time it has to work like that. So it's like the dip. There's always going to be a reason for the dip. If the market's down, there's always a reason the market's down, and it's always going to seem bad and ugly and awful. And that's why I always say, if you're going to do it, you just have a plan and it will, because you got to have the confidence. You got to be able to, and it's never going to be, hey, the market's dipping, but everything's sunshine roses and no one knows why the market's dipping. There's always a reason behind it. Something looks ugly. And then same selling the rip, it's the same thing. Like, if I'll be selling a little bit of anything I took discretionarily into the open this morning, just little bits of it, but you got to fight the same demon on the other side, where when the market's ripping, it's going to be because everything looks great again. And so to go contrary to those things, you just have a plan going in, because it is not as
That was
easy
going to
as
be
it
my
sounds.
question, is if you're going to sell and potentially set up stops for the other positions if you were to have the wrong premise and you were to be wrong.
Yeah,
Lock
so
the
no,
profit.
it's definitely, I bought because there was a 60% chance we were up this week. If I'm getting like this massive, the IWM's up like 3% right now, or was at one point this morning. I'm looking at that as a little bit of a gift. I'm not going to sell it all, but I'm going to take some profits. And then same thing, if we end up dipping this week, I'll buy more on the way down, and then when we get a rip, I'll sell more on the way up. But yeah, you have to do, and for me, being such a greedy dude that I am, that is even harder for me. It's easy for me to buy when things are ugly, because I just know 75% of the time the market's going to go up every year. It's just the nature, right? If you believe in capitalism, you should believe the market goes up, and if not, go do communism stuff. But when things are looking rosy, it's hard for me to like really rip. So I actually set in my broker a lot of what's called market on open orders. So I'll get the opening auction on a handful of stocks out there, and that's just kind of, so I don't have to actually go in and hit the button, because I'm worried I'll be too greedy and I won't hit the button when the time comes. But yeah, you got to take some of those profits. You don't have to take them all, but put some money
From
in your
yourself.
pocket if
That's what I do.
Yeah,
yeah,
especially when you get what I call the gift overnight, right? And
Pay yourself.
that's what it is. It's a gift. You got the gift, you take it, right? And that's what it's all about here.
Almost open. Everybody have their orders in?
Not in yet. I got to get them in.
Set up your market orders, Mitch. I know you want to wait until last minute till it's open.
Hey, that's the only way I know how to trade. I have
Wait,
1 minute.
We're open here.
Oh, I'm already in. Positions open.
Oh, that was your fault, Jane. I got 1 minute.
Yeah, no, it's good. I had my orders in.
All right, my Microsoft position's in. Let's go trading around. You guys will see me open up my
Did you see
path
the cover
position.
of Barron's?
I did
Let's
not yet.
I've
Is it
do.
more
got a
bear
view in
stuff?
right away. Right away.
You know it. I gotta take a look, but that's what I want to hear. Means I'm doing something right. All right, let's take NVAX now. That's one of the positions I do want to open up big. Let's do 10,000 there. All right, doing 10,000 of NVAX. Now I got to see how much I got left here for VST and AMD. But probably going to take like 300 of VST, and then from there just calculate what I got left here for AMD. And I'm only going long, baby. I'm only going long, baby. You should be proud of me, Michael.
Good. Stocks go up.
AMD, baby. Let's at least get 300 right now. How much do I got left?
I'm
176.
20% long.
So,
Vito. That's it.
you see, I'm missing out on some of this one because I'm taking a little while now. Let me do 200 now, or 150.
The oil might get me this week.
I still need a little bit more here of AMD. Still got 82,000. Let's just keep loading until we get to the right amount here. It looks like I'm gonna have some more AMD. Still got a little bit more AMD I can get. Yeah, let's keep adding AMD. Even though Microsoft seems like the one that's working. We can go add a little bit more Microsoft. Let's go add some more Microsoft here. 25 shares, something like that, 50 shares.
Yeah, so far muted open, right? And we got to understand, right? SPY or IWM up 2%, SPY up 1.5%. That could be it, right? That could be the day's range. So I'm paying close attention to right this low right here, and then this high right here, right? So you could just draw out this range and say, okay, kind of wake me up when one of these things break, because we had the move, right? So now the market might be kind of waiting for the whole will they, won't they?
SLB, that's a good name to look at. That's an oil name rebounding really fast here. I like SLB. If you like energy, right back to the upside, which is kind of what I'm betting on. It looks good there, SLB recovery. All right, trades are in. Now it's time to let it fly, baby. All right, looking for a quick pullback in path and then a recovery right back through the 12s. Tough market, baby. Let's get after it, though. Ooh, Microsoft takeoff, baby. That's what I wanted to see. Microsoft holding well here.
So that is the cover of Barron's.
Microsoft
is the cover of
Barron's. Oh, they did it to me, right? I've been trying to buy Microsoft for a while now. I might buy MSFU and risk down there about $1. Yeah, I like that.
Buying the FU.
Yeah, I like the FU, bro.
FU, man.
Whoever made that ticker, I want to give them a good bonus. All right, I'll take a little shot here of Microsoft. See if we just start getting a little bit of a takeoff. Already took a little bit there, just a tiny bit of MSFU in the swing account. So just going to try to give it a little bit of a tight trade here, see if it takes off.
Oil down 7%, RSP, your average stock, holding up fine, up like 1.2%. SPY up 1.2%. Hughes up 1.5%. So a little bit of performance in that large cap tech space. IWM, right? A little bit like, look at these like last hour or so into the market. A little bit of pullback here. So we'll see what happens if the market really gets going. Yeah, it feels like profit taking of like people like me.
Everybody had the same bout as you.
Let's pair a little off the table and see. Kind of feels like, you know, now that the big man's like, the market's gone down enough. I think we're probably, that's not the last of the taco tweets we're going to see over the next couple of days.
game path starting to take off. Market Madness
stock to try to beat Kevin. You know Kevin's out there shorting some big name, some small
Yeah, I was
name.
about to say,
That rug
where'd
puller
he
out
go?
there, dude. He didn't even come on. What a rug puller.
No, I'm like, where is everybody else?
What a rug puller, dude. He pulled the rug on us. That's how good he is.
I'm gonna see here if it's updated. Yeah, see what he's in. Let's spy on him.
Oh, spy on him. Spy on him. I don't think it's updated just yet, though.
Yeah, do you guys have the leaderboard? You guys can put in the stream.
Yeah, it's just gonna take a little while to see the update, so I'll let you know when we get an update so that we can bring it up.
Jeez, yeah. The only thing updated is the top pick is NVIDIA with 69 people picking.
Yeah, you and I didn't code that thing, Michael. So we'll get on it.
Some more stuff coming in.
We'll get some Claude code action on that soon enough.
Most shorted Tesla.
All right,
Tesla is down. That's a little bigger money too.
It's ripping now.
377. I think we're going to see. It's like last week. We were talking about it last week, where it was a lot of sell the rip, right? We saw that it was up in the mornings as the script has been shifted almost, and so looking at that, it seems like that's kind of what we're seeing now. SMCI. Did anybody have SMCI that they'd picked? Because that was a killer short.
Oh no, I did not have that one. Looking around right now.
That's a funny tale that I was reading about too. It's like the CEO quit his job and is just now straight smuggling like parts to China. Jeez. Yeah.
NVIDIA, right?
As soon as they became S&P 500 listed, that's why I mention that all the time. Is that everyone gets all hyped when their stock gets listed in the S&P 500, but if you go and you look at history, there's usually a nice lead up into the listing, and then like SMCI is the perfect example where it got listed. It got uplisted like
that's
right at the top.
LITE, VRT, and COHR. Today is the actual addition date into the S&P 500, and so those three names are the final push. Today I would anticipate potential sell-off of people that rode those coattails, and potentially a red on the day for the names. If not today, tomorrow.
IWM bouncing here, so back up over 2%. Qs have definitely been leading the charge right from the open. So
yeah,
a large cap tech for sure. It's been the day of.
Doing good, already up $5,000 at like 4,000 because of AMD that's down a little bit there. But Microsoft up 2,000, Path up 3,000 in the market madness already.
Very nice.
Yeah, so they were doing really well. Path was doing amazing last week, and it had me up a couple times over 30K. I think at one point I was up 40K, but that's how it goes with these large positions. When the market turns on you, if you don't get out, you get run over. And I think it's something to learn from in the competition, is that when you're in large positions, we're not talking about small ones, but positions that you built up and things like that, there's times when you need to get out and back in, right? I think that's the hardest things for a lot of traders to do, is to work really hard on your entries, build up a position, watch the position start to work, and then watch it come back on you, and then cut that size, right? A lot of traders struggle in those moments when they need to cut size, when they work so hard to get up to that size, right? And so I think it's a good learning lesson for all traders out there that you can't marry one position, right? Even if you have the highest conviction on, doesn't mean just hold it and bleed red, right? So it's an important thing to think about, right? And there's a reason why certain people in the market madness went down, let's say, big double digits, is because in a normal trading account, they probably would have cut those, right? But
exactly.
They just let
That's
it go.
What I find is the hardest. You can't lock the profit, and you can't cut the loss.
Percentage? Like, because I know I was probably one of the worst, and I was down less than, I think I was down like 5%.
I'm not sure.
It's funny. Mine lined up like pretty much exactly with market moves. Joe's talking about short in oil. It's interesting.
I shorted
Short
oil.
in oil, I don't think that's a call right here. I think
I shorted oil.
really...
I shorted XLE and XOM on the competition this week.
Oh, on the competition? But
On the
how
competition.
you trade?
That was my hardest
Hold
position.
on. You change your stocks?
No. I have
You had
XLE and XOM.
You had them from the beginning?
Yeah.
Oh, I didn't know you had XLE. I didn't know
Yeah.
that one. That's one that I missed. I knew you had XOM. I didn't know you had XLE.
Yeah.
Not a bad call. Not a bad call there at least. But we'll see what happens as it starts to come back. My biggest thing is that we're still in the attacking the tanker stage. We need to get around that. There was all this
Well,
talk.
that's going to be the
with
make it or
Trump.
break it for me. If
Yeah,
they open it, I'll scream higher. Leaderboard, rock.
Remember
There's
they were
also,
If they
Joe, remember
close
there's SEO for USO, right? You can also
Yeah.
do SEO, Joe, just if you want a little bit of juice on there. You can not that it's an asset that you need a whole lot of juice on right now, that it's in the news, but just so you know, it exists.
Yeah, it exists.
And I point this one out because I think there's a whole bunch of them, but this one's like super liquid right now. This is the one that I see everyone talking about as the, and yeah, I don't even want to know. Did he reshort Battle? That's the real question with Kev.
GEV ripping higher, guys. That's one name to keep an eye out for. Independent power producer, right back to the top of the highs. That tells me that you could see other independent power producers catch after the huge dips on Friday.
Yeah, if he reshorted Battle, that could be your ticket. Like, because that was down, nearly 50% last week. If he gets any kind of a bounce on that thing this week and he's shorted again, you're starting to get dangerous. That's a problem with Kevin being short everything all the time.
Oh, he shorted BATL again?
I don't know, but he's got to do something with it. Right?
He's better go long.
Remember, we got the minimum of 100,000, so he could go long.
You could shrink the
for
position.
a bounce week.
Shrink it. I would shrink it and go to one of the other ones, right?
But then are you? Oh, we got some insider. Can confirm Kevin shorted because that is a risky position to have now. It was down 50% last week. If it bounces at all, he could be blown right out of her. Like,
where's my eval? I'm going long in some BATL.
Because we even saw like intra-week, it was down to like $8-9 in a pre-market one time, and then it just ripped to $14 in in a pre-market. So yeah, if he kept the position as big as it was last time, because I think it was the thing that made him all the money, is this one trade. So that could be a thing that could blow him right out.
Hopefully.
Post my positions
at
in
least
the chat that we have going on.
The brackets that I had did not have me going against Kevin. I think someone did some finagling in the background because I saw the bracket the way it's posted. I was supposed to go against. I was supposed to go against Valerie from what the original brackets were, but somehow they shifted.
I was trying to find that bracket board.
Yeah, I found the bracket board. That's the image that I used, but I don't know. Somebody did some finagling back there. I don't know who wanted me to go against Kevin badly, but
the market is still young. It hasn't even been the first 15 minutes.
They wanted to give you guys some edge. Let's just say that much. But don't worry, I'll take care of Kevin. Kevin, I'll take you down. I'll take you down here instead of in the championship. Let's go.
All you need is one. We'll get new Trump on Iran. We have a meeting soon.
Higher.
We'll get on the phone today. Is what.
And we need Softy. We need him to say that he loves Softy.
Yeah. So that's why. Oh yeah, IWM is ripping right here off that news.
IWM.
So yeah, Trump says
you know what it is though, right? Is that
got a phone date.
Is that if we want the rate cuts to come in, we need the war to stop. Like, we need it to stop fast. So that's why you're seeing the IWM reaction, right? The IWM is really interest rate sensitive. This is helping that interest rate conversation, right?
Well,
Why
also
did the
looking at
IWM first breakout, right? When Michael and I first noted it, I think where we were looking at that was at the 240s when we first broke it. And then now we're right back into that area. You're getting a nice bounce in that area.
Also, when you look at the weak catalysts for the announcements, you only see, okay, we've got manufacturing oil prices, right? But that was a surplus last week. And unemployment claims on Thursday. So I think, again, Thursday is going to be that make it or break it day for us of the big price action that's going to really solidify the winners and the losers for this week's bracket.
Oh yeah, Trump's out there talking somewhere, so just FYI. So
yeah,
Trump
that's
talked to Iran's top respected leader.
Who is that? You can't even give me a name, dude. You got to give me the respected
yeah,
leader.
like what he just like called some dude in Iran. He's like, yeah, he's
the journalist, you know,
he's like, sure.
The journalist over there that called me, and I just said that I called him. You know?
Yeah. It's like the so yeah, Iran would like a deal. We would make like a deal too.
They
Iran
like a
needs better
deal. We
public.
like a deal. It's good for everyone. The war is done. It's over with. Forget cupcakes. We all are going to be great.
We were talking about this last week, right? Unless you were napping during the tariff tantrum, everyone knew this is how it would end. At some point, he goes, "All right, I won. Congratulations." Market ripped back up. Same. And he will create another problem like this.
Self-announcement of winning.
The same thing will happen where he'll go, "Oh, I won that too." And you know, we're joking, but if you go back and you take a look, I don't know if this chart will go back. No, it doesn't go back that far. So let's just go back a little further here with TrendSpider. But the reason we joke is because people forget we had a Trump admin before. This happened. All of this happened before. Like this whole
second year.
So this was where was it? 2018, 2019. I always remember 2019 because it was an awful Christmas because the market tanked like 20% in a straight line on Christmas. This was international conflicts. It was trade wars with China. It was him bullying the Fed chair on Twitter. Like all of this happened before, and you had this huge dump, and then all of a sudden everybody is happy and sunshine and roses again. And
on the 26th,
to the left.
On the 26th, right? And I have all of those buy prints I can show you.
Yeah, it's so he's done this before. And so every time if you get worried about, okay, what's he going to do this time? Just look back. Like it's not rocket science. He's going to do some crazy stuff, create a problem. The problem gets big enough, he just declares victory and says, I did it and I moved on. It was the same with the last China trade war in 2019. At some point he just goes, we got a great deal. And everyone was looking around saying, what? What deal? He goes, no, it's all great now. Move on. Now I'm going to go do something wild over here. As soon as I do something wild over here, you'll forget about what I did over there.
That's his CEO days, though, right? And let's just be honest. Yeah. That's where he learned that from. He learned it kind of like how Elon does it. You know, something really negative happens. Well, you first say that what are you talking about? It's all good. The factories are going great. The trucks are coming out faster than they ever have, right? And this is exactly who we have as president. So it gets to a point where it's just so hard for traders, though, to react on this, right? Because you don't know what's the truth or not. The only thing you can kind of go with is the price action if the market believes it or not, right? That's really what you have to kind of go off of. Because if it's your own thinking of should the market like this, should it not, that's not the truth of how the way the market's going to work. Right.
Well, that's
you're making a good point there, Mitch. Money, Mitch. It's not hard though. I mean, like you said, we have to play between the ranges and like
that's it.
Trading word of the day is range, and so we're looking for the range right now. And I'm paying close attention to Tesla.
Yeah, I like 30 minutes hourly ranges. What are you seeing there on the Tesla range?
That's my favorite.
I like 45 minutes. Sorry.
Yeah, I look at all ranges. I mean, I'm not biased to any range. I take a look at if you're talking about time frames. I mean, 5 minute, 15 minute. But paying attention to Tesla right now is headed towards 385. So I'm looking at the 385 area for a fade, right? 385.50 maybe. I'll take an initial fade, and then if it doesn't break through that 385.50, then I'll add coming back down. As we know, Tesla moves between $10 and $20 a day. It's went down about $30 in the last 3 or 4 days, so it's set for
I
a recovery, right? It's recovering right now, but based on that stuff that Jane was talking about, even though this will recover, it is a great time for the fade. So we plan in between the ranges. All we doing is creating a new range right here. So
Yep.
385.50. If I can get a short in there here soon near him, wait for the next 5 minute candle to come out and see what that looks like. But I'm looking to take a short here at 385.50 on Tesla.
I'd also
Love to
watch
hear.
the 387.50 zone. That might be where we have a little peak. Looking at the 161 exponential in the 45-minute.
Good point. That's why I'm only taking 20% in case it breaks through that, and then I'll add if it goes up. But 387 is the top. I don't know if it's going to make it there right now. I think it's going
Well,
to pull back at the 385 area and then go back and try to reach that 387.
a couple of the trades that I talked to you guys this morning starting to really kick off, guys. Basic materials leading the market here right out the gates there, up about 3.02% overall from the open, 2.3%. Industrial trade behind that. That was the trade that got hit the hardest with the oil trade, right? That's the industrial, your XLI, your CAT, your kind of GE, your Honeywell trade, that kind of action. We're seeing a little bit of a bounce in Deere, names like that, as you're starting to get engineering and construction names also higher. Those are your AI names like your FIX, and your PWR, your MTZ, or your Jacob Solution. Those are AI building names that are moving out there. But I am seeing strength overall across the board. There's not a single sector in the red from the open. That's the number one thing that I pay attention to. It's not overall percentage, right? Where energy's down overall, but from the open, it's actually up 0.81. This is a
I
very
know. It's killing
important
me.
outlook, right? Because from the open, it's actually done really well. And this is where I think a lot of traders will like come in and they'll look at their overall percentage. They're like, oh no, but energy's down. I can go shorting this. No, this actually has been ripping pretty fast to the upside.
Well,
So
what's
just
interesting is
go ahead.
XLE is ripping and then oil isn't, right? So oil is
Yeah.
actually down from the open. So it shows you that,
Oil
right?
stocks are
The
different
oil
than the
stocks. That's
connection
right.
with the
So it's going to
future,
be,
right?
take a look at the Oxy, you take a look at these guys, right? They're
I gave
doing,
you SLB right out the gates.
right?
Look at
Yeah.
SLB now. Look at that was a nice setup. I gave it to you right out the gates because I had this one already on an alert. Why? I was looking for names that had huge volume on Friday. That's a huge insight that I'll give you guys. There's not it's not in every chart, but there's some names that had massive closing imbalances towards Friday's close. What could that have been, right? You know how that works, right? I think that was positioning towards the close there on Friday. Michael took some positions. I was wondering if that was just all him across the board, but we know that wasn't him now, at least. So we'll see what happens out there. There's a bunch of names like that. The KLAC chart was another one like that. Look at that chart now. Talked about it this weekend, KLAC. Take a look at that chart now. Just taking off. Pretty chart. Put it this way, if I could have changed my positions for the market madness, KLAC and that SLB would have been in it.
We got nice rip here in IWM, pushing higher as oil, right, continuing to sell there. Someone's asking about healthcare. Not the best, but I guess you could say healthcare is probably like a defensive sector, so you probably don't expect it to rip that much. Most of it's XLK, so it's tech, right? Q's up almost 2% on the day, right? IWM up almost 3% on the day. All of them hitting new intraday highs. They still have a lot of pre-market kind of action to get through, but everything's ripping here through intraday highs. Question is, right, and this is what I talked about. I drew out this line in the morning and this in this one. So that's what, 666, the evil number, you could just say, if we get through that one. That's that high where it stopped when the news went out. So we'll just keep seeing. Again, I expect many more taco tweets from the fearless leader going, right?
Oh, yeah.
He said, I want to have as much oil in the system as possible. They called. I didn't call. This really is like a
I
So that
told
that
you.
goes
teenage
I
along with the
told
short
drama.
you.
premise. As much
I
oil in the
told
system
you.
as possible.
Yeah.
I
Well, and
told you.
that's
And
always been
the
Trump's
whole
thing, right? It's cheap
they
energy.
called.
They didn't. She called me. I didn't call her. That's how I
I
know she
told you
likes
that was
me.
the next one that was coming out. That's why I was like, who called who though? Like, let me know. I know how the journalists are. That's why I read so much journalist talk that I'm like, yeah, that's exactly the next question. There's also a
Yeah.
viral moment in March Madness where this coach was questioned like really quickly on the sideline in the middle of the game, and he was like, "I'm gonna fire my whole coaching staff," and then it turned out it was a joke. That's the life we live in right now, right? Where people take what you say way too literal, and sometimes when Trump says something, the market reacts literally to what he's saying, and then it's a whole nother meaning, right? It's we're trying to end, we're trying to start negotiations, and that's what he's really telling you. He's not telling you that negotiations are actually going on. I don't think anyone in their right mind believes that there's real negotiations going on right now. And that's the crazy part. I don't think anybody believes it. It's just more now he's saying that he is willing to do negotiations, which is a complete flip on what he said last week, right? Which was destruction and only destruction is what we're going to do. Well,
Money
that's not
Mitch,
the move anymore.
geopolitical uncertainty. So what I'm looking at right
To
now
its
is Tesla,
finest.
right? I'm looking at Tesla. There's a battle here. Tesla is known to have resistance here at this area of 382.50, right? Known to have that resistant area, 382.50. There's going to be a little small battle here, Normandy battle between the bears and the bulls, but it looks like the bulls is pulling it off because I was hoping that it would get up to 385. We still have some time for it to do that, but I think I'm going to take a small scalp here short right now because they cannot break that 382. And so I'm going to have to go ahead and join the team of the Bears and take me a nice little
The
short here.
Bears.
The Bears. We'll take a short here with the Bears. I'm rolling with the Bears right now, guys, on Tesla. I'm looking at TSLL as well, right? Because, that works the same. $13 is where it's sitting. 1302, 1305. Taking a short on that right there at 1302, 1305. Just a small short now. Then I'll add when she goes downward. But that's what we're paying attention to, man.
Amazon pushing, doing well, guys. So your mags trade is really starting to improve there. Getting some background noise there. Let me.
All right. While Mitch is playing. Oh, me too.
Is that on your end or my end?
That might be your end, Tony.
I tried to mute this thing; it wouldn't let me mute. But
All right. So, in the meantime, we had a leaderboard update. So let's take a quick look at it. Kevin down 8 large. We got Mitch up 4.
There we go. Starting it off right.
Chris down 1. Airplane Jane down 3.
It's that oil rebound. Maybe that's me.
Why don't you just mute for a second, see if it goes away there. Yeah, that was definitely you. Yeah, it's all better.
Wow. Wow. Oh no, but Tony left too. So
okay, could be either or, but
it could have been either
Tony, because I was hoping he's still around. I want to give him his
All right,
props.
how's it now? Do you hear it?
Oh, I think it was
that's
Tony.
way better now.
Okay, it was Tony. We'll blame Tony.
Well, I'm gonna head out. I gotta head back up to home base. So I will see y'all tomorrow morning. Have a great one.
Have a good one.
Have a good
Take
one.
off.
But yeah, we've got we've got 8,000 up for Tony. So good, right? Him and you, I think we're the only ones I saw positive off the morning. And down 8 for Kevin. So I wonder what Battle's doing. See, I think if he was thinking about it, he would have done what Jane said and just made Battle like the 100,000, like the minimum position. just because what are you going to do with this? You're going to short it after a 50% down week, or you're going to buy this junk penny stock that's probably going to go to zero at some point. It's it's a hard thing to do. Well, speaking of the devil, and who shows up there?
Oh, to jump in here for
just for hold up.
Money Mitch,
put me on the big screen.
Team Aura's going down.
Put me on the big screen because I'm ready to battle. Put me in full screen here because I got the hands up. I'm ready. You come over here, you little rug puller. Come over here. I'm gonna put you in a noogie. I'm gonna give you a noogie like we're on the playground. How we doing, my friend? It's good to see you.
Oh, likewise. Yeah, sticking with these same tickers is a little. We might have some rough waters. Those who voted for me ahead, and not the waters like the Strait of Hormuz. This is BATL, or maybe the waters. So I definitely wouldn't short this here. So I reduced the risk traders. The allocation went down from 60% to 40%.
That's what we figured. Yeah,
we are fairly
50 to 40. That's for this
60
thing
to 40.
60 to 40. Oh, I love that. Thank you, Kevin. Thank you.
Jeez, that's still nothing. I thought we were speculating when you were offline. Okay. We were saying I would have bet that you made this like your $100,000 position, right? You made it your tiny.
Yeah. Yeah. The 100,000. Yeah. Let me share it. Yeah. I mean, you're probably doing well you're very likely in the lead, Money Mitch. We'll see what the leaderboard's saying.
I got some names. I think I can make some money on.
Here we are. Oh, Battle's in the green right now. But again, this is so just dependent on whatever Trump tweets like this morning. You don't know with BATL, especially in that sector. And then, but yeah, 35,000 shares BATL. So we'll see. Again, feast or famine. Wish I could have changed the tickers, but hey, we'll stick with it. We'll ride it out. A win's going to be a win. Team Aura's going down.
Yeah, I would have bet. I would have said, listen, I bet you he punked out of Battle like as much as he could, right? Just brought it down to like a really tiny, the tiniest position that you're allowed to by the rules, and then went and did something else because we were saying like, what do you do with this thing? It dropped 50% last week. Do you want to short it here? Like that's rough. Well, and it's also junk company. Do you want to buy it here?
Right. Well, here's the thing. You're right in that it's down 50%, but if you zoom out, it's still up like 500%. That's the funny thing about it. And again, like they did dilute at like $5, so we still have some room down. But the time frame is everything. Sizing, the things I focus on, sizing and time frame. Yes, I mean, well, we got a week, traders. We got a week, so all we can do is cross our fingers and put our hands together and pray. Because
and that's what makes it fun, right? Like I saw some people getting kind of cranky about it, but it's like it's for the memes. Like that's why you're doing it. No, we're not saying that. Hey, you got to pick your stocks like 6 weeks in advance and just trade the same stocks come hell or high water.
In one sense, I'm very lucky that Battle isn't back down to $3 because if I, maybe I play a dead cat bounce at that point and just scoop it up. But hey, Joe did such a great job. I mean, I was in tears reading his posts that you guys probably saw in the Discord, but the one NOS with yours as far as a calculator somewhere just threw itself off a desk.
They were funny, and that's why I love this stuff too. Like we did one like live trading competition with the parent company at the Fivers where we were talking smack to those guys, and it's fun, right? That's why we're doing it. We're having it's having a great time, just picking stuff and enjoying life, right?
Yeah, I agree completely. It's just, I mean, this is what it is, traders, and we will reform it. I'm sure how these work, but this was the first go round we've done, and I'd say it's been a huge success. I think Carlo's done a great job in the background too, running this. I know it's not necessarily easy, setting these things up. So I mean, it's been a great first time here doing this.
Well, yeah, and even someone that got horribly smoked, right? I still had fun because that's what it's for. You're just playing around, right?
Yeah.
Having a good time.
Speaking
Oil.
of playing around, AMA is doing that, traders, for those in the small cap world. AHMA, where the volatility lies right now.
Damn, yeah. Look at that thing. What's their story?
As soon as you think it's over, be right back. We came and Lazarus effect. How you doing, bro? He falls down, gaps down, and reclaims and goes higher. But I know even in large caps, I saw some big traders online
saying, look, that we haven't seen this type of volatility like in 4 or 5 years, where you're almost trading like small cap some of these plays in the large cap sector. What are your you guys' thoughts? Like, how have you guys traded? Have you reduced risk or sized up with the volatility? How have you money Mitch specifically, since the more discretionary?
Well, that's the thing, is I stick to the plan. Again, I talk about this a lot, but I think it's important, is that most systems, and I think your system, whoever's system, should as well, use some amount of ATR in the actual system building. So everything gets size based, and it's a short-term ATR, so it adapts quickly to market, like a 5 period or something. And then what happens is that when things get wacky, I'm still the system's adapting very quickly, and I'm not having to do anything, just follow it. But it's just reducing size on its own, because the stops are expanding out just naturally. Right. When markets calm down, the opposite kind of takes place. So it's a great way to just kind of it's why risking at certain levels makes so much sense, is saying, hey, I'm gonna the low of the day or the high of the day, even though these might not be optimal places to put stop losses, they adapt very quickly to the volatility of the security. So it becomes a real good way to do that, right?
Good morning, Kev.
Coach TB, I thought you were Money Mitch. And I looked down there a little closer, and I'm like, wait, Money Mitch doesn't trade at the beach. That's Coach TB.
Right. Hey, congratulations on your win, Kev. Congratulations. But the coach is here to get his credit from the coaching I gave you on how to trade.
Right.
So you got to give that credit to the coach.
And your book. Still waiting for that autographed copy.
Yeah, because I think you was going to do something else, and I said, no, man, just go ahead and look for your hangover and flood it out. And that's what you did, and you came out with the win.
This is something like I've been learning. Tuna, where have I been? I've been focused a lot on the chat with traders, and one of the first guy I brought on who's been real successful, he was saying just that, Coach TB. And it's something that I have not done a very good job of, and that is when you have the setup that I guess favors your system, if you will, Nas. Like this setup, historically leads to more profits than losses. Those are the times you size up, and I've pretty much, been trading a very consistent size over the years on most every setup, and haven't leaned into those hangovers like you're saying, TB. And so that's something I'm going to be practicing more of, which is on those A+ setups, the pocket pair ace. And with the Traders for Calls, Alex was saying the same thing, who you guys may know. He said, I really took myself from just a good trader to a great trader when on my bread and butter setups, I really leaned into those. And via like pyramiding positions, which we could go over one day. But I'd love to run that. Some of these conversations I'm having, we could maybe open up the door and just have conversations with the team. I'm gonna try to stick around too. Cool. They can't.
It's good. It's a good thing. It's a good thing, Kev, that you got a chance to see the results here with the competition. You see the results, what you're gonna get when you do it. So, good job.
Yeah,
man.
And I think it's, there's a itch that I have. I don't know if you guys have either, that needs to be scratched from time to time, and this certainly does just that, where I can go in with size on something and there's no fear, because you're focused on this is I think it was Brett Steenbarger, you guys may have heard of him. I believe I got his name right. Yeah. He's the GOAT, and very good in the psychology department, but he says focus more on your strengths than your weaknesses, because if you focus just on your weaknesses consistently, which again, this is what I've done, and it does you no good, because then what's the net result of that? If you're up playing golf and you're focused on not hitting a slice, what are you going to hit? You're going to hit a slice, right?
Yeah.
So we got to
Absolutely.
focus on your strengths. That's what
I
really
also heard that.
separates you.
I also heard that described. I liked it from his name's Simon something. He probably does a lot of TikToks, but he's like he's been an advisor to a lot of big tech shops, and he always talks about how skiers, they don't hit the trees because they don't look at them. They're not watching
Yeah.
every tree that's going by. They're
Yeah.
focusing entirely on the path. Same as, I don't know, when they teach you to drive, they say, right, you're not looking wherever you look, the car is going to go. So if you're staring
Yeah.
off at the house, you're going to go hit the house. You focus on the areas that you can go. So I love that, and I love your talk about really sizing up on one system, because again, eventually, I'm always a big proponent of trading multiple systems, but I always say that it is easier, especially for discretionary traders, to improve your current system than it is to build another system, especially because as you're recording your trades, you're building up your own data set, right? So you can go back at any time and you can start looking at, what times does it work, or what does the stock gap like, or all of these different things. So especially for discretionary traders, yeah, keep going with the system you have until you feel like you've kind of milked everything from it, and it's like pretty much on rails. It's as good as it can be, because you'll hit a marginal utility wall at some point where it's like, I could spend another 10 years making this system better, and maybe I'll make a couple extra bucks out of it. But when there's a lot of people, there's still that meat on the bone of the strategy of what are the trades I can eliminate that are the overall bad trades, and then focus on that. And yeah, don't move on until that system is good and systematized, and just kind of you don't feel like you could push it any further. Then you can start to focus on, and by then you'll probably have thought of 20 things that you want to start kind of going into, right?
I mean, true, because what you've seen over the years is that's people get into that loop of it's just this loop of really just searching for the next thing versus refining, like you said.
They don't understand that, Kev. That's the problem. That's why 90% of the traders lose money, because they don't understand the way to operate, the way the brain works or operate. They get on me in discourse. They say, Tony, you always talking about your profits. You always talking about your green days, and you always showing your P&L green or whatever. You never talk about the risk. You never talk about, your risk. What is your risk? I say, my risk is there, but that's not my highlight. My highlight is making a profit. So if my highlight is making a profit mentally, then 9 times out of 10, that's what's going to happen. But they constantly talking about the risk. Oh, where was your stop loss at then? I said my stop loss was a mental stop loss. What do you mean? Well, if I go down $200, I want to get out. Okay. Well, what happens? You didn't go down $200. You know what I mean? It went all the way up here. I said, yeah, because I added, which changed my average to kept me under $200. But anyway, the point is what you guys are saying. It has to have a mind shift when it comes to trading, and your focus is your focus.
Well, and it's not only, so the focus on the winner thing is great, and if you haven't, it's an amazing book to read from Mike Belfiore. I had him on the podcast, I think twice now, and he has an exercise for all of his traders. He runs S&B Capital. They're like a huge prop firm that's been around for ages and ages. And one of the exercises he has all of his traders do is what they call the playbook trade every day. And the idea is exactly what you were talking about, Coach, where you're not focused on the losers. You pick one amazing trade that you took each day, even if it was a shit day. You pull out the good trade and you journal that one good trade and you forget the rest. And the idea is that eventually you have this playbook of things that you can flip through of all of the good, and just by focusing on the good trade after good trade, you're kind of like pushing your brain into finding more of the things that worked. Whereas you're not focused on the negative. You're saying, every time I do this, I seem to do well. Every time I do this, I seem to do well. And you're focused on that side of things. So yeah, 100% agree. That's, to some people, I think, I don't know, it feels like a cop out or whatever, but no, I like it because like this is the good thing that happened. I'm gonna spend my time finding more of this, and then the bad stuff that happens, I'm just gonna move from there, right? So
Yeah, it's going against the grain, Mike. That's what's happening. It's going against the normality, and they don't, people don't like it. They don't like to be uncomfortable, but, convenience, being uncomfortable and being convenient is not going to get you the money. But I put in the chat, Mike, another
Yeah.
book that you should take a look at. It's about day trading, and it's called Trading Stocks from Behind the Eight Ball. You should take a peep at that. That's
I haven't
another
read
good
that one.
book to
I will.
read.
Behind the Eight Ball. Okay.
Yeah, I'm
What's
a
up,
big, if
guys?
it's on Audible, hey man, if it's on
Money
Audible, I'm doing
Mitch.
it, right? The
Getting after it, man. Trying to
big
beat you.
Audible guy.
Trying to beat you, big dog.
Yeah. Well, you got a good shot of it this week. We'll see how it goes.
I think it'll go a lot on my path forward, as I like to say. I've been
PH. All
betting a
right.
lot
All
on
right.
that stock.
I think it's
So
going to be all about
How much?
paddle. I think that's your
How much?
role. You're open for an oil
Path
surge just to
Path
wipe
can
them out, get them, send them
How
to
much you
zero.
allocate on Path?
it's 30K shares, so it's big, right?
Okay. Yeah,
It's
that's about the same for Battle then, and near the same price. So yeah.
yeah, $12 stock here. So mine's to the long side though, right? So
Yeah.
not as fast moving as yours, but we'll see what happens. Microsoft, one of the names that I now have I have 100 shares of MSFU. I've been building it up all morning long. How? What Tony said, playing the range. So that's how I'm building up my Microsoft position right now. Now I needed to start holding MSFU, holding the 25 breakout and starting to really rip. Let's see if we get another rip in the Qs here and continue higher. Recovering really well. 15 minutes holding now. Those pullbacks on the Qs. Let's see if it starts holding 590 and starts to come back for the 600 today. Can we make a 3 ATR move today? We already made a 2 ATR move. Can we make a 3 ATR move?
It's all about the chatter, right? If the chatter keeps going, then absolutely, that's what we
This
need.
is how you get runaway trades, right, Michael? Where everyone's going to be like, "Oh no, but I should have been long."
Well, and we talked about how much the big guys shorted last week, right? They
Yeah.
leaned into that
It leans.
that short, and technically, it looked like the thing to do because we were breaking down that kind of all important level that I think everybody, there's not a person in the world that wasn't looking at that 652 on the SPY, and we broke down and we closed under it, right? So that's technically, there was probably a lot of people that shorted, but also just a lot of people that got out of their position, and they go to work today and they come home and they see that they're down from where they sold. They've lost 3-4% on their position. I think that creates just what you're talking about, Mitch, that FOMO of crap, let me get right back in, and
Now
maybe
they
you get
chase.
right. You
chase.
get
Guys, I'm sorry. I'm looking at this battle on Tesla and TSL right here at
Yeah.
the TSL at the 1310, 1320 area, right?
I
I'm
think
paying
you're
attention
fine
to the
because of the Qs, right? So
huh?
I think you're fine because of the Qs continuing to rise. I
Hey,
think
short.
it's affecting your trade also, Tony. Just to give my macro background on this, is the consumer concern that was weighing in on auto manufacturing. It was starting to weigh in fast, right? Which is, hey, if we're in a cycle where we're not going to get rate cuts, cars are going to get more expensive as inflation kind of hits. Well, everyone was shorting Tesla on Friday based on that mentality. Now the mentality has completely flipped, right? If oil is going to come down here and we're not going to see this inflation, well, that could actually cause the spike to continue. And there's still robotic catalysts to play in with Tesla throughout the year. You're getting this nice lift. You got a nice little slowing down range here. What are you thinking, Tony?
Well, I mean, that's the sediment, Money Mitch. You're talking about the sediment, and not actually talking about trading the price action right now, looking at it from a battle perspective. Like right
sure.
now, I'm looking at the 30-minute on the TSLL and the Tesla, and I want to see if the bears are able to turn that 30-minute candle red. If they are, we good. It's 10:19 right now. So it's having problems going green. So hopefully that 10:30, 30-minute candle will turn red. If it does, then we're going to take a ride down for $1 or $2. That's basically what I'm looking at, the price action. You're right about the settlement. That's what's pushing it down. Tesla should be around 350, right? It was up to 450. So of course, it's time for the bears to eat because the longs, the bulls been eating for quite some time right now. So they have to feed the bears. The bears are out of hibernation, if you will, and I want to take a ride with the bears.
Yeah, and I think one of the things that we need to be thinking about here is kind of the squeezing mentality, where I always call it the max pain trade. What's max pain? Well,
Yeah.
it's stop out the longs and stop out the shorts in the market. One of the easiest ways to continue making traders overtrade, right? So when you have these extended ranges like we're having overnight, it causes traders to panic on both sides. Causes longs to panic towards their profits. It causes shorts to kind of cover, right? Now you're getting this big drive up where all the shorts that were shorting yesterday, maybe on Wednesday and Thursday, are now starting to become underwater. And if they're becoming underwater, what do? A lot of times start to panic, right? They put that break even uncertainty on, right? They go to break even, they get stopped out here, and then the trade could actually come back down, right? So we're going to see what happens here. How much of a stand do the bears put, or do they just go on the run? And that's what I'm kind of looking to see what happens
I
here.
bet Mr. Noss loved that spike this morning in the market, didn't you? You the perma bears.
I mean,
Well,
it was a nice tweet. It was a nice tweet.
I was talking about these because I bought on Friday, right? And I was showing the people here why, and this is just go.
Is it market manipulation? Because there's speculation. There haven't even been any talks with Iran. It's like, but Trump knows what he's doing, right?
Manipulation, but it's exactly what it is. It's just him just putting something out there to fluff the market up. You could call it market manipulation.
I wonder
if you want to call that market manipulation, then just everybody that mentions about the stock market is doing market manipulation.
Well, and he spends his whole life doing it, right? But
I wonder if he's got like a group chat. He's like, "Hey guys, bye."
Yeah, can I get in that WhatsApp?
Yeah, exactly.
Yeah, please just let me know. Well, he did it publicly, remember, after the tariff tantrum, right? He tweeted or on his truth, whatever. He said it's a good time to buy stocks. And then the market went up like 10% that day. It was just nuts. But yeah, so this is why I bought on Friday, right? If anyone is kind of coming in late, it's just basic kind of equity curve where I just went through and said, all right, what happens when we're down 4 weeks in a row? So this is the equity curve. You buy the market when it's down 4 weeks in a row and you hold it for a week. 70% or 58% of the time, 60-ish, you win. And you win more when you're right than you lose when you're wrong. And that's it. That's the strategy.
Oil stocks now green. Just to mention out there, oil stocks now green on the day.
All of them
with oil bleeding.
Pretty much.
Oh,
just to show you,
not battle,
right?
except battle.
Well, I'll tell you one thing. You can hold on tight. We'll see what happens with that one.
Real oil stocks are green. It's real stocks that actually do oil things, not just pretend about it on their message board that they do.
But the weekly looks, I think, in more favor of my trading than the short here. So I like it. I like the buy here on BATL. Yeah, you heard that, right?
Well, you like that. Well, hey, you should have bought it last week. You should have been part of your lineup then.
No. It's not my type. It's not my type. Path is more my type.
Path looks good. The problem is just going to be the time frame. I mean, I just don't know if you're going to get the move in the week there.
That's it. That's it. Yeah. But I don't need to get too much run, right? This one has, I think, less.
I think you do. I think you got to get. I don't
think I got to get a lot of run. If I even get like $1 or $2, I'm gonna be doing all right. Because if you get any type of pop back, it's gonna be shorts on the run. I don't got to worry about the shorts on the run, just coming in right now. Path is sideways and slow, right? So sleepy charts, I think I like better.
You know what the kids used to say? They used to say, I remember 15 years ago or whatever it was, playing like the original Call of Duties. and they'd say you'd say scoreboard. That's what I'm gonna say to you, Money Mitch. Scoreboard.
Let's go for it. Scoreboard those eights. I only got one position in the red, about to get one position going green, and then all 5 in the green. I ain't mad at you, dude. You do good on your one position. I got 5 coming at you. All my team coming at you.
We'll do it because
my team.
I got word that it
team
was
is coming
refreshed
at you.
about.
Yeah,
Let's
my
just do
whole
it. Let's
team's
do it
coming
right.
at you, team. It's not one. Well, I don't know how your other positions are doing, but
it's right here.
That's not accurate. That is definitely not accurate.
Oh,
that ain't the
oh,
scoreboard.
what's up?
That's
What's
not the
up? What's
scoreboard
up?
I'm looking at.
What's up?
Well,
What's
let's just
up?
talk about it.
Hands
how
up. Hands
much
up.
you up or down? How much you up?
Producer, head over here. BATL. Let's take a look at what the live stats are. Positions.
Yeah,
Those
5
get
out of
updated
5.
every 30
Wait till you
minutes.
see the squeeze above. Wait till you see the squeeze above 12 today.
What are you at? Where is it? I can't.
What,
My
you gonna
preview
start
window's too
pumping
small.
newsletters out there?
So is this the same account?
I can call a
Is
big
that
redhead.
You can call
I could call a big redhead. I'll go open a free trial and then just start jumping in that chat room.
Oh man, I know I should have went short.
Oh, shoulda, coulda, went Buddha. Tesla's ripping right now, man.
Yeah, it's
holding well. It's holding well, man. I think we got to watch to see if the Qs continues its little stair step up. One of the things that I noticed today is that we did touch VWAP really early, and then from there we haven't come back to it. So that would be the telling sign for me that things are slow. The party's slowing down. If we go back to VWAP, the party's slowing down. If we just keep pushing here and we get to 600, it can just keep going. The party could be alive, baby. This is the day trader mentality versus the swing trader mentality. In day trading, you can just start just going with the flow of what you see 100% on the tape, right?
Absolutely.
And that's the difference between swing trading and day trading a lot of times. You don't always got to believe the tape in swing trading, right? Sometimes it could just be kind of just spoofing. It can be the market overall lifting the boats. Things like that can come into play, right? And when the VIX is extended, sometimes it happens like that, right? Like you could have been in a really good short on Friday, and then came in today and just been like, what the hell? You know what I mean? That's just trading. That's just life.
Yeah,
right?
I think you're right, Tuna. This when traders, especially over the last however long, PTLE just opened up, by the way, but that you can't fall prey to that. You can't fall prey to that where it is. That is the truth. I mean, when you take losses, you have to just accept the defeat. That's the only way you're going to learn. Not blame it on the market.
No, and it's going to happen though. And that whole blame it on the market thing is just the truth. It's not that. I mean, you can blame it on the market and still take the loss, right? I mean, that's just the way it works, right? You can blame it on Trump and still take the loss. Right. I don't think it's not necessarily a thing about who's to put the blame on. That's like pointing fingers, right? Like that doesn't help anybody, right? Even if I point the finger at myself, that doesn't really point the finger. It's just probability.
Right. And that's the thing is you have to, if you're ever really happy or ever really mad on a single trade or a single position, you're too big and it's time to detach.
You're attaching yourself, right?
Nobody can predict. Nobody knows anything. That's the biggest thing I always, when people say they get into trading, I'm like, if you see anyone who says they know anything, run from that person because they're not going to help you out.
Put it this way, it's just that where you have to accept the uncertainty, but still think with clarity in that uncertainty. Because
right,
yeah,
and it's there's no blame. It's did you trade your system and does your system have edge? And those are the only two things that you can control, and those are the only two things that you should care about. Yeah, it sucks when you're in a drawdown. But every system is going to go into a drawdown. It's just it will happen. It's not an if. It's a 100% certainty that there will be a drawdown that occurs. And cool, it's just going to happen. And then so, are you trading your system? Great. If you're not, then why not? And then does your system have edge? If it has edge, great. And if not, why not? And those are the only two things that you should focus on. But yeah, it's, you know, we up here, you know, we like to talk smack because it's fun. We like to pontificate about the market because it's fun. But at the end of the day, we don't know anything. Like I bought yesterday because I had a system that had edge to say, or on Friday to say to buy it. I obviously didn't know that he was gonna, right? I've been talking about how he's gonna go at some point. I don't know when. Like if I knew, you better believe I would have bought way more than I bought. I would have mortgaged the house.
Is that what
One
you
of
said?
my favorite songs.
I need
Jimi
to
Hendrix.
add that
Who
one.
knows?
Hey,
Nobody
Kev, is
knows.
it okay? Is it okay if we call you? Sorry, Money Mitch. Go ahead.
Go ahead.
No,
Call me anytime.
I was saying, is it okay if we call Kev Reverend Kev?
Rev Kev.
Rev Kev.
That may be blasphemous, but go for it. Yeah, I'm not calling myself that.
Yeah, just making sure someone else does it. You know,
Yeah,
can't control what you do.
I didn't coin the name, at least. That's how I mean. That's how Money Mitch started. Really, guys. I didn't coin this name. I didn't just say one day I'm gonna just call myself Money. Right? Someone else gave it to me, and they kept just saying it over and over again. I was like, all right, you know what? Finally, we can just do it.
Yeah, let other
Rev
people.
Kev.
Yeah. Rev Kev. Okay, there we go. I like it.
Why? That's the key, Tony. Why?
Because he just gave an analysis. He just gave an analysis like right before you started talking, and it sounded like he was preaching to the choir.
Oh,
which is
preach,
a good thing.
baby.
It's a good
Yeah.
thing. It's a good thing.
It's important. It's important.
I do preach
Repetition
to the
is
choir a
key.
lot, as in I know what to say, but I don't often apply it.
Hey,
So,
hey.
that's
We
where the preach
as
to
as the
choir
best
comes.
traders, you learn that one thing, right, Kevin? You know what to say and you know what to think. The whole other
Well,
thing is if we're gonna do those
apparently
things, right?
apparently the best short seller out there lost it all. You guys
At
know who that
least.
is?
Yeah.
Yeah, lost it all. I mean, made it all, lost it all, and ended up taking his own life, unfortunately. But it's
Oh man, sorry to hear that.
Yeah, man.
Welcome
I
to
mean,
trading, man. That's what
trading
trading
is
is.
very tough. This is
Jesse
why
Livermore.
I do this in a group mentality, and I always talk about surrounding yourselves with like-minded individuals. And if you're in a trader space, well, surround yourself with like-minded traders, because it's a very lonely space and can get very mentally challenging. But when you have other traders that work at it the same way you do, or trying to be professional at it and improve, well, that's how you keep yourself in the right shoes, right? There's going to be times that you're struggling, and one of the best ways you can catch yourself is not only holding accountability to yourself, but also having others help you keep that accountability, right? Because you can bring in those trades, you can bring them how your trading's going, and then they'll probably ask you a really good question. Are you doing this? Are you doing that? And next thing you know, you realize, hey, I've been making a mistake this whole time.
Yeah, man, that's a good point, Mitch. For the new traders out there, they should actually look at it as a trade, like you're going and you're trying to pick up a trade. And if you was going to pick up electrician, when you're in class, you're not going to go out and try to make money. You're not going to go out and try to get a contract. You're going to wait till you secure, enough knowledge in that field before you even set your company up to go out and try to make money. So in the beginning, I wouldn't concentrate on making money. I would concentrate on my technique and how can I be profitable, even using small shares, 5 shares, 10 shares. And then if you become profitable in that area, then you can go out and start your own business.
All right, we'll see what happens here in the markets. Can we get another rally? The Qs are just hanging out, but I love where they're hanging out. They're hanging out at the top, and all green lights out there. Now basic materials up 3.07 from the open. Industrials up 1.97. Concyclicals up 1.89. Technology 1.57. Financials up 1.18. We got energy up 1.74. That was red, has gone straight up in energy the whole time here. Utilities up. Real estate up, healthcare, communication, and consumer defensive all green. What does that tell us? Relief rally, right? Relief from Friday's downside action. Now the question is, where's the true relative strength? That's what you want to be looking for, right? Names that are not only performing to the market, but outperforming the market here is what I would be looking for to see that there's certain names that maybe are really getting a lift here, right? So keep your
Yeah,
eyes
and
on that.
I think this high, so it's 596.90. That's what we got to watch on the Qs. If we can get through that, that was just the height when we did that, the tweet, kind of the panic high, we could call it.
Yeah.
So through that, you got to imagine anyone out here who's been like leaning into the short side, betting the short side of this market, and they might reconsider if we break that high. So keep a close eye on there.
Grail doing well today. That one is one name that's catching and has been in the dirt really bad. I mean, it's back down to $50. This was a $120 stock just a little while ago. That's bouncing back, doing well. ARM is doing well. GEV, new high on GEV. At least Path is hanging in there right now. We'll look to see if we get another step up move. BE bounced back there. Bros doing well today. My Dutch Bros, get your coffee while you're at it. You guys haven't had Dutch Bros in the west side of things. Check it out when you can. Actually, it's one of my favorite coffee places for the long run. I just think in the long run, this is like the Chick-fil-A of coffee, guys. Think about it that way. Drive-through works just like Chick-fil-A's drive-through works. I've talked about this for a long time. This Bros Coffee doing really well there. What is that telling me? Consumer sentiment coming back in. That tells me that the cyclical names are doing well, right? And things like that. KLAC, we talked about that chart really early on in the day. Talked about it being one of the best charts out there on Wall Street right now. And look at that action. It's an expensive name, 100%, but big break out there in KLAC. And we'll look to see how that continues to work here. AMD pulling back a little bit. The name that I thought was very vital for today's rally was NVIDIA, and you're seeing it hang out here. I think it's important to see this rally because if it can't rally and continue to move up, I think you'll still run into some struggle. Of course, it struggled all last week, even with a conference on. So that's one thing to think about. I mean, with a conference, it still struggled. So, Tony, I don't know how you're feeling about NVIDIA. What do you think about it? Do you think it could actually put up a stand here, or how do you feel about that name?
I'm long on it, Money Mitch.
Yeah.
You know, in the challenge, I done went long on it, and so
Yeah.
you know, I got confidence that he's going to bring it back this week, hopefully.
Yeah.
He was down last week, so I'm hoping that we are
Yeah,
into
maybe it
that
was a buy the
season.
rumor, sell the news kind of thing, right? And then now that we're
Right.
through the news, maybe we can start to see the investors come right back in.
Exactly. Well, you know, a lot of the big boys are running to oil right now. They trying to capture that up, you know, that rising of oil. So
Yeah.
they've left tech. Yeah, tech is under a lot of pressure, especially Micron. They've been facing a lot of pressure lately. So I think it's just a rotation over into the oils and the energies and the industrials.
Yeah, I think that's exactly what we've seen, right? And the market's changed tunes, right? For a little while there, it was all about the real economy names. Value trade was doing really well, and a trade that was called and coined on Wall Street called the Halo trade. So that's what was working, and now things have changed, and that's how the markets are, guys. So you have to be quick, and you have to kind of convert on edge, right? You have to be really fast. But I did want to bring in an image and kind of talk about it, guys. We're going to be doing some more education, of course. So I want you guys to catch those education moments here. Those are going to be starting up at a 10:30 time. So we're going to be doing more and more kind of information for you guys to learn from, whether that be trading strategies, whether that be deep dives in different action. So I will, of course, be bringing in different things, and so will Michael Noss. It might be teaching you guys about bot trading, whatever it may be. But if you guys have ideas for us and you guys want us to cover it, reach out, right? Reach out in the comments. Reach out to us by DMs. Reach out to us right here in the comments. We'll catch it, and we'll make sure that we start to cover those. Today, we're going to do a little bit of a quick lesson and just kind of talk about what we talked about a little bit earlier in kind of the stages of trading, right? So one of the things I think is very important is kind of understanding kind of what I call the legends of trading. So Stan Weinstein introduced us this kind of stages mentality, and really it's all about kind of understanding how things work, right? In stage 1, stage 2, stage 3, and stage 4. And I do think that stocks move like this. I know maybe Michael's not the biggest proponent of it, but I think that stocks do move like this. A lot of times what it is that during this stage 1 period, it's exactly what the psychology says here. It's boredom, it's indifferent. Smart money institutions are kind of slowly loading the boat in names like this. You could call this kind of how the SPACs kind of came back alive, right? They went through their stage 4 and they went back to more of a stage 1 where they were in kind of that accumulation stage. And Michael's here. I can bring like Owlet as a kind of a name that kind of came out of this, right? Right? It's large basing pattern, and then you kind of get the run, right? The question is, when do you start to see the stage 3 to stage 4? I think the important part is understanding that, the turn, right? And some of the things that he talked about, I think, are very important. We can expand on this. I'll tell you guys a little bit more about it. I have like a huge report on this. So if you guys want the report, I'm going to be putting this out on the Discord, and that's where you're going to get the real insights. So if you guys want these reports, they're going to be only on the Discord. You'll see them like here live, but if you want the actual printouts, you got to get into Discord, my friends. So get to the Discord action. Go ahead, Michael.
Just the thing to make sure that you're always remembering when you look at something like this, it assumes that the market has to go through all of these stages in any kind of an order. Right? It doesn't have to be, it's like anything. It doesn't have to be like this. You don't have to have a stage 3 and a stage 4. In fact, if you look at the actual like pure definition of it, we haven't had a stage 4 since 2008. So, and it doesn't have to ever happen ever again. We don't have to have a long, prolonged downturn in indices ever again. Like we've been talking about a lot, that there's a lot of economics people, and I kind of agree as well, that we might not have like a broad range market, like multi-year sell-off like ever again, because the market's so bifurcated, right? It might be one of those that you might get this more in individual sectors, you might get this more in individual stocks, but the market as a whole just may rebalance kind of itself over time. So that's the only thing that people, when they look at this stuff and they say, okay, there has to be a phase 3 and there has to be a phase 4. It's like, no, there doesn't.
No. And I think it's more, and just to help there, I think it's more to do with kind of momentum stocks, right? If I had to put them into any kind of category that these stocks actually might go into it, it's more your market leaders, kind of like and I will do some trades that I think are on more of the stage 2 than stage 3. Stage 2, I think, is a name like Sanders, right? Or a Palantir back in the day, right? When you're on this type of breakout, right? It's just a complete takeoff, right? And I think Palantir is a good case here study, because I think this is one that has gone through the stage 3 and now has moved into more of a stage 4, right? And so I think these are kind of things that I think we got to be thinking about with these. These are kind of like your market leader runners type of names.
Well, and this goes back to why, and you have to know why the guy invented this. He did not invent it, Stan Weinstein. He's still around today, so you can still find him and ask him, right?
He's still around.
He didn't invent this system to predict tops of markets or bottoms of markets. He did that. He thinks that that's a foolish endeavor. Anyone who does it is just doomed. The reason for this was to basically only identify stage 2, because our job as traders is to find stocks that are in stage 2 and find ways to buy them. And then the rest of them avoid entirely. So that's why, very simple rules. Like he would use it's like the 30-week moving average.
30-week moving average.
If stocks are under the 30-week moving average, ignore it. Basically he created like a little indicator you can find on most places like TradingView that just say, if the 30-week moving average is not pointing up and price is not above it, I don't want to see it and I don't want to trade it. So all of this kind of thing was just to create when is the best time to buy stocks. And he didn't even ever apply it to markets as a whole. It was all for individual names because
Yep.
he was a growth trader, growth investor. So his job is not to really get too much of the transition, but yeah, like there when he's okay, now that I've identified that this is a potentially in a phase 2, I want to buy it using, pullbacks and bull flags and all that kind of stuff, and I just want to ride it out. And then the rest of it was just kind of I don't care about it anymore. Right? If it's in a phase 3, I don't care. If it's in a phase 4, I don't care. If it's in a phase 1, I don't care. Just give me these stocks that are accumulating over and over and over again, and in these insane runs, and I just want to own those. And everything else, just get out of my life because there's 10,000 stocks out there, and if I'm focused on one of those, then I'm not finding one of these ones that's in a nice accumulation phase.
So there's also the triple confirmation pattern that he talks about, is when you're seeing that stage 1 resistance, right? That kind of box pattern, right? You're starting to break out, looking for this volume expansion, and then he uses the Mansfield relative strength, and he's just trying to see that the RS crosses the 0 line. So that's another thing that you can look for to try to locate those stage 2 runs, right? And the 30-week moving average is definitely where he kind of used. Also locking stops strictly below the lowest of that turn, right, on those moving average, right? So locking in around that is very important as you kind of slowly move up, taking that approach, right? I think it's very important to kind of note that, right? I don't think necessarily you can always call the stage 3 to stage 4, and just to kind of even get perspective, I even let AI try to take an attempt to see what stage we were in, and it doesn't know what stage we are in. And that just tells us more and more that the definition of it is probably given, but after the fact, right? Like a lagging indicator, essentially.
That's why, again, he wouldn't. The whole point of it was a filtering mechanism, right? So now he knows. So he would look at this market and say, we are either in an accumulation or a distribution phase. It's obvious it's one of those because the market hasn't done anything in like 7 months. So we're in one of them. I don't know which one, but all that tells me all I need to know, which is I'm not. If he was an index trader, which he's not, he'd just say I'm not trading right now. And it's the same thing. So what he developed was this very basic scanning tool and say, right, find me stocks that are making new highs that are above their 30-week moving average, and I'm just going to focus on those, and everything else get away from me, because he was one of those not turtle traders. That's the Can Slim guys, right? The William O'Neill decipher dudes, right? He was one of those guys. So he just wanted, but whereas William O'Neill would do some value investing and he'd use his cup and handle to like try to buy breakouts and stuff, he just found, which I think is 100% true, life's way easier if you just find the stock that's ripping and you find ways to get involved in it when it's ripping, and when it stops, then you move on to the next stock, the next area, that next kind of momentum hype kind of thing. So yeah, if there's any big takeaway of this, is just you can slap a 30-week moving average on your chart, and I don't think there was any magic behind it, as it was roughly like half a year. It's 26 weeks in a year, or in a half a year, so it's roughly a half of a year. And he's been around so long that he would be calculating these by hands. So that's why a lot of these moving average numbers are rounded, is because it just made that kind of computation much simpler. That's why the 200 period moving average is important. Right, there's 252 trading days in a year, but they use a 200-day moving average because you had to have a whole bunch of interns calculate the price on 1,000 stocks every night. So it made their life way easier if it was just 200 instead of 252. And yeah, you're just saying, is my stock, if you're a momentum investor, is my stock in a phase 2 uptrend? Yeah, well, now let's look to get involved. And then you could just build a curated list, and as the moment you notice, it flattening out, or the 30-week, or it's below the 30-week, you delete it off your list, and then you just have that focused list of names that have trades.
Yeah,
I like the 9. I like the 9 EMA, Mikey.
Yeah,
and it's funny if you look at the 9 EMA and you look at the 10 SMA on charts that don't have gaps, they're going to be pretty similar, and that's why people like the 8 and the 9 EMA.
Yeah, I think the 9 really exists, guys, is really because it's part of the MACD, and so many traders use the MACD. But that's just what I've like when I was doing my CMT study, and that came up, and I was like reading what the MACD really is, and I was like, oh, so this is why the 9 works so much. It's
Mm-hmm.
not because it's the like the all end all be all number. It's that it's a part of a major indicator that majority of traders use. And so
Like tons of it is well, because MACD was created in like 1970, and there
yeah,
is so
so
many trend models out there that exist
that are just
that
using
say,
it.
yeah,
And so that becomes why it works on momentum trades, right? Because it's like a self-fulfilling kind of thing. Every trader trades with it. Well, yeah, they see the MACD cross, right? And they're looking at that, right? That's why I've thought
yeah.
about, and that's why I've always said that that's the reason why the 9 works.
Mm-hmm.
Tony, at least that's what my mentality is. And I always say, if you're looking at a momentum trade, yeah, you want to see it hold that 9. Because
That's
you
right,
need to
Money
label
Mitch.
your trade, right? You need to label your trade. Is it a momentum trade? Is it a accumulation pattern that I'm looking for a breakout? I think that's also an important thing here, right? And what Michael's
Well,
also kind of giving you guys.
what it is, Money Mitch, is it's a follow the crowd trade. That's what it is.
Exactly. The herd mentality, right?
Well,
Just want to
and
give you guys a trade before we wrap up. It's about 10:50. We'll start to kind of do the recap, but this is the type of education that we're going to be bringing in here, guys, to try to bring you guys a little added bonus. And of course, where will you guys be able to get certain action on this? Only in the Discord, if you guys want the actual good stuff. But hey,
no,
that's
I
what it's
love
all
this.
about, guys.
And this is something. So from either my CMT or just me building my own systems, or even my time at Trade Ideas, I'd spend most of my time studying this stuff, because then we would want to implement it in their system. So it's really cool, and it's one of those things that there's no perfect answer across any of this. If there was a perfect answer, that person, you'd never hear from them, because they just make billions of dollars and shut it down, move on. But what you're looking for when you're getting information, you're getting research like this, is you're looking to make sure it kind of jives with what it is that you're interested in. If you're not a trend trader, then the Stan Weinstein's trend analysis isn't really going to do much for you. It's not something that you should incorporate. But if you're someone who likes trading these high float or these crazy momentum stocks, well, great. Then you found a little bit of a way to go and filter these out. Like one example I always did when I was teaching this, I thought was one of the best ones, is if you look at Zoom and Peloton, these are the perfect. There's not many stocks that exhibit the phases as well as those two, because if
Yep.
you remember, Zoom did nothing for years, broke out during the pandemic, then did nothing for years, and then just crashed right back down. And same with Peloton, and you'll see these out here. And then and the reason I use it is because there was a tons of people who made a ton of money trading Zoom and Peloton, and then didn't have the ability to part ways with them, and probably started buying the dips all the way down until they got murdered.
That's the key too.
You
It's
know?
also understanding that at some point your momentum stock is going to go to a stage 4, and there's going to be the time to get the hell out. Like where you're actually
Or
on the
even
late side,
worse,
right?
like a stage 4 for sure, but even worse, what I think and what happens to a lot of stocks is like a really prolonged stage 3, where it just does
Yes.
nothing for years, and then people they're not
Or I think
losing money, so they still have their money in the stock, but
Nvidia.
they're right. Nvidia,
Hey, Mike.
that's
Hey, Mike.
probably a perfect example there. Yeah.
Mikey, I agree with you 100%. The only issue I see is that, like Mitch said, we want to identify, and when we're talking about these indicators, we want to identify whether they're good for swing trading long term or whether they're good for day trading. That's all,
Yeah.
because there's
Yeah.
a lot of different
100%. I mean,
information out there.
I think Michael and I will both say that when you're talking day trade, the time factors are so quick that really there's really
Mhm.
not much of this that can play in day trading.
Yeah.
And so, and Michael and I know there's just so much back and forth in day trading where it's hard to say that anything is like even let's say gonna hold. Even like the best day trading strategies, I think change up. Right? If there's one game that is the hardest, I think it's the day trading game. I think it's even harder than the investment strategy game, like long term game. Right?
It's
I
funny
think
that
it's
there's
harder
actually
as you
been
work
studies done.
slower. Like you know what I
Well,
mean?
with brokers, they went through and they found that there is a sweet spot. that people that buy and hold individual stocks, if you buy and hold individual stocks, I think it was for like a year or 2 years, a lot of those clients lost money. And then same with a lot of like the really short-term day traders lost money. And they actually found a sweet spot for most people are anywhere between like, I think it was, I'll try to find the study, a couple weeks to like a month or so did well, because they said the problem with the people who held individual stocks, and I think that's important to highlight, people who bought and sold the indexes and like died or lost their account, those are actually the best money makers in most brokers. But individual stocks, because every stock has its heyday and then at some point either does nothing for the rest of its life or goes back down. It's like 60% of companies get an 80% drawdown they never recover from. And but so that was the problem with the real long-term people. We know the problem with the short-term people. It's just more emotional, right? When you're getting short-term nature, if you don't have that conquered, you're kind of doomed. And then in the middle, you got like that 1 week to a couple month people. They did really well because they were able to, but they're basically like chasing momentum and they're buying momentum and they're holding on and then they're moving on. But yeah, there was this middle ground that they found if people were active traders that they end up doing well in, and it was that kind of a time frame.
This
All
is
right,
one of those
traders.
days. Sorry, Mitch. This is
No, go
one of
ahead.
those days where we just watch. We kind of lay back when you have such a great rise in the morning in pre-market. You want to actually just try to wait this day out to see where it's going to settle, because it looks like to me the MMs are pinning right now. They pinning. So when they start pinning the stock like this, you have to be careful because they could be pinning for a squeeze, right? Because a lot of people think that it's overextended a little bit, and they
Yep.
on the short side. So we just be careful today and see how things look tomorrow.
Yeah, and that's why I talked about the psychological levels of where the shorts are, right? These these areas, right? They're starting to feel the pressure, right? That's why I drew the bar, right? That bar, anybody that went short that period is starting to feel the pressure. Will they go on the run today? That's what the question is here, right? And I think that's what we'll be looking at. If they start to cover really fast or bigger positions start to cover because they were short in the 660s and now they got down to 640s and they were like, oh man, I should have taken profits. Well, now it might be too late. If you stick onto the position, you could get run over here. That's what I'm going to be looking to see. Do they get run over? And do we not go back to the VWAP? That's one thing I clearly said from the beginning. And I think that we're seeing certain actions on that. The Qs holding on here and not going back to the VWAP except at the open. Now, if it starts to undercut VWAP here, that's where you got to start to get the concern action here. That's the decline right before they start to maybe try to rip it or they let it go. So we all know how it's been sell to rip here. We've already had some rips. Let's see if we get some continuation patterns this week. We'll see what happens out there, guys. 10:57, wrapping it up here for the Market Madness. Not doing too bad. Up about, I think, a little bit over $2,000. We'll continue to watch how BATL performs. That's starting to bounce back there towards 1050. Who will win? The rug pullers, or will it be Team Aura? Then Tony in his own competition getting after it. Tony, gonna look forward to seeing you on, my friend, and we're gonna have to bring you on a little bit more often. Appreciate you hanging out with us today. It was a
Hey,
good
no
time,
problem.
and good luck in the
My
Market
pleasure,
Madness. I
man.
hope we're battling next week in the finals.
Peace.
All right, man. Peace.
All right. Later, guys. Take it easy. Have a good one. All right, guys. Time to bring you over to the scanner side of things. Like always, keep going. We got more for you guys this week and even later today. I think we have a new segment that will be starting up here for you guys. So don't miss that. New segment every Monday and Wednesday at 1 p.m. Eastern Time. It's the lunch recap with Josh and Steve. So see you back here at 1 p.m. Eastern, or stay tuned on the scanner side to check out that action. See you guys back next time.
What is up, traders? It is Steve Tileman here with Trade the Pool. We have a special new segment for you today. Starting right now, we are doing our lunchtime recap. We are going to be going over all of the major moves in the markets, all the major sectors, all the major components which are making the market do what it's doing. So we're going to jump on in. We're going to start dissecting these market movements, both intraday and over the course of the weekend, what we've seen here as we've digested some weekend news, some weekend headlines, and we've had some fun trading here if you've caught the moves. So let's start talking about it, guys. Welcome on in. All right, so we have our daily charts on the left here for now, hourly on the right. We will get in a little bit more fine-toothed with the comb there. But first off, we got to check in with the daily. So what are we seeing? We saw a nice reversal off of the Friday lows here. Really nice reversal, opening high, pushing higher, tagging that falling 9-day moving average. So as usual, this is going to be the area where we're looking for those sellers to step in. They did today. So that's what we're seeing on the hourly here. Big push up pre-market off of Trump saying something or other about resolution with Iran. We can go over the exact headlines in a moment. But what's more important to me is the price action. Because you know what? That guy likes talking. He likes saying a lot of things. So it's going to be about what the market reacts to. So far, the market is seeming to react to this and seem like a legitimate de-risk of the, or re-risk on and taking some of that liquidity off of this war trade. So we're seeing oil going down. We are seeing tech going up. And now it's a matter of, are we going to hold this hourly kind of flagging structure that we're starting to put in? Do we need to retest deeper into this big pump? Do we need to potentially revert the whole thing? That's kind of what we're looking at here. Well, why are there so many options? Because we're trading into a very key level, and we're going to start marking those out. So the very key level, we see this wider zone that I already had marked, but we're going to get in a little bit closer because we need to mark this 200-day moving average. The 200-day moving average is sitting just over 660, so you have that round number as support too. And it's also going to be, it's about 50 cents higher than 660 currently. So this, we can see that it forms kind of a little barrier between these wicks here, where we kind of were holding the line. Holding the line is resistance. We lost it, and now we're trying to undercut and reclaim it to rally up higher. So here's the kind of setup I'm seeing, guys. If we can close the day or close the week above this falling 9-day moving average, it opens up the door to test a few things. This yellow here is the 21-day EMA. This is going to be the next target. You can see that nice high volume spike here. And you also see it aligns with the next big round number up at 670. One more thing is that we have an imbalance here between the bodies of these candles. It's a little bit of a hollow spot where the market would like to reach up into. So that's our upside target for the week here, or for the next couple days, if we can get over this 9. As for now, we have found buyers under this 650. Off of the news catalyst. We popped up, but we're still finding sellers exactly where we would expect them overhead. We cannot say that we have bottomed yet. That doesn't mean that I haven't been doing a little bit of buying, though. So we'll talk about my buys in a bit, but I want to just talk about the overall state of the market. Let's see, give me 1 second here. Thanks for bearing with me just 1 sec. So guys, assuming that I am live, I'm going to keep talking here. Just double checking on something on the back end here. First stream, so making sure everything's worked out here in this regard. That being said, assuming we are live, we are going to keep on going 2 Qs here.
So I think I might be an hour early, guys. I might have to hop off just for 1 hour and get back to you here. I'm just so eager. I'm just so eager to go. I'm loving this new lunchtime overview that we're going to do because it gives us a chance to catch our breath between the morning trading session and the afternoon swing potentials every day. So 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 yes, I am a little bit early. I'm just going to call this a sneak peek for you guys here. I'm calling it a sneak peek. I just couldn't wait. So I'll get out of your hair. I've only wasted 5 minutes of your time. We will be back in 54 minutes, and I will be ready to go then, having all this to talk to you about. Thanks, guys, and I will see you quite soon. Back to the scanner.
What is up, guys? Did you miss me? It is Steve Tileman back here once again with Trade the Pool, and we are starting, for real this time, our lunch hour review. So this is going to be a little bit of a segment that we're going to keep doing. We're doing it Monday and Wednesday to start here, and it's going to be at this time slot before the power hour so that we essentially get to kind of catch our breath intraday. We got the morning move, we got that nice liquidity. We're starting to see how it's digesting and reacting, and we can kind of start to plan our next move here. So I think it's a good place because it's between that morning session like I talked about, and then you get the afternoon session as well, which can be quite tradable into the power hour here. So this is kind of a little bit of a palate cleanser, kind of a little place to catch your breath. It's like halftime, right? Think of it as like a halftime show. So I'm Oh, here he is. Here he is. Hold on. We got a special guest coming on in. Give me a little thumbs up if you're ready. Oh, there it is. We got the double thumbs up and we are good to go. What is up, Josh? How you doing, man?
Real good, man. Good. Yeah, it's Monday, another day to be above the ground and loving life. Beautiful weather here. That I'm experiencing, getting my spring weather in. Hate. Which do you guys real quickly in California? Do you guys get pollen and like on your car,
Oh,
like the yellow all over the place? Okay. I just want to make sure that
yeah.
you have to go through that too as well.
I don't know how bad it is compared to where you're at, but I'm super susceptible to that, and I'm just like squinting through. It'll just hit
Yeah.
me out of nowhere. The wind will
Yeah.
change, and all of a sudden I'm just bawling my eyes out. Like I'm watching watching The Notebook or something, and it's a whole thing.
Oh yeah.
So I'm
Hey,
gonna
just
go.
you can put on. Let's see here. What it's like a toy. I think that another Toy Story is coming out. I'm like, man, yeah. Toy Story brings me to tears, bro. I mean, even those even those movies can bring it to tears, my friend. But
Absolutely. I mean,
yeah, but yeah,
they
loving
hit right
life,
at your
loving
heartstrings.
right. Oh gosh, man, they're the best at that. So how's your Monday going?
It's going all right. We had a good couple of little morning trades here in the server, and we're going to talk about them in just a second here. But yeah, I was just kind of setting the stage here, just saying like what we're doing. I figured it's a good kind of place in the midday here, where there's not always a ton of action going on, but I know our audience. They're hungry for knowledge. They're hungry for preparing for that next setup. So I thought it would be a good kind of like halftime show. So maybe I'm not going to be as entertaining as Bad Bunny, but we can do what we can, and I think that it's a good time to kind of catch our breath and see what's going on. So the general kind of plan I'm thinking is that we're going to be going over the indices, we're going to be going over the sectors, seeing how that rotation's playing out intraday, and then day to day, intra-week as well. And then we're going to be talking, just the things that I think we really need to touch base on to kind of have a full holistic view of where the market's at. So for me, that's like the indices, of course, but also gold, silver. I want to check out those things as well as, oils, obviously the name of the game and what we'll be mainly talking about today here. So that's kind of what I was thinking of bringing to the table. How's that sound, Josh?
Let's do it. Let's do it. Of course, I'll
Yeah.
kind of before the day's over, the hour's over. We'll talk about small caps and what we've seen today in that
Oh, yeah.
sector, because it's been a little more fun than what I've anticipated in pre-market. And that's why you just never know what you're going to get every day. Here that's why I love stock trading. You just never know if you're going to get. Sunshine. You're gonna get. Speaking of weather, you never. That's what I feel like. The older we get, the more I feel like I've talked about weather too. But yeah,
Well,
you just never know
yeah,
what
we're succumbing to inevitably we're going to be talking about weather and sports, and that's probably about 90% of the outside of stock talk. But you know what? I'm warming up to becoming an old guy. I just can't wait till I'm old enough that I can just say whatever I want. The old
right.
man license. So we're kind of in the middle area there, but
Oh man,
I think I think a lot of it comes with the kind of experience in the market too, because everything is less dramatic. You have time to kind of just shoot the breeze, take that space mentally, and just in your trading too. You don't need to be in every move. The longer you do this, and everything doesn't have to be this life or death battle. I see, especially when the market's in this downturn, it's really easy to get super worked up, and sometimes you just got to talk about the weather and not take a step back. So that's kind of I think a good way to look at this time too. Because we just stare at 1 minute candles. It's part of the job, right? But there's a lot going on that needs time to play out. And
Yeah.
this is a good time of digestion here. So you were talking small caps, and we can definitely, if you see anything going on, feel free to jump on in and take the lead there. I know you can whip your charts up if needed too.
Yeah.
But a good place to start here is IWM showing relative strength today. So this is still up 2.2% on the day. Pretty impressive hold there. how does this impact your like selection of plays that you have in the wheelhouse, for any given day when IWM is so strong?
I honestly, for the most part, concentrate on what setups are at hand, and so there'll be days where you don't like IWM can be doing what it wants to do, whether it's down or up, and you can have small caps, like, well, I say small caps, but micro caps especially, plays that may only have like 500 million in markets, market cap space, whatever it might be, not a lot. And so I'm just waiting for patterns to form. I feel like I'm, jokingly been, called like Neo in the Matrix, where it's just like, you're seeing all these things form, and that's all I do. And whether it's, so and what I try never to do is rely on one thing to lead me to one thing to another. So I don't want IWM to say, here's what's going to happen today, and this is what will happen, So I like to keep an open mindset on what I'm going to be able to watch and see for the day. I mean, it's just like putting on a game. I have no, well, of course, love my Hogs, but say if it's team, I like a lot of these, college basketball games here for the tourney, right? I love watching them all. Most times, I really don't care who wins. I just want a really good game. Now, every once in a while, I feel tied down to this team that making a comeback, and maybe they're the lower seed, and you're kind of rooting for them to maybe win, but you really don't care in the end. You're just kind of want something good to watch, and that's what I'm looking for. And so it really, for me, the IWM, I've gotten even asked, which is funny, like, hey, does SPY, if it's doing something, does it mean anything? You're like, no. I mean, I've usually, if I'm trading a small cap play, now, yes, I would say there could be this general rule of thumb over the last couple of years where now we've seen this, and I know we've talked about it, how volatile we've gotten in the large cap space, mega cap space, where Tesla, Meta, SMCI, Tesla, or NVDA, of course, and we've had these tickers, or even AMDs at days that can run 5, 10, and of course, for 20, 30, 50, 100 points. And so there's been a lot of, I think, swing from that micro small cap sector of seeing these 100% movers all the time to where now we're going over to large cap space. So there may be days where maybe the large caps will have this big movement and you don't see much out of the small caps. So there's maybe some correlation here and there, but even generally throughout most of the years, I mean, especially you go 2016, 18, 19, 2020, I'd be watching the news, like, again, kind of turning our old man isms. I'd be watching the nightly news. And let's take a look at the market today. And it was just always going out to break how they do it. It's so funny. You watch your local news, how your update on the market is. They're going out for a commercial break, and they just put on a graphic of what's up today and how much it was up or down. But like, oh, it's a bad day on the stock market, and blah 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 blah. Here are your numbers, and they throw some numbers up of what was down and what was up, and they're like, oh, y'all, you may have had a bad day with Apple and SPY, whatever, but boy, oh boy, we had a 500% mover, 300% mover, and 100% mover in the small cap space. So I would say most of the time, I'm just concentrating on what's at hand for me in small cap space and trying to ignore any white noise if possible.
I love that. And I love that like setup agnosticism where it's like you just want a good game, right? You'll go long, you'll go short, just show me the money, right? And so
yeah.
I love not getting married to anything like that and just focusing on like the pure, the meat and potatoes, because so for me, I think that's a really good way to look at it. And like for me, for the indices, it just makes me a little more inclined. Like, for example, if IWM was still holding up really strongly, I'd be more inclined to hold off on shorting something maybe. But like you're saying, if the setup's there, these small caps can move completely independendly. So I can't get too based in that.
And pull up the chart just real quickly. Pull up AHMA, talking about not wanting to short something. Look what Ama Bahama Mama has done today. Look at that dump, not wanting to short something. So I was in on some of this buy. I got a very small slice of this now in the end, but you get my point on where you don't know what's going to represent itself, and then you find a short that it's good, and then it turns into this mega home run dumper. Man. So you just never know what you're going to put your hands on, every day. And so like you said, I love it. You said, "Show me the money." I say all the time, it's I always reference Jerry Maguire, and I always say, "Show me the chart, and I'll show you the money." So show me the money, and I'll say, "Show me the chart," and then you'll come back, "Show me the money," and I'll say, "Well, show me the chart." And so
we'll call and response. I love it.
All right.
Wait, so did you catch this one, did you say, or did it shake you out?
I got some of it on the way down. Yeah, I got some of it on the way down there, and I didn't hold on long enough because I didn't think she would go all the way down. And there's no offering. This had no news, so okay, so no news. This play is going to probably give back at some point. I went long, took a loss, immediately went short, and got some of the piece on the way down, not knowing, you were going to get all the way down into the one. This is all-time lows, by the way. This is all-time lows right here.
I needed to zoom out of my daily chart here to even get it in the picture there. Yeah. Wow. Yeah. Okay. So just absolutely cooking on down there. And this is a heck of a move here. So did you try to get long in this afternoon little little pop here, or was it earlier in the day here?
Earlier.
Okay, gotcha,
So
gotcha.
I missed the bounce at the 6:30 area, so I figured I'd get a bounce right around the mid 5 area. No, it cracked right through it and was going into a halt down, so I switched immediately to go short because I was like, oh, we're about to start halting down. This is going to start giving back gains. And so I got then that move through 5 on the way down into the 4s, not knowing, she was going to go all the way to the plummet side here. See, I kind of waited patiently for my bounce play. I do with the backside move. Let me get a small bounce play here, and it happened beautifully at that 630, 650 area, back up to the 7s, and then and you'll have this sometimes where you figure this play. Okay, I know it has no news. It'll probably give back gains, but not give back these gains.
Oh man, yeah, you never know how far they can go. But what I do really love about this is, for me, this. I don't know if you are familiar. Have you delved into the ICT world at all? The inner circle trader guys and all their
Not
jargon.
yet. I have not.
You don't need to. I'm gonna get death threats for that. Very, very, very cool system. I've spent a ton of time on it. They love using fancy names for just basic concepts. So they would
Right.
refer to this as a mitigation block. So this is where the sell started. It lost these moving averages, just bottom fell out a little bit. It did find buyers off this pre-market high area, but when it bounced, it mitigated this drop. So it's like, okay, this is the start of the real move. We're going to give you one exit ramp, and we're going to get it right back to the area where it sold off. And it's basically retesting. Like, are we sure that we're not just going to fake breakdown and rip higher? Because this thing had a heck of a move. Do we got some juice? They're saying, no, 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 we're done. I'm getting all out here. I sold here, it made it go down, came back here, I'm selling the rest of my stuff. So this you can call it a mitigation block. I tend to, but really all it is that retest and rejection, right? And
Right.
these
Yeah.
looks, it can be as simple as that. But I love looking for where the bid just fell off, and if it offers you that spot, and you see a top wick there, my eyes are, what am I trying to say? I'm looking at it like a big old snack, basically.
Yeah, you're
Eyes
salivating
are
over there.
watering.
Yeah. Your mouth's watering, you're salivating. You can't. Yeah, exactly. That's what I'm doing to the bottom side. So I usually find that for bounce plays, I just didn't get filled at that pre-market high area. And I was actually in a one-on-one, and the girl that I was in the one-on-one with, if Ingrid Aussie Chick is around, she got filled and got the rip right back on up to that area. And it's one of those things where it's a great short. I'm not a big fan of shorting at that. It's one of those things where like I know the edge is there, but my confidence and my emotional state is not there. Unfortunately, I just haven't done it enough. I need to do it more and just go in 10 shares, go in 50, just go in and get in. You just get in on it. Let's see if it works. Get on, and the more you do it, the more you just become, oh God, yeah, this works at this percentage, rate. You see it, how, and especially in small cap sector, how much that works right there. So this was one.
The other thing is, I think you're right to be nervous, because it has to have, I'm kind of I'm burying the lead. The whole thing is that it has to have the context of a potential to move lower, right?
Right.
Like, so I can't just blindly say, oh, this thing's up 300% and it dropped a bunch and it came back up to a level, I got to short it. It's gotta be showing me that it's stretched, it comes down, comes back and rejects, and then the volume, it's like it's trying to push here and just get nothing into that level, and it has
true,
that context of that downward, just like, well,
Yep.
why is it this high? It's swept swept these wicks now, or it's trying to, at least. It's came into this 200 or 50-day moving average. There's reasons for it to chill out, So I think you're totally right there. And wow, just driving lower.
It's going into another. It's about to halt down now in about 3. Oh no, some buying came back in, but it's hitting the LULD to the bottom side right there, about to halt down, but. Yeah, no, it was one of those plays that pops up out of nowhere. There's a bullish play today too as well. We got one that's bullish in BIAF. So we have BIAF that's been the nice, good staircasey up and uptrend mover there. You can see the daily looks pretty too as well. Not as much volume as we've had though in the recent days, but it's just that multi-day runner on that higher low pattern. Finally gets that squeeze today through a lot of resistance. A lot of shorts getting squeezed on that rotation over as well. So it's just one of those plays that. Good long, and we have the good long play and the good short play. These are my two kind of babies for the day, BIF, and then we got AMA. I've seen AMA pop up a lot of times. It was our December mover or January mover, so she's been our Bahama mama. And then BIF, we've seen this for the past week, so that's kind of going back to previous runners here.
Yeah, this one's wild. So a few things about this one here. Okay, a little bit of potential rejection action happen up here over 5. So I actually want to keep an eye on this, but I just wanted to know how this thing is a pattern killer, right? Like it's making a pattern, it's breaking out, then it looks like it fails that, but then it just
Yep.
kills people trying to short it, right? So it's laying traps. And I see this low volume node, it just wicked right into there, said, oh, all those stops under there, yeah, we're taking you for a ride. So this is another one where you could say, oh, mitigation block. Look, it dropped here and it came back, but it just surged straight through. You need to see the wicks there. So a better example would be there's a smaller little mitigation block right here, starting from, well, for me, 930, so 1230 here. And so what it did is it dropped sharply, staircased up, tried to push higher, and rejected. And then you see that was a sell, a smaller sell, but they were just looking for this little window here. So you got to be careful with these, because this thing, even though it looks like kind of heavy to me, I mean, what can I say though? It's just coming back to this next level to check out. And it could drop here, hold this. It could come back here and re-wick again. So you got to really be sure that it's definitively shaking the trend. I think if it loses this big candle, though, it might be in the territory where it could come down, then wick back and give an entry somewhere off this big volume shelf once it loses it. So this one, but then again, you're saying, it's a multi-day runner. I don't know. And the other thing I wanted to ask you about, how do you kind of read and parse this pushing so hard on low volume? Is that a good sign because it took a little bit of effort to make this much of a move? Or is it saying like, hey, if real volume it comes in, it could change the tide? I'm not sure.
Yeah, it's a combo, because you go back and look at the first day run and how big the volume was, but yet not much movement on that very first day. Yeah, exactly. You get and you don't move, you pretty much almost come back to where you started from, but it comes with the gap up. And so you got to say, well, the gap up was factored into that, and so you still moved a decent amount from where you moved from in the volume sector, because you got to think about small cap traders. A lot of them, I would say, I would love to know a percentage, but how many small cap traders are newer, younger, struggling? They're just that in out. That emotional battle. So there's a lot of market ordering in and out of it as that moves, and a lot of profit taking. So any 5 to 10 cent move, me working with so many traders, they get 5, 10 cents, 12 cents. They wrap it up. I mean, like when I was on the one-on-one. Yeah, and when I'm in the one-on-one earlier, like she's like, like most times I hear this so much. Oh, I already would have been out. Oh, I would have, but no, we're holding into these plays, right? Because I know what to expect and blah 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 blah. But they're not, and they don't stay into plays that long. And so I think it happens on those first day moves where you get so much volume, but not a lot of movement, because you get a lot of that first day trader, and now you get 3, 4, 5, 7 days in. A lot of people aren't looking at BIFs and newer traders, at least in my opinion, when it comes to this. So that's where that first day move is not as big a lot of the time as you anticipate, and you get this multi-day breakout where and to me, I'm fine with volume as long as I always call it consistent volume. So what is consistent within the day? What's your relative volume? What are you used to doing? So today's still very high volume profile for a normal BIF day. If you go back and you go to like the whatever it is on Yahoo Finance, and they have whatever, you can look at the daily average volume, and it's accumulated over the past however many months or weeks. This daily average volume is still huge compared to most days. There's just been more buying than selling today, and there's not a lot of buying going on. And there's definitely not a lot of selling, as you said, it's trapping a lot of traders. And so I don't mind those days. It's like going back to the chart. So is it consistent? Yes. All day long, pretty much our volume has not left a high or low area, and it's consistently, if anything, the breakouts are getting higher on the green candle size, or at least, maintaining their strength. So
yeah, I like that. And I just want to say really, because I was taken aback. You're so right. We were talking about small volume, but this is still 35. What is that? Million? What is that?
Yeah, I think for the day, yeah, if I'm not mistaken.
Yeah, okay, yeah. So that's
50. We're up to 50 now. Yeah, we're up to 50. Yeah.
Yeah, it's over twice its average, in the past 20 days, and that's including these massive spikes. So it's definitely picking up still. And the strength of this upward consolidation, that's wild.
Yeah, yeah, I've gotten that throughout the years. That was just one thing I always talk about. People, it's one of those things I ignored a lot to not preach enough, but volume's so key, because you go back to even your spike up where they could have had that mitigation trap on the BIF, essentially right over the A. So go to the A one. Look at the volume on that. Yes, look at the volume though. Look how big. Look at that. Where you go back to the one on, you go back to Bahama Mama and that one where it was a mitigation trap. The volume was it was like you said, like there's no volume that was coming into that, and you could almost just picture perfect see that there wasn't a lot. Yeah, right there. Look at that. That's tiny compared to the volume compared to earlier in the day. Is it bigger for what was happening? True, but was it the volume spikes you saw earlier in the day? No, not even close.
And also, what happened after this push? Like, they got a few candles and then no follow through.
Yeah.
Where did the volume come back? When they were puking it.
Yeah.
I just noticed. I love this feature on Trader Evolution here. I just noticed this when I mouse over the volume candle. I'm actually highlighting the candle up above. That's nifty.
Yeah,
it's subtle, but you do see that. Okay, cool.
Yeah,
awesome.
yeah. This
Yeah,
is the
so many.
candle you're hovering over.
So yeah, wow, absolutely. And just by the way, on this AMH, where were you targeting? Just this opening kind of breakout at level here,
Right.
kind of
Yeah.
near or five? Yeah,
Yeah.
yeah, totally, and totally with you there. Awesome. Yeah,
Yeah.
nice that we had some movers in the small cap space there, just to kind of bring it
Yeah.
around home. Let's touch base and see where we're at on the indices. Are we still waffling? Yeah, we're still waffling, and it looks weak to me here. It's not catching on any of these moving averages that it was trying to base in for the past couple hour or so here. So to me, looking like we need to make a higher low here very quickly. Doesn't look like we're getting it yet, but if not, then this is looking like a drift down. And to me, I think that we just ran too hot and reality's starting to set in. So that's kind of the narrative that I'm seeing play out. In the morning, we had like this big, like euphoric 2%, almost 3% crazy push, and it was, off this ephemeral potentiality of de-escalation. I'm just not sure that we can give too much weight into words over actions, and I'm not sure we're seeing the real tangible things we need to line up for clarity going forward here. I feel like it's like reality's kind of set in, and we can look at oil here to kind of gauge this. So we still have risk premium on oil. Like this is it. It's not nothing. It is still down
I
8%,
wish it would
which is
come down a lot more. I just
I wish it
noticed.
would come down a lot more, right?
Yeah, especially for being out in California. I just noticed I got out yesterday to run errands, and I'll notice the gas had because I hadn't been out in a few days. I'm always here doing stuff, whatever, and working, and I finally got out to do some. I was like, and here, which I don't want to tell you, like, anyway, our low has gotten up to 330, and I'm like, oh my god, it just keeps going up for you guys out in Cali. I can't imagine what the low grade is. So yeah,
Yeah, no, it's not great. So we have a couple cars. One of them is it's a Forerunner, which is not the most fuel efficient. So I am not driving that thing much at all. That is
yeah,
staying in the garage. It's it is what it is. The big thing is that when this oil is still so raised like this, we can't be too trusting of any dip buys, Like this is still we're still very much, I believe, in a sell the rip environment until proven otherwise. So on SPY here again, it's just I'll always say this: I'm never going to be smarter than my moving averages. And when we surge like that, and everybody's so bullish and euphoric, and we just head bonk here right at the moving average, it's like, well, that I don't know what I would have expected different. I have to trust that and say the trend is still down,
yeah,
especially when it aligns with that big 200-day moving average. So I do like this week because the setups are really defined, right? We have this really clear 200-day. If we can hold above it, we can squeeze. If we can't, we can keep accelerating downwards. There's a big node south all the way at 630 on SPY, which would be another what? 2%, 5% move? What is it?
I mean, I'm right there with you, thinking we get back down. I think we just continue to sell down to the south side, which, I mean, again, having the catalyst, with the war to go with it. I know we've had this 5-day pause or whatever. Anyway, and oh yeah, and then we jump back up this morning. I mean, you got to imagine where the day is and where we're at if we don't have that 5-day pause that he puts out. Are we still in the 640s? Maybe back up to we're essentially in the 40s still, right? And so it's
650 here, 654.
yeah. Yeah.
But
So you get my point. So yeah, I
yeah,
think if so, yeah, I say down. I'm right there with you on your daily with the little kind of like the little the drawing there on the way down there. I like that. And that's what we've kind of been
there's
slowly doing over the last couple of weeks here, or a week or so. So yeah, I think we just do that more into the. I mean, I would say, what do you think? I'm gonna go at least. I could see 610. We might go lower. I don't know. Well, somewhere in that area though, we could find a way. But I'm all about it. I just look at the chart and get into an area that we haven't been in for a while. I love for this to get back below that 640 mark, which that 650, 640 is going to be key, and then I think we make our way further down. But I've got a forever line in at the high 590s. I don't know that we'll see that ever again, but we might. You never know. But just think about this, guys. I love the 610 mark, though. I love 610, the old plateau, old resistance, new support area that comes from 24 into 25. But just, hey, that means good long-term investments. You get a dip buy. You get something at truly what will be a bargain price. I mean, you got to think about last April. Imagine if, you got in on that dip buy on any of these tickers, and the percentage move on the way back on up is just bangerific. So
absolutely. And just
love
to
dip buys.
illustrate that, I'm going to pull up. This is my newsletter here. Oh, where is it? There it goes. There it goes. All right, we're going to watch SPY on the right here, but I just wanted to show you guys just a few charts here, if I can expand them.
Expand.
Expand. Come on. All right, we'll pull it up here. The gist will be pretty quick here, but I just wanted to give you a few charts that I think are really worth talking about, because you're bringing up a lot of levels. And I think, okay, real quick, SPY. Remember I said we could make a higher low? It's trying. Now we're in the testing place, though. I'm not so sure, but it could try to squeeze up a little here. We're watching this 50-minute. We're watching this 21 for me, still acting as a band where it couldn't break out 2 times. So just don't be too eager on a big green candle to assume that we're bottoming. But back to this monthly chart. So we've had 3 extended periods where we had long-term consolidation upwards, and then we had distribution that led to a prolonged breakdown. The first one here, and this, just going back 5 years or so. So the first one here is 2022. You can see how if we just keep it super simple and kind of draw rails on this thing, once it broke down, it needed to retest this stair-stepping black level, which is a long-term support on a kind of monthly basis or weekly basis. So longer-term position traders are looking to buy around here. And we can see it had to capitulate. It took months and months to really form a valid, let's rip again time. Once it did, though, we got another one of these kind of awkward little, let's give a little more space here, awkward little pinchy things here where the rails just tightened, and it had to flush out very sharply. And with that downtrend line, we actually formed the bottom of a bigger channel here. So this is kind of like what I would consider the long-term buying opportunity. And you're saying, I don't know if we'll ever see it. I don't know if we will either. That's why it's on here for this taco tariff rally retest level. That's a mouthful. But that's like the pivot of this monthly candle where we really caught and started going off to the races. If we go to a weekly, you'll also see there's a lot of holes, a lot of imbalances here. And I'm just not so sure that that's strong enough structure for if this conflict does go on for, let's call it 1 to 3 months, 1 to 6 months, something like that. I think we could get down here pretty fast and then pretty rapidly start pricing in a path to higher prices. Because if we do get down here, like you said, your forever line on our yearly chart here, I'm gonna remove the drawings really quick. Right here, 477 is a massive, massive level. I don't know if we get there, but testing this COVID breakout seems like it could be healthy. And testing this pivot here at 480 or 582.
Yeah.
To just maybe a little bit deeper, like I said, 560, 582. That's like my all right, I'm selling my Pokemon cards. We're going all in, baby, So
keep a couple, just gotta keep them for keepsake. But hey, you can always say, hey, guess what? I can buy these back ×2 once I get, once you get the investment. So
and then you cry when you realize that despite your great trading, somehow the Pokemon cards still appreciated more.
Yeah, more.
Punching air, dude. Oh my goodness. I sold a few. I sold like it's crazy. My Pokemon cards are damn near doing better than my Roth. It's insane.
And it's crazy how much those, because of course as a kid I grew up in the 80s and 90s where you had like professional sports cards like baseball, NBA, NFL cards, and you wanted a whatever rookie card, and those were really expensive, and those have done good. But you would think how amazing these athletes are that they would, and especially if their autograph would age, and they have aged, but nothing to where like Pokemon cards have. It's not even close. It's crazy.
It's wild. And you know what? I don't know. I think it's cool. I do see a lot of kids learning about like how to trade basically from a young age.
Yeah.
So I'm noodling around here because I wanted to show you one more cool thing. If you take a overlay of the last time that we broke down.
There we go. Yeah. There we go.
And you overlay it here. We're going to go full screen because I think this is kind of cool. Full screen on the weekly. Where would this tap down into? It would be a perfect little bottom test of this channel. And then it would also form a higher low off of the weekly, or I'm sorry, the monthly trigger, which is exactly what happened here. It punched under the monthly, tagged this trend line, came up, came down, and this was the pivot when it higher load off of here, where you could safely say, all right, I can define my risk under here. Things are really bad if we go under here.
Yeah.
Probably risk is much more, in alignment with I could be left behind here. So that's when I was buying. And I didn't play it perfectly, but that's when I was, it gave me the signal. So I would love it if we got a replay of that. And that's kind of my higher time frame look here. This is worst case, guys. This is worst case. Well, but I just want to put it on people's radars because that would be really, really juicy. And I think people don't realize on a bigger picture,
The pain has just started, and we need a decisive reason for the pain to stop. That being said, we can get these great intraday, intra-week rallies, and SPY's looking pretty constructive. It tested that 50, and now it's trying to break it. So we'll watch and see if this flag holds. If you want to take a stab, you can look for a back test of this 50 or these rising moving averages. They come up in the next few minutes with a stop under this flag. Does seem strong. So maybe we have punished the late bulls enough, and now we can punish the late bears. I like punishing on both sides in this negative gamma environment. So, all right, we've talked SPY, we've talked some small caps. I do want to get into a little deeper on oil, not too much, and then just go a quick touch on some precious metals and other fun stuff there.
But no, let's say finish on the SPY though. I love the levels. It's funny. I had Caesar, a guy Riggs on. He trades future. Blah, blah, blah. I had him on Friday. I do those dual stream Friday. I need to get you on a Friday. I want to do those free live streams on Friday and get you on. Love to have you on a Friday, big time. Had Kevin on. Blah blah blah. So we talk all kinds of stuff. Obviously, like essentially what we do here. We go. You know, after we trade, we go live for an hour, talk about the market, yada yada yada. So we talked about that on Friday. Where did he see lows at? And we both brought up 610. And I didn't think we'd see 560. I mean, I love that, but he brought up as well 560. So it's funny when you said that, like, wow, we were just talking about these same levels on Friday. So
yeah,
you hear that, guys?
A lot of our eyes are lighting up.
Yeah. So hey, I'm just letting everyone else out there that is listening. So there's a lot of traders out there that have been doing this for a while. Like Caesar's been trading for like 20 years now. So yeah, I'm like, hey, a lot of people saying the same level. So just wait and have patience. You will make, like I said, these are good levels to just have patience and wait for. But anyway, I just had to touch up on that. I agreed completely though.
No, that's great. And just the very last thing, that's the name of the newsletter. It is wait for the straight. Patience is the position, guys. Patience is the position. And just really quick, there's kind of a clock here that I think needs to be talked about a little bit, and that's that the CPI prints aren't going to show up until like late April and May. The inflation spike isn't in the energy prints aren't going to show up until these, so we have this window where we could see some bit of a squeeze, a short squeeze rally back over the 200-day, and we could still see further resolution down. But that 200-day is the technical like bottleneck, right? Bottle cap. So if we can break above it, I'd be happy to play a squeeze to 670. I'd be happy if it went to 680 because we have these fanned out moving averages so nice and aligned. And if we do need to go lower, what if we just do an almost cup and handle type thing?
Yeah.
You see we got the cup?
Yeah.
So let's get rid of this line real quick. And what if, just what if we need to rip up, then like trade sideways a little bit, get people caught, and then make the bigger move on down. Just a possibility. Oh, now we're
that would be a crazy spike back up. We went back in time there. How did we do that?
Yeah, I was going to say, talking about risk management, you got to have stops, especially if you go backwards in time. You got to just pull the plug because something is wrong. And you gotta wait for it to
We've broken the time continuum here. We have completely messed things up.
All right, Bulls. I like what we're seeing here. We get a really nice push here. Trying to draw a downtrend line. There we go. So nice. Okay, it's gone. A nice downtrend line. Really strong break here and nice volume as well. So this is what we need to see to start putting a bottom in. And this is going to be an attempt at a decent little bottom wick on the day here over this neckline of Friday's close. So I think that's the level that we're kind of playing ball with here. 56.15. 56.15. So maybe if we back test that, we can find a little spot. Right now, this is overextended to buy, but you could be looking, like we said, we were looking for, we mentioned when it broke this, you could get in on a retest of that 50-minute, and that would have been a really nice entry right there for the big pop. Now a little overextended, so let's see where we can go. I'm going to double check on VWAP for us. VWAP is sitting at, looks like you got 658.50. Looks like that for me, and a little low volume node there at 658. So that's your target for a scalp.
And anymore, you think about that $2, there'd be a whole movement on the SPY back in the day. Now you're talking about a scalp for 2 points. That's just crazy, Like that's just the movement we get anymore is beautiful.
Absolutely. I mean, you got to wear multiple hats.
Oh my God, dude! Speaking of movement, look at AHMA. Oh my gosh!
Mama.
Mama. Yeah, it's getting there.
Getting there?
It's at $1.39. Yeah, look at it, still tanking away.
And
It's just
this is
crazy to see
crazy.
that when you get that straight just sell off, pressure and just continuing down here. No one, of course, wanting to buy and just people sell. I'm like, how is anyone even long here to sell? I mean, is it just
Yeah.
just shorters just come? It's like, how does this happen? You'd think it's just nuts. We've never even been this low.
Oh, it stops, my brother, stops. Like there's some sad folks out there who thought that this was their
Yeah,
chance to
there's some
shine,
sad.
and all of a sudden they're gonna look at the end of their workday and be quite upset, quite upset. But
Woo.
this thing is it looks like it's halted again. They
Yeah.
can't find a bid. Can't find a
No.
bid.
No
And so
one.
this is
No
where,
one.
look, nobody is smarter than this moving average. This moving average said, "Hey, I don't care. Just short it. Just short it. Every single time, just short it."
Yeah.
All the way down. This thing has moved from $7 to 139 without posting a single candle with follow through this 9-minute moving average. Like, if we're talking about how hard they're selling this thing, that's
Yeah,
brutal.
bro.
Wow. Whew. All right.
I
Stay
show
safe
that.
out there, guys.
Yeah, exactly. I want to show that off one more time. Like, good night,
Incredible.
almighty.
Yeah. Good night, Irene. Good night, Ama. Mama. Bahama, whatever the heck
She's
we're
had too many
calling
Bahama Mamas. Yeah, she's
it.
been out there. She's been drinking a little too much.
Go home. You
Yeah.
are drunk.
Yeah, cut
All
her
right.
off.
So we got to talk gold real quick because it's had a wild flush out here, and I'm starting to get interested. I'm a gold bug. I want to buy some gold. I want to buy some
Okay.
gold and silver, and I'm just trying to pick my spot. I wanted 400, and it did give it to us today, and I missed it. No. Yeah, it gave us 400, and that was the buy spot. Oh man. So, all right. So I need a higher low now, I guess, to get involved. But I do think that the bottom could be in for gold if it loses the bottom of this range, the 395, which it was knocking on heaven's door there, and did respect it nicely. Especially, I love these little breakout gap retests and refills. So now it's refilled all of the poor structure on this squeeze, and it could start another base. I don't know if it's going to be a fast move, but I do think it's a good place to get some gold in there,
I
especially
like it.
because professional segue, because Bitcoin is having some trouble and indecision, and I just can't read it. I do have a Bitcoin long, but it's still green, so I'm still in it. I'm not sure if I'm crazy though. So I kind of want to hedge that with gold because they often move in opposition to each other. So this bit here, is it the bottom of a channel? Are we just going up? Is this a big bear flag that it's about to break down? I don't know. But I'm thinking about hedging my bets a little bit. I am still long IBIT and BMNR. No, I'm sorry, FA and BMNR. I like the Ethereum a little more.
I've day traded BMNR.
Yeah,
A
yeah,
few
it's a
times.
fun one. Wide daily ATR ranges. Nice little push off the bottom here. And I believe Ethereum was catching off of VWAP as well. So when we look at these daily charts of these, how do you feel when I draw this bear flag and then I draw one like here? Do you
Yeah.
think this is a similar pattern playing out, or is this maybe a little more constructive?
More constructive and bullish, just because I always think I had to have a lesson on this on YouTube.
Okay.
Angles on your
Yeah.
trends. The lower the trend, the more bear, the more up it is, the more bullish it can be. Now, a lot of traders see that more overextended uptrend channel saying, "Ooh, it's up a lot." That trend line has a very high angle to it. Well, that also is going to get you trapped and stopped out. As it cracks down, it'll have a lot more areas for it to bounce at and reverse back to, versus the one that doesn't have that high of an angle. So this one has a much, and look at the volume profile too out to the right. There's a lot more people interested in this. So that to me says that there's, definitely could be a big push on this one back to those moving averages versus the crack back down through. You know, that just for me, what I see there and reading that overall.
Hey, you're speaking my language, brother. I'm long, so I'm hoping we're both right. I like
Yeah.
it. So yeah, Ethereum. We talked a little gold. Let's get into silver real quick. It's just it's the crazy younger brother. It's got a chip on its shoulder, trying to prove something to gold this year, and it has. It's gotten gold's respect, but it is still going to have these wilder swings. And this one, definitely a bigger swing from the downside here. Definitely also over swinging. If it was gold, it would be trading right about 67 or so, roughly around there, where this first parabolic crazy breakout really started. So it's a little undercutting there, a little weaker. And because of that, I'm a little more inclined to just go with the gold, especially because I'm trying to have it as a actual gold position, because I think that the air's been taken out of the sector enough that it will maybe start acting less like a risk-on asset and more a little bit like it should. I don't know. Maybe that's wishful thinking, but that's kind of what I'm toying with when I'm looking.
No, I like it. Yeah, it's a good thought process.
Awesome. Okay, so going on into the others here, got to talk VIX. We got the VXX up here right now. VXX going to be the VIX of VIX, so to speak. And what we're seeing is just sideways action for a continued amount of time now, and it is consolidating. So we got to watch and see which way this breaks out. Because it's VIX, I want to be biased to breakdown because, volatility is mean reverting. That being said, volatility can take a while to mean revert, VIX can rip longer than I can stay solvent. So I think it's important to just respect that this is not the same as some of these other spikes where they fell much more rapidly. This one's holding pretty well and pretty high here, so we just gotta respect it. And again, I'm watching the moving averages. I know some people think this is a cardinal sin doing TA on VIX. I give it less weight than my other TA, my like SPY chart, for example, but I think it's gotta be just watched at least, So keeping an eye on, so for VXX here, the bottom of this range, and the 21 moving average is around 32.25. So that's what I'm watching on Trader Evolution here. I also just watch my normal VIX handles as well to cover my bases. And normal VIX handle is looking like, let's see, I haven't checked in this a while. So yeah, we got this squeeze up from this level, this base. We got the sweep of this zones, but now it still is digesting. So this 28 handle, still showing some trouble, 30 to 28, that kind of regime. So under there, I think we can get capped and push it on down to 20, which it did barely spike at. So that's going to be our regime for sure. If we can lose 20, then this thing can fall to 18 pretty fast, and SPY can drift up nicely in that time. And that'd be the next area where I'd be looking for in maybe a week or two, if we do get a nice squeeze here, to probably get short again, to be honest. So I feel like I'm playing the heel, in wrestling. Like I'm liking having a lot of cash and just being willing to go short. It feels more freeing.
He's the bad guy.
So with VIX there. Moving on, we have some XLF, some financials action that I think is worth talking about because it's digesting a really interesting level. So I'm going to move to a weekly. Let's go to an hourly. We still want to see intraday. On the right, we'll have the hourly, and we're still at the daily on the left here. So it's this 50% fib of this major, got to go to a weekly to see it, major range. So we basically pulled back 50% of a major move from the tariff lows here. So you can see XLF still relatively strong, still holding really nicely up here, and it wants to try to reclaim this 50. I'm not sure it can straight up, and the real money pocket for me is down here in this 45 to 47.50-ish kind of golden pocket zone. If we can get down there, it's starting to look like a long-term buy spot for like maybe a JP Morgan or a Goldman Sachs, something high quality. So keeping an eye on financials because they are going to be leading the way here. And as we see on the daily, it's been a tough slide, just really choppy, trying to base, rejected, trying to base. We'll see if it's rejecting or not, but it hasn't formed a higher low yet. So still on the fence here, and this is going to be one of those kind of canaries in the coal mine that I'm watching. Let me double check here. I got notes. I want to see if I'm missing anything for XLF here. Oh no, dead air.
Oh, you're good. I was going to say, well, Alma's already said that. Alma's going to be, dude, it halted down. It's at 116. Going on down, it might go to zero. We saw one last week, WNW, and it did come out with an offering, and it literally went down. I held that thing because I was in such a good entry on it. WNW went from 13.50 all the way down to 10 cents.
That is insane. I'll have to pull that up. This is, 116. So do you usually find the buyers stepping in a little before or after around that $1 level?
Yeah, that $1 mark. Yeah, you'll try to find like one more round of traders trying to come in there, and then then it just gets annihilated for more. Yeah, W&W was one of the nastier ones I've seen here recently for sure.
That is filthy. All right, I got to zoom out a little on. What are we looking at? Oh, mama. So I thought this was the spike. This is up to 19 cents. We got to zoom out. So let me look at the hourly here. I was like, yeah, that is a crazy move. You're right. Oh, nope, that's the move. All right.
Look at that, man. I mean, that's really what Alma's trying to do today. Now, Alma didn't have quite the move up that W and W move. Of course, that's a big move. You know, that's a multi-dollar move.
Crazy.
That's nuts. The round trip, and then to go further than round trip and go, because it had an offering that came out the next day, and so that just, you see offering hurt plays, but I very rarely do you see him hurt them that much to go all the way down to 10 cents.
That's wild. So it was a $2 stock that 5x'd, and then it went back to break even, and then it 5x'd down.
Bro, right? Like,
okay, yeah, all right, why not? Yeah, so like I said, play safe, guys. Don't fight the tape on these things. That'll
no, not at all.
knock your wig right off. Whew. That is insane. So Amma trying to repeat history there. We'll watch into the $1. That's the last area that I would look for any kind of bounce, and I sure wouldn't play it.
And it's crazy that traders will try to come in and bounce it. It's like, leave it alone. Go find something else that's actually bullish that you could get a bounce play on, you know? So
right. Talk about getting married to it. Like, there's got to be something better on your screens, brothers. You know, this is no good. No good.
If that's what looks good to you, then we've got some issues. We got some things to talk about.
Top. Yeah, we gotta get into those one-on-ones. So going on through the sectors here, XLE. I mean, we know it's not going to be amazing considering, but it's actually holding up surprisingly well. It is green. It's up 1%. It's posted quite a candle from the bottom there. We can see intraday just screaming on up. So it's not telling me that the war is over. It's not telling me that we should stop being panicans quite yet, to be completely honest. So that's kind of what I'm thinking just by this relative strength. To me, this size of a candle like this, it looks like this. You know, we had some red, we had a little bit of red, and then just a big trend candle off of that. Once it's under this 9, it's feeding frenzy time. You know, every time it's been under here, it's been gotten bought up, and this is no different. So whenever one candle might look overextended, yeah, but it can chop and it can hold and it can just progress even higher. So I mean, you could say this candle looks ugly. You could say this candle looks ugly. You could say a lot of these candles look ugly, but none of them are smarter than this moving average. That should be the name of the segment, I think.
Yeah, right.
Going on through, we have XLK as well. So tech is holding up, but it did give back a decent amount, almost more than any other sector, I believe. So it was cooking up nicely into these moving averages, but again, it's just holding the line. And that's why when the volatility picks up like this intraday, you can get wild, like 2% moves, and then they can be just part of a bigger downtrend. And to me, this is not looking constructive yet. It's looking like it's rolling, and it looks like it's heavier on the bottom pivot here than it is over these. See what I'm saying? Like the sellers over this yellow look stronger than the buyers under this like green, for example, the low of the day.
Right. Yeah.
Yeah. So to me, this looks like pressure is going to eventually release downwards. And so that's keeping me
It reminds me of my theme of the day, AMA. Looks like it's going to pull an AMA move.
Oh, goodness. Oh, goodness. I'm not fully positioned in my shorts yet, so don't say that.
I should say not that big of a move, but it looks bearish. It does look bearish where it wants to give back for sure. As in, it's stronger all those pullbacks than it is on those bounce plays, and it is starting to make looks like a little bit, not only of course a lower high pattern, but then a lower low pattern there, and that's never good.
Classic backpedaling. I see. No, you heard it here first. Tech is going to 0, and we're going to stand by that call. No, not 0, but I am looking for a discount. So we talk.
Who doesn't? Yeah. Oh God, give me AMD, Tesla, Microsoft, Meta, whichever one you want. You're run of the mill. Give them any of that. You know, those are the big guys. But yeah, anything in tech, give me a pull. We're up too high.
AMD is very strong, by the way. You know, that's one I'm keeping an eye on. We can pull that up in a second. Just running through the rest of these, they're not as exciting. Communications, just not showing guts. It is putting in a potential higher low, so we can watch and see if money kind of comes into this risk-off trade. But we are seeing, let's pull up XLU, the utilities. We are seeing how everything goes down, including the, quote-unquote lifeboats. So these might recover better. They might hold better if we continue to go down, but I would not be expecting sharp moves to the upside, because look at XLV. XLV, I thought this was my risk-off play. It sure hasn't been acting like it, has it?
So, so
Right.
I've had to stick with these oil and natural gas hedges because they're the only things that are actually moving inverse to the market. You know, my barbell is not barbelling. You know, I'm leaning off to one side. I'm like, help, where's my spotter? So,
Right. Where'd you go, Josh?
XLP,
Josh, Josh.
Josh. This slowly gets quieter and quieter.
Yeah.
XLY. So we have just weakness and a new low. I can't be bullish, and this is one of those signs that the consumer is not ready to consume quite yet. They're having trouble with inflation. You know, these costs of goods that they're being passed on to the consumer, and that hasn't been reflected in the CPI reports yet. So that's just another kind of landmine on the horizon. If we go to staples here, they had been strongly outperforming, now retracing pretty heavily, and we're kind of going to have to see. Let's look at a weekly chart here to see what level they're responding to and if it might just be a reach into internal liquidity before a bigger move up. So this was a breakout that got smacked down, and now it's generously retesting. But, you know, honestly, low like this is where it kind of needs to catch in my book. I think if we pull a fib here, it'll be in the golden pocket. We can check that out. Oops. Yeah, so it is in the golden pocket under the 62 fib, trying to find buyers into a moving average. But this XLP and XLY, especially the ratio chart, something I'm watching to just kind of gauge the strength of the consumer. Builders also joining the party a little bit. They've been having a rough couple weeks here. Another one that tried to break out and just got hammered, no pun intended. So we're going to be seeing if these moving averages and these retraces, is this another golden pocket? Almost to a golden pocket, but under the 50 there. So we're going to be watching these as they progress over the next week or so and see how they interact. If they need to go lower and retrace these breakouts in full, potentially catch and rebase, or whether these get continued or these continue to get aired out after the failed breakout. So I think that's just about all I have to talk about in terms of sectors here. XLRE, real estate, a little fake breakout here, and right back into the basing range. I really see no trade on these and no interest in those. So I'm sticking with little pockets of strength that seem to be kind of just going sideways while the market's going down. There's some strong names in SASS or SAAS, like NET, that I'm keeping an eye on. This one's just grinding higher. This one's really impressive.
Nice. Yep.
So I think that there's some that might be close to bottoming, but I'm just not ready to pull the trigger on too many. ACAM I did buy today. This one looks very strong. Oh, mama, yeah, still cooking. Beautiful there. So yeah, this is one of the few tech names that I think I'm really interested in, the kind of AI space, and in general, I'm just waiting in the pocket here and just looking for little intraday plays. Josh, are you making any kind of tweaks to your longer term stuff, or are you just hanging out waiting for those buys?
Yeah, just hanging out, waiting. Yeah, just sitting to see what we get over the next couple of weeks and months. Yeah, for sure. I would. Yeah, just say I keep it very simple when it comes to that, and just wait for those levels to get hit. You know, like you just kind of find the levels and wait for them to get hit. If they hit, they hit. They don't, they don't. I don't like to force, and if it's not meant to be, it's not meant to be on a certain trade. You know, so I get mindset of like, hey, here's the area. I'm maybe down the line. I'll start maybe. I would say maybe try to get in earlier. You know, like, hey, you may not get there, so let's, because you're maybe like, my account's bigger, or I've made more money and I've got more. So like, okay, hey, I'll go with this area, and if it doesn't work, I'm gonna go in here. If that doesn't work, I'm gonna, you know. But I know at some point we're gonna, you know. But I go with those lower areas, and if I get filled, I get filled. So, you know, like I'll wait. I kind of also wait to see the reaction. You know, to see what we get, if there's anything big that comes out. Do we get like a knee jerk reaction? Like last year was perfect with the tariffs and Trump and. Like literally what you see there on that chart and that quick rip back on down. I mean, it sent a lot of stocks into a perfect area for a dip buy, and that was one of them. And boy, we just ripped right out of the gate. So just stuff like that, you kind of wait for. Just noticing, as long as however many trades I've seen, if I just go, okay, well, run of the mill, how often they rinse and repeat and kind of do what they've done before. A very high percentage, well over 50%. So if it's well over 50%, then I'm just going to rely on that.
I love it. I love it. Great stuff, man. All right, we got 5 minutes left. There's one other little segment I want to just pop into real quick just to give you guys an update on where we're at, both intraday and on the week. And that is going to be our little Gex Corner, Gamma Exposure. So I'm going to whip out my spreadsheet here. So this handy dandy device is pulling live data from Thinkorswim, and it's making it into this chart here. And so this chart, we're going to put the low a little higher so we can see it better. Put this up to 60.
6,400 for the bottom of the range, and this is going to adjust this chart so we can see. All right, this is our gamma profile for the day at 6600 on SPX. This is going to be our big pivot. I'll switch over to SPX just so we're on the same page. Can I pull SPX here? We will do it on this one. So what this is telling us is where a 0-day gamma is being bought and sold intraday, and it is going to give us a good picture on levels that will be responded to intraday. And if these levels change, we can infer things about the direction of the market. So what we're seeing here is that we are just pinned at this 6,600, and that is literally the price we're trading at this very moment. So I wouldn't expect to move away from this in any significant fashion today. If we do see that, we would see the green start to build up here if we're going up, or the red start to build down here, maybe at 65, the bottom, or 65.50, the bottom of this kind of node. So this is just kind of telling us that you don't need to jump into anything right now. We should be watching this level and see how it reacts, especially into tomorrow, I think. So that's the GEX for today. I'm also just going to put it on for the next couple weeks up to the next monthly options expiration. So 4/17 is going to give us a little bit of a bigger picture. And we're going to zoom out a little bit more on the scope as well to get down to that 6,300, which I think is a compelling short side target if this squeeze does reject hard. And we cannot stick over the 200. So as you can see, this is 6,700. It has quite a high node here. So there's the chance that we can run up to there. That's the 100-point kind of range we're looking at. You can also see 6,700 on the weekly trigger on this chart on the left. So we have confluence for a big target to the upside. That's our weekly target and our weekly range to the upside. If we get a nice move and we can squeeze up to there, it's not even to the week. We can just kind of, yeah, this is actually not as big of a move as I thought. So when volatility expands like this, you can get really good intraday moves. So this is the next stop, I would say, that we're looking for, where we could see sellers step back in, and I would like to see a strong catch. So 6,700 SPX, that's the weekly trigger. Assuming we can't, I think 6,500 is the level that needs to kind of be back tested. Ideally, we come down here, and then we see a lot of call pressure coming in above, and these puts get monetized. So the red would shrink, and these greens would grow. So we'll keep watching that each day, just briefly to kind of keep track on these levels and see how they progress, because they'll help kind of frame where options might be telling us we're headed next. All right, guys, that is the GEX profile. So right now, intraday, pretty pinned. Overall, we have targets to the upside and downside, and we're watching to see which one grows, but I'm seeing more growth to the downside. Today, maybe a little bit of a pause in that. So we'll also watch the open interest going into tomorrow and see which of those calls and puts stick. So that's what I got there. Josh, anything else you want to talk about before we put a bow on this?
Are there any big data releases this week?
Let's see, data releases this week. That is a great question. I can get back to you in just a minute on that.
I was wondering if last week we had was it CPI or PPI? What was it last week that we had? So we've had some, just didn't know if there was anything this week. I thought they usually follow up with one after the other.
Let's see. Yeah,
any questions?
I
Go ahead.
Get after FOMC there, like what comes next. I'm like catching my breath still.
I know. Yeah, I know you guys, this is the first lunch. We're going to keep doing this. So Monday and Wednesday, add to the, of course, the slowly but surely, we're going to add to the stream here on TTP, and that's the news thing during the lunch on Monday and Wednesday. Kind of like what Steve does every, Monday through Thursday. You got that recap in the afternoon. I've been talking about, maybe doing this for a while, and adding, something that we can do in the middle of the day to do a little midway recap. And this is great, especially for small caps and the large caps, to kind of catch you up, up to speed, so to speak, of what's happened, what we're looking at, why we like it, why we didn't like it, or what didn't move, and why it moved, or whatever. So every Monday and Wednesday, come on over, join in, and then once this gets rolling and going, kind of like the call-in show, or any of the streams we have, chat it up, ask us questions. If there's a stock that you traded, you went long and it was a bad long, why didn't this long work out? Or like, hey, I want you to break down this chart. Where is a good short at? I would like to short this. And anything you guys want to go over, we'd love to help you, because we love breaking down charts for sure. So it's not always about what we're looking at. You can always, chime in, and we can be at what you're looking at. All right, so economic data releases. What we got this week?
Let's see. So, let's see. On Tuesday, tomorrow, we have manufacturing PMI. That is going to be 9:45 market time. And is that correct? 9:45? Is it adjusting to my time zone? It says 9:45. We'll double check on the time. But we have PMI on Tuesday morning, as well. Yeah, manufacturing as well as services. On Wednesday, we have CPI for not us. Okay, never mind. Like, apparently, I got non-U.S. events on here. Crude oil inventories is coming in on Wednesday, so that will be important for the oil trade, seeing how much pressure that will relieve or add to the indices there. Besides that, jobless claims on Thursday is going to be, I think, probably the
Yeah.
biggest thing this week. So that's
Yep.
100% what I'm keeping my eyes on for. And so we'll be looking for those potential pivot points on a weekly candle to happen on that Thursday or potentially Wednesday on the oil print. So those are the two
Sweet.
that I'm looking for there.
Love it. Yeah, that's one thing too. I know of course, everyone in the large cap space. My baby today actually was Tesla. I had that long out of the gate. I didn't take it like a scaredy cat because the market where we're at today and I thought I was worried we'd run hand in hand. And sure enough, she exploded. Just that it would talk about a cup and handle, kind of that cup and handle there in pre-market.
Mhm.
If you had that bull flag, then it kind of formed a little bit of that cup and handle there, and then just squeeze and go. And oh, that was my
Oh, I
baby
see.
today, so I
Yeah.
did want to bring. Yeah, I did want to bring
Re-
that one up. Because that was a
Really
gorgeous
nice.
at the bell. I just didn't take it, but that's what I was eyeing out there. One play for me in large cap space. So every day I'm just looking at the chart. You know me, you can see that enough now. Yeah, but that does worry me. The world we've gotten in now with the Trump and these data releases and how these plays can get it. Almost run hand in hand, and all of a sudden happens, and it's going one way or the other. Now everything's going in that direction. So I get a little more timid these days, but I just need to, again, like this morning, just trust that chart. When you see the chart set up, it's there for a reason. Trade it.
Yes, sir. I love it. Yeah, and it's funny. The last thing I'll say, Tesla, you're watching it to the long side. I'm waiting for my short
Oh yeah,
potentially at
yeah,
390 on that gap fill. So we'll see. We'll see. There's always two sides to every trade, and
yeah,
that's what you get here at Trade the Pool. A little bit of everything. So
yep.
thank you so much, Josh. It's been a lot of fun. I'm looking forward to doing this on a regular basis. I hope you guys enjoyed and are going to join us on the regular. So we're gonna cut back to the scanner, I believe, for an hour, and then I'll be hopping on for
Yeah,
Power Hour.
yeah. I was like, yeah.
So
Then you're back in an hour, a little hour back. I love it, love it, love
you
it,
just
love
can't
it,
get
love it.
rid of me, man.
Yeah, well,
So
I love it. It keeps people, so there's always something going, So we're going
mhm.
live, a little break for the scanners, go live, a little break for the scanners, go live, and so it's keeping people on edge to, to come back and want for more, and then and good conversations too. So in every one of these, it seems like someone can learn something from it, or whether it's charting or it's a good stock that we bring up and now they're seeing it, or it's a good lesson that we're going over, whatever it might be. Love doing it.
I
Love it, my
love it,
man.
man. I love it, man. And I learn a lot every time too. So
Yeah.
thank you guys so much. You know where to find us. Thank you, Joe, for posting those links
Yep.
for both of our socials in the chat as well. That is how to get in contact with us. And we will be right back at it. Me in an hour. And Josh, let's see. I'll see you Thursday. Are you on before
Yep.
that?
Well, let's see. I'll see you. Well,
Oh,
I'll be back
Wednesday.
tomorrow. Yeah, yeah. See, I'm every day now. So I got
Oh,
Monday
sick.
and Wednesday here with you for the lunch recap, and the same thing Tuesday and Thursday as it has been. No change there. So I'll be back tomorrow to join the guys, Money, Mitch, and Mike, for an hour. Then myself for an hour, and then if anyone wants to join, like yourself or whoever, I think we're trying to still fill that role possibly for that hour that I'm live, where it was me and Kevin. Same
Oh,
thing
yeah.
for Thursday, in that
I,
one
I got
hour,
you there, brother.
and then yes, then I know you'll be there Thursday for the call-in show.
Awesome. Awesome. Awesome.
My
So
new
looking
Colin,
forward.
you're the new Colin show, my new Colin show dating partner, correct?
Yeah, yeah, absolutely. You and me, baby. Yeah, it's so it's gonna be a good time for sure. So
All
guys,
right,
lots of great content coming your way. And I see you 163 in the chat midday. We appreciate each and every one of you, and we will be back soon. All right, Josh. See you on the flip side. Take care, brother.
later.
All right, folks, it's that time already. I'm Steve Tileman, and I'm here with you with Trade the Pool for Power Hour. And a power hour we are hoping for indeed. We have a nice little 1 minute flag, spies the 1 minute chart on the right here. We're watching and seeing if this is a flag or a false flag. So far, these moving averages, the 9 and the 21, holding admirably, flattening out, and preparing for the new volume coming in on the turn of the hour. Howdy, Crow. What's going on, baby? All right, so far, first move, little pop-up and a potential rejection. So, SPY, we are digesting an hourly flag. We had a big, strong power-up move in the pre-market off of potential war, fear, alleviation. Is it real? Well, the oil bid has been a little bit stickier than I'd like, and we are seeing a little bit of that fear, that premium still being in the market. Well, a lot of that premium. Oil is still trading. Despite being down 10%, it is still trading at 109. USO is at 109. So I'm looking for 100 this week if we can get a continuation rally going here. But what we haven't been able to do is hold over the 200-day. So guys, we are still in wait and see mode. The name of my newsletter this week was, I don't even know what it was. Something about patience. Something about patience. Patience is a position. There it was. So we got to be patient. We got to wait for our spots. I'm not sure if this is a bottom yet. It could be. Could be, but it's unproven. What we want to see is a tight flag. We want to see this price action tightening up and acting constructive into the close. So far, a little bit of a head bonk, false flag so far. We will see if it can catch at the 50, this white line right here. That's usually where I like to see the trends hold. You can see that the blue and the yellow can get undercut, but this white one is usually pretty sturdy here on the way up. It's going to be our intraday trend guide as we watch that. Let's take a look around the market a little bit more. How's gold and silver doing? Are they recovering? Quite a washout here. Quite a washout here, showing some relative strength to SPY a little bit there, I would say. But still trading along with it, it seems. And oil as well is following the same thing to the other side. You can see this is our inverse indicator very clearly because it's doing the exact opposite of SPY. It's rejecting off of this 50-minute still, trying to flip this. So we'll see if oil can flip it or if this all is one consolidation for the next leg down, ideally to this 105-ish kind of zone. Definitely the top watch for me today is this oil and how it is interacting with indices. Sir Stephen, that's my knighted name. I like that. How we doing, Crow? Making a good trades today? We had some good action in the small cap space. We saw AHMA doing some things. Let's check in on that bad boy. The Ama Bahama Mama. Oh, all right. So we were watching it as it traded in. We said, watch it into $1. It didn't quite get there. All right. It's up almost 100% from there, but still trading in the very bottom of its daily range. How about that for a chart? So be careful on these guys. I don't know. Could it squeeze? Yeah, it could squeeze and fill up some of these gaps. Is it worth the risk? I don't know. If you're playing it, I feel like it's hard to not get stopped out. And if you don't have a stop, you can get murdered. So be very careful. It does look like it has some room to the upside here. Interesting little curl up. The hourly pivot here is trying to flip as well at 2 to 220. Interesting look there. And I forget what the other big small cap mover was. We can take a look at the list in just a second here. BIAF, that's what it was. BIAF. We were thinking that looked pretty strong. And so far, whoa, all right. This one's just waking up again here, guys. Let's take a look. All right, it just got some volume coming in on the hour. Big candle here, up from 455 all the way to 495 before wicking down, retracing 50% of this move. It's trying to digest this 200-minute moving average. See it bumping and grinding up right up on there? Right up on there on that purple. So that is the decision point here. If it can squeeze through this, it can try to eat the wick. Eating the wick opens up the possibility to eat these wicks up here. It's all about keeping these bears on the back foot and just watching that liquidity push us up into the promised land. So let's see if we get the close. Like I said, over this 200-minute, looking surgeon, looking very strong. And let's see if now it can sweep the wick now that it's gotten over this hump for now. It can back test it a few times, totally fine. But we want to see it continue this push within a few minutes here. So this will be a fun one to keep an eye on. We got some spicy ones. Here's the back test. Here's the back test. Is it going to hold or is it going to lose it? 44 seconds for the bears to push this candle down. You don't like to see the top of a candle coming in the first 15 seconds, especially when you want this momentum, this squeeze. Now the bears have control just on this 1 minute candle. They're still on the back foot from this, but it's a big battle right here, and it's a knife fight, you know? These small cap stocks can rip in either direction, 20% in 1 minute candle. So you gotta protect yourself, and remember, every stock has its own ATR, average true range. Every stock's gonna move a different amount in its day, and it's going to be based roughly on what it's done in the past period of time. Usually 20 days is a good look back period. So you got to play each stock based on its own characteristics. You know what I'm saying? You know what I'm saying? Can't just trade your I don't know, XLV, the healthcare index. You can't trade that with the same risk you can trade this. Well, or I should say the other way around. You can't trade this like you could with something that barely moves, you know? So you got to size appropriately. This thing is digesting. We're sitting here waiting for it to flag here, watching this minute, 200 minute, and you can just see how there is a decision being made. To me, it looks like not a hard rejection, which makes me think that it wants to go higher. But let's frame the trade. Let's frame the trade. How would we trade it? We'd put a stop under here. And if not there, definitely under here. But I think a stop under here is fine. That'd be under all these moving averages, a candle close under there, and you do not want to be in it. First target was these relative equal highs. I mean, personally, if I got in on a candle close over this 200, I don't think it's a very good risk entry. So what I would like to see is these moving averages come up and it to trade sideways for another 5 minutes or so to give that nice low risk entry. Otherwise, you're kind of in no man's land here. And to define the risk, it's, I guess it's 1-to-1 roughly, but we can probably do a little better than that. That being said, I don't turn my nose at a 1-to-1 if it looks good, you know? If I think the 1-to-1's going to hit, I'll take the 1-to-1, you know? Right now, we are losing the 200 briefly. We want to see what it does on these moving averages. This could be your entry point. On a wick back into this imbalance, into a moving average, if you catch it fast with a tight stop, that is acceptable risk entry because then you're entering, say, like right there. You know, that's risking this line to this line much better than risking this line to this line. See what I'm saying? When it hits our first target, we're only making like a quarter of what we're risking. Down here, looking a lot better, right? Also, you could say, hey, this is the top of this base that it kind of broke down and did a fake breakdown to. So a little area of interest there. We're going to keep an eye on this one because it looks like it's going to take a few minutes, but I do think this one has potential here. Why don't we pop into a grid? Let's get some grid action going. Let's get gritty. Okay, as usual, we're going to do the index in the top left. Let's put it on a 5 minute. Got to have our oil. Got to have our oil down here below. This is our negative inverse indicator here. Qs in the center here. We got some Ethereum action watching that as well. I'm going to probably switch these to 5 minute charts to give us a little more perspective of the day. But so far, we are digesting here on SPY. Seeing a little more constructivity in oil and a little more weakness in SPY that I'd kind of prefer. Also saw that little 5 minute head bonk here on Ethereum. Don't think it's necessarily anything to worry about, but just keeping an eye on how this first 15-minute candle is starting to progress. So Q's looking not too bad, honestly. Then we're going to be watching VIX. We want to see VIX down here in the middle center dropping. That's going to give us some additional juice to the upside if we get the volatility to drop and this oil to drop. So we're watching these two down here to go down for the chance for these to go up. Now we can switch to our small cap BIAF. Is that what it was? BAFI. BAIF. Is that what I just did? There it is, BIAF. Q's trying to curl up, Q's leading the SPY. That's good for risk on sentiment. We're getting that push down in VIX and as well as oil. So starting to shape up for bulls. Let's see if we can get these candle closes on the 5 minute close right here. Solid. And now on the 15-minute close is going to be a little more important, I think. So the next 5 minutes we are in decision mode. Come on, there we go. All right, a little bit of a breakdown into BIAF. It is trying to test those moving averages like we talked about. You don't like to see the steep of rejection, so you want to see this candle close strong. We will see if the bulls step in off these short-term moving averages, or if maybe this was just a little pressure release up and a mitigation block to get to get longs out of their position and let shorts reload. We shall see. And meanwhile, no strong candle close here on Qs, or I should say a weak candle flip here. So we could see the start of a little bit of a roll. We got to remember where we are in the context of the daily candle too. We made some good progress to the upside before retracing a good amount of it, and now we are kind of waffling in that middle. You can see right by the open. So the battle for the close is going to be the battle for the open. You know what I'm saying? In the last hour here, we're going to be fighting for this hourly open at 657.65. Roughly, let me get the exact number. The open 657.75. That's what we are cooking with. All right. Came out the outside with UGRO. What's UGRO? I feel like I should know that ticker. Urban Grow. This is going to be spicy, I already know. Woo, that's still strong. Crow is cooking. Crow's cooking. And he called his shot. So let's take a look at this while SPY tries to drop a little bit. We'll give it some privacy for a minute while we watch you grow, because this thing's strong. It's trying to push out of this flag still. Where are the higher time frame targets if you're still in this thing? Let's get to a daily and find out. Whoa, mama. Absolutely heating up. That's massive volume there for this thing. Starting to put in a tiny bit of a top whip perhaps, but we got to zoom out further. When's the last thing that's traded this high? Never? Never? Is it in blue skies? What is this? What is Urban Grow? Is this a weed stock? Okay. It looks like a weed stock. Or something. So at least we have a range to work off now. So there we go. We tagged the 50% of the range, and we found sellers off of that 7 handle. That's going to be pretty significant because you can see this is where it tried to bottom at one point. With this little decent bounce from $5, which was a temporary floor, up to 7 there before the initial the big sell-off continued to ramp all the way to 20 cents or so. This thing was going to 0 until a couple days ago. So now we're back testing the retrace, the 50%. There's going to be pressure here. There's going to be pressure here. This thing, I would want to see what it does into its rising hourly trigger. For that, I can check out handy dandy thing or trading view here. So hourly trigger is going to be at 317. So if this rises here, that's also the daily trigger. So that's why it's squeezing like this right up into the weekly trigger at 611. So that's where it's finding a little bit of sellers. Now 3 top wicks starting to form on the 15. I think that probably most of this move is done for today, but keep it on your watch list. If it comes back down to maybe the $4, this drifts up overnight to $4. That's an interesting area. 4 to 425 maybe, where these top wicks were this morning. Keep an eye on that one. Meanwhile, SPY, can it do a fake breakdown under this 50-minute, or is the momentum starting to roll here? Because USO, it's hanging in there. It's trying to digest and form a candle over its 50-minute. See, 1, 2, 3 attempts now. Meanwhile, SPY actually leading the way down a little bit. It's under its 50-minute here. We're going to watch and wait. BIAF, we talked about wanting to see bottom wicks under these moving averages. We did get those. So that was a valid entry. Was a valid entry. With stop under the squeeze candle, you'd be sitting a lot prettier now, and now be looking to either trim into this 200-minute if you think it still needs some time. That's 480 to 482, or look for the sweep up top, ideally at 495 to $5 for your first trim. That's what we're kind of thinking we're working with there. Meanwhile, VIX just doing a whole lot of nothing, waiting and seeing. I think if in a vacuum, I think this chart looks heavy, but we're not seeing the confluence. We're seeing a little bit too much strength in USO, a little bit too much weakness in the indices still. Q's fighting for its 50-minute, and we did find a bid stick here. So we'll see if this candle closes strong. 47 seconds left for the decision here. I call this a bid stick. Whenever you see right in the first like 5 to 10 seconds of a stick, a strong volume come in, you're probably going to get a decent move. Often it will push up and reject, and then that is the impetus to push further. But sometimes the bids stick, and you can get a little bit of a counter trend squeeze. You know what I'm saying? A little bit of a squeeze action. Right now we are seeing a bit of a spike in USO, a little bit of a spike in VIX, and this is a top look into moving averages on Qs. So bias is down here based on this candle, closing in 17 seconds. Closing in 17 seconds. And this has been a pretty steep uptrend from the bottom. So we could entertain the possibility of maybe a bear flag going on here. We do see we broke that trend, and that is where we're starting to get weak here. And we lost the moving averages after breaking the uptrend line. So now I'd be looking at a 50% retrace of this little leg up here. 50% retrace puts it right back at 657. So while this plays out here, I want to take a look at my GEX profile and see what's developing. Still giving us a big middle finger here at 6600 SPX. So that still is the big level that is now seeming to push us down. No major nodes lighting up below yet. Probably range bound to 6560-ish or so. 6560-ish or so, which would be roughly, yeah, that 656, 657 kind of zone. Here we are getting that flush. Here we are getting the roll, boys. Getting the roll. Let's see where we catch. So right now we're retesting this little bit of a breakout here that we got about half an hour ago. Just a little bit of a yeehaw. And we got to watch and we got to wait. USO starting to curl. Qs, though, trying to show that muscle. If we can get an engulf, then we can reset that bearishness and call it, hey, we retested the breakout and found buyers. So far, though, you can see wicking down, and after pretty aggressive bumps up like this, because volatility is starting to pick up. Now let's watch for this follow through candle. We're watching VIX try to break out the top of the range. That would be another little sign. But like I said, just watching for intraday moves here. Overall, still an indecision because we're still kind of beholden to headlines. And you could definitely see some of that euphoric morning, like, oh my goodness, war is over type of bidding fall off pretty darn quick. Okay, you got out. It hit 380 to 6. Whew. Yeah, you're out. I don't blame you. I don't blame you. It looks done to me. Looks done to me up into that middle equilibrium there. So SPY head bonking into the 9-minute. And see, remember guys, never going to be smarter than these things. So just, if you're in this short, just keep on following it as this moving average curls down and keep taking profits as it gets overextended from the moving average. So you could have said, hey, this is a big red candle, away from it. Even though I'm still bearish, I can take profit here. And if we wick back up into it, then I could add that right back at a little bit of a discount. And I like doing that because you might get 2 or 3 looks like that, and you're still playing with momentum here. See, the candles are still heavy. So it's easy to trade with the wind to your sails. Hey, Talk. What's up, brother? URI having a nice day? Let's take a look. United Rentals. Interesting. By interesting, I mean boring, but forming a nice bottom. My commodity bro told me, it's so cute. He was all excited. He's like, paper stocks are so strong today. I shouldn't make fun of him. He's a great trader. It's just funny the things that he gets excited about. So maybe it's time for some of these boring type, what would you call? I don't even know what sector this would be considered, but I know it's boring. So, hey, maybe it's time to get long some of these ones. If we zoom out a little bit, yeah, undercut a lot of levels here, trying its best to reclaim that daily 20, or sorry, daily 9. Not a bad look there. I'd like to see one higher low, fill in that gap maybe at 720 there or something. Q's trying to carve out, but I don't believe it. I don't believe it till we close a candle over that 9 for starters. But I think that there's still a lot of sell pressure in this market, and if we aren't squeezing up, we could see that come in pretty quick. We could also squeeze up pretty easily if things change. That's why I keep watching that GEX profile to see if there's any big orders coming in up above or any big monetization of puts, which might give us that pressure up. Till then, still following that moving average. Head bonked the 9, and there was another entry so far, pushing on down while VIX trying to cook here, and USO spiking a little bit higher. A little bit higher. So USO is probably going to backtest this 110 level. That's going to be a decent neckline here to contend with, so we can watch and see how it transacts there. VIX definitely looking like it wants to start rocking and rolling. Some volatility in the volatility candle. So we'll keep an eye on these as they unwind. Bulls aren't going down without a fight, but like I said, they need to get some traction here over these moving averages to prove themselves. So you said URI is doing well. OIH on the rebound. This is going to be oil services ETF. It's looking so strong. It's just like such a mechanical bid. It's like every red move just ends up getting eaten up like so effortlessly. Like so many red candles on the way up, but every time, end of the week, it's higher. Beautiful. Beautiful negotiation of price amongst buyers and sellers on the way up, and that means that despite it being a lot higher than it was a couple weeks ago, it still can push higher because it's got constructivity. Ooh, USO starting to push here. Starting to push. There's this 110 level, and now next stop for that is going to be seeing if it can sweep over this wick. Sweep and a close over this wick could set the stage for a push up to probably... It's a decent pivot here at 111.50. A lot of oscillation there. That's where it kind of puked off of. So yeah, that's what we're kind of looking for into the end here of the day. We are going to have 40 minutes left. 40 minutes left. Q is still weak. And BIF, not doing much of anything, not looking particularly strong, but, you know, it's within that range. The trade is still framed. We'll see how it ends up closing. All right, let's start going through the watch lists. What do we got cooking? So a few things that I find a little bit interesting, are the strength in, first off, I'm liking EWZ, how it's shaping out here. This one I wasn't sure if it was going to break down pretty heavily or catch itself, but I think it's starting to catch itself. This is a very commodity-heavy ETF, so I will be turning my attention towards the commodities here. Let me show you a few things that I'm seeing. So we've got the little peekaboo potential. It's also lining up with this 21. The 21 is over the 9 still, but that can change pretty quick. And I like that they're kind of evening out. I like that this, what is this blue? It's a 50. It's usually white on my charts, but this 50 is right here. That evened out nicely, flattened out, and we are showing strong buyers under it despite digging deeper for a few days there and looking like it might really need to wash out and retest this breakout altogether. So I'm liking this one for a swing. I have a few call runners for April that I had up in this range that just broke down. They're very, very dead. It was just like 1 or 2 left. So I'm thinking about just scrapping those and throwing them into some... a little more time, probably June, and I need to think like probably 38s, but I could do 39s too. Thinking about that to get some Brazilian exposure back on the table, because it was a good trade for us for most of the year and took profits like here. I think somewhere, I think on this red day I took some profits, and then the play kind of died. So gotta keep an eye and see if it's ready to reshape, which it looks like it might. So EWZ, that is going to be Brazil. EWY, also interesting here. This is South Korea, and we are watching and waiting. Is this a power shelf flag push mega base launch pad thing, or is this a bear flag? I'm not sure yet. But bias is still to the upside. It formed this parabolic range. It came back on down, held after it swept this this 76 or 78 where they often run fibs, came down, formed a higher low, formed another higher low. So this is looking pretty constructive to where I don't think it's a bear flag. All the moving averages are just aligning, just getting ready for this to light the fuse, I think, and surge on up in to fill this gap. So I think that this trade still has room. And where South Korea goes, memory goes. So Micron having a bit of a red day, and I'm starting to look at where we might be able to find either an entry or where the play may be invalidated. So we don't like that it closed under these moving averages today, especially after trying to push up. But seeing South Korea's chart makes me think that, hey, maybe it's just going to be an overnight thing and it's kind of scaring people out just a little bit and offering an entry. One area where it might dip down to and offer an entry this week is this little imbalance, this little gap here that never got filled. So this aligns with the 50-day here. And we could kind of look at it as sort of a deep flag back test. Maybe we draw it like that. That looks decent. So this is the area that I'm looking, 390. If I find buyers at for Micron at 390, I'm going to add. I have a little bit from 395 because I bought it open on the gap on what? On this day, I guess? Yeah. So coming back to break even, trimmed a little when we swept the top because I'm a good boy. But besides that, hanging out, looking for a spot to add because I think this thing goes to 500 plus. Just not sure how much I want to bet on it that it is. That's kind of what I'm seeing there. We can go over the other ones too real quick. SanDisk, real strong there. And let me get my comments up, see what's going on. Yeah, commodities, soft commodities looking interesting. Wheat, DBA, you got corn as well. I like DBA in particular because you get a little bit of rounded exposure there. We can pull that chart up in just a second. SanDiscarino, I don't know what it's doing here. It's an expanding pattern at the top of the range. Is it a megaphone on top of a flag? It looks stronger than Micron. It's still holding its 9-day here. And this gap where I'd look to get in here is, I kind of did it this morning, wicked into there. It'd be nice to get in off this pivot and the 21 here, assuming that it sweeps underneath, comes back and closes above. You get in like there or something. Not the worst setup there. Sorry, I'm dropping stuff. There we go. All right, so we talked memory. I want to talk that DBA though. So this is going to be the Invesco Agriculture Fund. So this one's going to be, it's got a lot of corn, wheat, what else? Coffee, I think, stuff like that. And this thing looks a lot less impressive on this daily. Let's go to a monthly. That's more like it. Just a big old power flag and high volume. High volume. So on a weekly here, that's looking nice. We're going to start by drawing our little pennant. So that's roughly our flag. I gave some buffer zones here. But you can see very strong. And in the past month, two big bottom wicks, both bought up really nicely, trading at the top of the range here. I lost track of this one. I was looking for a buy off the 9-day, and I bet it gave it to me, and I didn't pull the trigger. Yep. So this day right here, it was scary, but then this day was a safer entry. And today even was an entry here on a reclaim at the open. So this one looking like it's constructive and looking like it wants to just keep on surfing up these moving averages. So see, it got extended, gapped up. Just needed to wait for this to catch up. Now it's reloaded once, twice, 3 times, 4 times. Probably ready to make another push here. I'm liking this stock, or this ETF, I should say. It's a good way to put exposure on. It's good. It's a good war type play, Strait of Hormuz closure continuation play that is not quite as overbought as some of the oil plays or some of the maybe the fertilizer stuff, which can be a little bit more fickle, I would say. As you can see, this one getting popped, and it looks like I did get stopped out here today, probably. So this one we got in at 74 off the 9 moving average. We sold at 85 because that was our higher time frame target. Trimmed, I should say. Still have some. And it's round tripped completely now. And I should have probably stopped out yesterday. I wanted to give it a little more room. So take a quick look at I'll get rid of that. Well, regardless, it is posting a bottom wick off the 50, so I'm going to give it another day now. It's a small position, but Probably should have managed that one a little tighter, but you can see how these moves can come back on you pretty hard. Another example are the tankers. This is a play that I did get in today. So I am long Eco and DHT. Tankers got a little ahead of themselves, but I think the fundamentals are still phenomenal here. I think it is a really, really good place to be having some position in these. And you can consider the tankers and your energy positions and your natural gas positions, your oil positions, your, I don't know, your military defense contractor positions. You can kind of consider them all as like a little bit of a, you know, diversified basket against, or to hedge against, for the possibility of a long, prolonged conflict. Because we are not going to just believe the first thing out of Mr. Trump's mouth. You know, we got to just trust what the market does and keep on waiting for confirmation when we get some headlines that we maybe aren't so sure if we can believe them or not. So I like Eco a lot. This one's very, very high quality. DHT doing very well as well. It's the same chart, guys, and to me it looks like a big old flag. Big old flag. These things have a lot of room to the upside if they want to keep going. That being said, you got to remember they have made quite a move already. But to me, looking like pretty textbook high and tight flag. Big, big move, over 60%. Coming back and holding pretty tight, within 25-ish%, I think. 18%. Perfect. Yeah, so totally valid high and tight flag. Now basing out. And there's a chance it's a bear flag. Same with the memory stocks, but my money is that this resolves to the upside. So took a position in DHT at about, I think 1756, might have been 65, I forget, one of the two. And then the other one was Eco at, looks like 47 something. Is that the mark? Yeah, 47.78. So basically exactly where we are. I could have got a better entry on this. I just wanted some exposure and had too many things, too many pots in the fire, too many spinning plates this morning. Let's get back to the grid here, see what's shaking and baking. SPY doing a whole lot of nothing, a whole lot of sideways. Still deciding. To me, it looks like it wants to resolve down still, but still hasn't yet. So maybe bears get tired. I'm getting tired. It's been a long day. All right. Nice, nice, nice. Okay, so oil. We did see this spike over our level, but then there's a seller here. We like this. We like this. Still a higher low, so it might get another chance to run this. But ideally, it makes a lower high up here and then rejects greater or bigger. And this is just another kind of pressure release, little bear flag. VIX still kind of holding on, so it's still just undecided. And I think that this pressure release in oil is why SPY and Qs haven't broken down yet, at least. All right, Talk is saying he's adding Mondelez, Bunge, and ADM. Oh, it's been a while since I played these names. Let's take a look at some of those daily charts. So these are going to be like grain, like what do they call it? Consumer goods, consumer packaged goods, I guess. They're grains. They do stuff like that, I think. Archer Daniels, Midland, yeah, and the Bunge company. I know they move with fertilizer, but not, it's like the second order kind of. Like they'll move after fertilizer, I believe, usually. So interesting. Let me try to reconstruct the Talk buying method and see why he's long. Okay, a little bit of an attempt at a wake-up candle, but it still seems like top wicks are here, by the way, on SPY. So getting into ADM distributors. Thank you, distributors. Let's go to a weekly. You got to kind of zoom out on these. They're kind of slower trades usually. It's an interesting look. What do I see? Nice channel break, back test, moving averages on the monthly are all crossing over. Looks like it is doing the things. Found some sellers here off the mitigation block. So that's when you have a clear pivot that gets sold off from. See how uniform that is? If you got caught in the riptide here, just patience and a little bit of faith gets you out right at your exit, or right where you got stuck. Then there will be sell pressure because there will be people who are white-knuckling this trade waiting to get back to that level. because it was a significant pivot. So now that we've got there, we are back to this new 3-month pivot we're forming, going into the weekly on the right, and we're just seeing a tight flag tried to break out, now back testing, holding the range. I don't know what it's doing. Looks like kind of like this, right? Tried to break out, head bonked, came back down, needed some time. So this might need a little bit of time. I don't think it's a bearish chart, though. Definitely wouldn't feel good short in this. I think it's a megaphone. I just don't have a ton of faith. So what we can do when we're not sure about one stock in a sector, let's look at the other one, see if that gives us a better idea. Sometimes one chart will be clearer than others. Some what is it? I always forget the ticker. MNDZ, MDLZ. That's got to be it, right? Yeah. So this one's looking better to me. I like the higher low on the daily here. That's nice. Do I like the monthly, though? I don't know. It's probably in a buy zone. This chart just looks like a mess and not something like I really buy. I will leave this one to talk, and I bet you'll make a bunch of money, and I'll be like, how did I not see it? But I don't really see it right now. Well, the last one is BU, I believe. Bunge. No, what is it? BG. That's what it was. Yeah. Been a long time. This one, yeah, this one always looks so strong. This one's like CF for the fertilizer. It just always looks better than the others to me. That being said, the daily, I don't know what to do with this. This looks weird and scary. Like, it might puke. I do not know what to do with this chart. So I think this is like a blind spot for me as a trader. This thing makes me not like it, but I can't really articulate why. It just looks kind of pukey. Just kind of sus. All right, yeah, talks hold until year end. That seems like a good horizon for these trades. Yeah, the same with the wheat, the DBA, all that kind of thing. I'm kind of looking at leaps on the DBA if they're reasonable. I need to check out the spreads and all that. But interesting trade setups for sure. Where are we at? Man, we're only halfway through the hour. Some days it's fast, some days it goes slow. SPY. Let's see if we are getting any progress to the downside or to the upside, but I'd kind of imagine downside. Yeah, oil's still constructive, getting another test at this level. We'll see if it's able to continue the forward momentum, get a swing higher, tick higher, and continue the march. BIAF actually surprisingly constructive, trying to carve out a base. We'll see if it might be having a little trouble or if these moving averages continue to hold. Meanwhile, just waiting for this little bit of a flush out. I'd like to see a little bit of a flush out here. 590s kind of barely holding on cues. It's 570 or 657 on SPY, looking a little heavy as well. I'd like to see a little bit of a washout personally, but really I just want to see some action. Is that too much to ask? Okay, let's check in on a few more charts. A fun one for us today, ONDS. Let's see what ONDS is up to. It was having quite a day. Oh, that's a buy stick. Whoa, that's a buy stick. Let's see where it resolves. So remember last time we got a big strong stick up in the first 10 seconds. It faded back down. Let's see if this does the same off the 5 minute or if this is the start of a character change. This does seem strong, but like I said, we got to watch that 1 minute. Meanwhile, ONDS in the top right corner is trying its best to say, you know what? 36% of you are short me, and I think you're all wrong. So that's what it's trying to do. It's trying to ramp on right out of here. 1040 to 1050 was a big level for me. It consolidated their pre-market, dipped under, dipped over, retested, now seems to be trying to ramp nicely. So we're looking for 11 to 1120 today. That's a good ATR move for it. Can't expect too much. Don't want it to get too ahead of itself. Speaking of which, Q's very, very nice candle close. This should be the start of a little bit of a mean reversion, trend rally, or I don't know. Is it mean reversion? Is it the bottom? I don't know. Let's find out. What we do know is this candle closed very strong. So you can enter on these pushbacks into these moving averages if you're so inclined. Your stop would be under the swing low. So you could have gotten filled there off the 21. You could be waiting for the 9. You could be waiting for a close over this 50 if you're a little more risk sensitive. Either way, I think that basically what we're looking for here is a 3-bar fair value gap pattern. As a bee tries to fly in my window, please don't, sir. So 3-bar fair value gap pattern. Say this candle closes here, nice wick up. Say it closes there, 25 seconds left. So probably does close over this bottom wick. So this is our little fair value gap that has been formed by the 1, 2, 3-bar pattern that was just made. What we're looking for is a wick back into here to get bought up very fast. Ideally, this gap will align with the moving averages. Here, the moving averages are coming up to the top of it. So maybe you try to just target somewhere near the top of that box. That being said, so far, just this plain, simple, clean and easy big candle, wait for a back test of a moving average. That worked right there. You would have bottom ticked there at 590.10ish. So now we are going to be trying to see some expansion up. First level of business, is it a mitigation block? Maybe. We will see up here at 590.50ish on Qs. Basically the sell-off level that it tried to hold and base on. So name of the game are these candle closes. This is a 5-minute candle close in 20 seconds. Oh, no, we already got the 5-minute candle close here. So now we are looking for the 15-minute candle close in 5 minutes. We would like to see resilience in holding these short-term moving averages until then. That sets the stage and opens the door up to this level and a potential continuation overnight. VIX, by the way, dropping nicely, but we're seeing some mixed signals here, so it'll be interesting to see how it plays out. USO, surprisingly strong despite the VIX weakness. So can we see indices and oil move up together while VIX cools off? Let's find out. Let's find out. While we do, I want to pull back to a daily chart on ONDS. Nice continuation on Qs there. Nice continuation on Qs. Now we watch for this candle close after it wicks up into this most likely. So ONDS just playing torture ball on the daily. Once it loads, we'll see that. It's just been trading inside quite a tight range for the stock at least. We're going to go full screen real quick. Quite a tight range for this stock, even though it has been swinging about 20% within this range. What is it doing? Well, I hope that it's forming a nice higher low, a nice reclaim of all these nicely flattened moving averages, and a nice reclaim of this bottom channel line. You can't see it, but it goes down further. It goes back further. I do believe at least. Anyways, regardless, nice level of support here, and it's still finding buyers every time it wicks underneath. So to me, I think it wants to resolve up. I think that these shorts are starting to get antsy. There's 36% short interest last time I checked on this bad boy. And you know what? They have a good, solid company, good, solid business plan, great executive team. And I believe in this company long term and think it might be ready to go short term. We shall see. It's been messing with me, just like Q's messing with the bulls on that little head bonk up over the moving averages. Now we are retesting those moving averages into the fair value gap. You could have got your entry. Let's see if it works or not. You never like to see a big top wick like that. So we will see. We will see. Technically, you'd be in and you'd be green. So you could close it right here and wait for it to settle. But I think we are starting to see that push and pull of how can Q's and oil go up. Somebody's got to be wrong, right? So we'll see how this plays out. Like I said, in the next 3 minutes for that 15-minute close and on into the end. So get it on your radar. In 8 minutes, we got our mock candles coming up. Make sure you have those orders closed and filled out in your Trader Evolution and your Thinkorswim accounts. I'm sorry, Trade the Pool accounts. Your Thinkorswim accounts, do with them what you will. But I'm liking the strength on ONDS. I'm going to hold that swing despite not feeling incredibly bullish on the market into tomorrow. I'm just not sure. All I know is that we caught after a scary overnight session. I don't really trust the news. We still rejected very cleanly off of the 9-day moving average. I'll show you that real quick too. The clean rejection off the 9-day moving average makes me think that the trend is still on down. Whoa, that is a crazy chart because I use this one every day intraday. Clear these for you. And what we can see, that blue line just ding, rejected. So what do we get today? Where do we stand when the dust settles here? Well, it's seeming like dead flat, completely flat. Couldn't be flatter, at least from the open. Still up from Friday, so that is definitely bullish. We definitely want to give respect to the bulls. They did a good job holding the line, and they're doing their best to hold this here. We saw we got 2 wicks into this fair value gap, and it is starting to look like that was a fair entry indeed, trying to push on up. But really, it's got to sweep this wick, and it could get squeezy if it does. Could get squeezy if it does. So now at this point, realistically, you can put your stop right under there because it probably doesn't need to go back there again. If it does, probably rejects. I think that good idea would be to just, make sure you free roll the trade by going break even. And hey, if it gets a move in your favor, nice. If not, you don't get caught in what could be a bear flag. It's a little bit tricky, because the squeezes can happen and they can be aggressive, and you want to capitalize on them. See a nice candle here, but you don't want to get caught. You got to be able to take losses when things aren't going your way in this environment because they can really make you pay for holding on. Nice sweep of the wick here. So great entry if you did take. Nice framing there. So now we're coming into our first trim zone where we're deciding how it's going to be. How's it going to be? Is that Third Eye Blind? Some song trying to get stuck in my head right now. All right, so pushing up into this zone. See how there are sellers there? Doesn't mean they're going to last. We got to still see, but there's a reason why I was looking at this zone. All right, see, they're trying to squeeze them now. Trying to squeeze them. All right, so buyers are preempting a strong mock, it seems, or they are running the market up so they get a better sell level. Who's to know? I don't know, not me, but let's find out. What this is kind of looking like on the 1 minute on Qs is a little bump and run pattern. Bump and run is a pattern that I learned at least from, who is it? Bulkowski and his patterns. So you have the trend line, tries to break it a couple times, then the bottom falls out. It rips back up to the trend line. When it breaks, it often squeezes. So we'll see if that does play out. See, it's trying. It cleared this out. Still finding sellers, but now they're getting ran off. Beautiful close of the candle there, opening this squeeze. See how we're talking about how it could squeeze like this? This is what it looks like, just candle expansion upwards. So we're going to zoom on in here and see what is our next target. Next target is going to be to sweep these two intermediate wicks. But like I said, this thing can just keep on going because it can sweep these, then these, then these, and these very fast if it wants to. See it squeezing on up, eating these. So definitely sell into strength in little bits as you go here if you're scalping, because you never know when the squeeze can stop. Usually I like putting a stop on the open of each strong candle like this after the candle closes. So right now my stop would be right over here, guaranteeing a good scalp. Because when the momentum changes, it'll rip you out of the trade. And it's so much better to sell incrementally into strength and then take one band-aid rip when the initial strength rip, gets stuffed. Because it will eventually. Could be here, could be here, could be here, could be up here, but it will eventually, could be right here. We don't know. But we free rolled our trade, and I would personally take the stop out right when it loses this one, which it looks like it will. All right, I'd be out personally. So now it could offer a higher low, get me back in, but that's a good scalp. Just a good little scalp. And constructive price action overall for bulls. Needs to do some work here and carve out or tighten up, one of the two. And could just keep going. So say I made a bad move by getting out. I don't even think so, but say I did. Where would I be looking to get back in? Well, we have this downtrend line. We also have these moving averages coming up to meet us. We can look for buyers there. So far, feeling like I probably made the right move. I don't want to get sweated. I just wanted to catch this little pop. And there you have it. I didn't even play it, so I'm just play calling here. So that's what my thought process is on those little tiny squeezes, because they can squeeze and look great, but then the bid can turn off so fast. And part of the reason why I'm like, I don't know if this is going to be real is because oil's still so sticky. It's still so strong. Now breaking up through 110, and that's a little bit spooky. VIX trying to undercut and reclaim moving averages. Still undecided there, but it's the oil strength that's giving me pause. Not sure if my comments are frozen or if you guys are a little quiet today. No worries if you are, but feel free to join in on the conversation. Although we only do have 12 minutes left. So guys, make sure your positions are starting to get closed up. If they are not already, it is time to prepare for the overnight. Prepare for that bell. Prepare for that mock candle and the little bit of volume influx that we will see. BNAI, playing games, but still holding at the bottom of this volume shelf. So this one might still have legs into tomorrow. Keep an eye on it. Q's found the 9. Found a buyer. Is he strong? Doesn't look that strong. Let's see. Oh yeah, it wicked under into the 50 and the 21 as well. So we will see one more bottom wick. A higher bottom wick would be nice for a little bit of continuation, a little bit of momentum into the end. And one other chart I want to put on your guys' radar for a swing. I entered this morning very small. Wish I full ported because I'm at 5.5% on it. ASPI. This one's an interesting one. I need to do more research, but a Twitter account that I really like, Penny Check, Undefined Mystic, I saw him posting something about them and something about helium, and that was enough for me. I was like, say less, fam. I'm going to take a little nibble. I looked at the chart, saw bottom wicks under a major range, and thought, hey, risk reward's pretty good with a stop under there, $4, buying at 450, currently at 489, and just tapping into the 9-day. So you could take some off there if you want. I think I want to wait until the 5 handle in this low volume node. See that low volume node at 510? It's going to be right about where this 21-day will be. So that's some nice confluence for me where I'll take some off and then let it cook. But I like this one. I like this one. They are the isotopes. Oh, Q's washing out there. Q's washing out. That's why we said, careful. The squeeze can end quick. Squeezes can end quick, and when they do, they can expand to the downside. So maybe I should have been looking for a scalp short there. Late in the day like this, I'd rather just kind of wait for the volume to come in and wait for the news to happen overnight and to be digested by the morning volume, and we can use that to kind of frame how we're looking into the rest of the week. So guys, we are at the mock candle. That was the mock candle. So people, well, institutions I should say, seem to be selling. I thought we bottomed. I thought the war's over. What happened? I don't know. I do not know. Lind 2. Right. That's another one of those guys. I always forget the ticker on that. Yeah, those the ADMs, those type names. Looking interesting. I'll keep an eye on it. I think I prefer DBA. I think that's how I'll probably play that kind of commodities theme. Or soft commodities theme. Oh, guys, I'm getting hungry. Let's go. Let's go, market. Let's get where we're going. I need a snack. VIX picking up. Q's pointing on down. They just swept the range lows, so expect a little bit of a pop. If you're looking to short, you can look into this fair value gap that just opened and wait for the moving averages to wick back up somewhere in here, or for it to catch up with these moving averages somewhere in here. So maybe that 590 handle, or a little bit above the 590. This might just power on down though. No buyers yet as USO ramps. Meanwhile, ONDS looking like it wants to close very strong. That makes me happy. And we'll see if this tiny little bid does anything other than just give us an entry to the short. Just driving on down for now. No bulls worth mentioning here. I think their only hope is if USO chills out. You gotta chill, brother. You gotta cool down. Take a breather. And that is what we saw today. A breather, but the risk premium is still there for oil. So, in any other circumstance, you get a de-escalatory headline and oil's down 10%, probably don't want to buy oil then, right? Well, this might be a different situation. Seems like the buyers are still there on oil. I'm going to say the risk premium is still there. It has been slightly repriced down, but that could change in a single tweet or headline. So far, still cooking up on USO and still pushing further down on Qs. And I do want to check on the close of Ethereum. That's the one thing I might need to de-risk on just a little bit. But it's a green day. It's a green day into the pivot. Doesn't make me really want to sell. Go to an hourly chart. Meanwhile, Q's finding a little bit of a bid. Nothing to write home about yet, though. Oh, I don't know. Will I regret not trimming? Or is that the washout? Find out next week on Dragon Ball Z. I think I'm going to hold. I'm not feeling great about it, so I'll trim a little. That's the answer. If you're unsure, take a little off. USO's still pushing higher, though. Cool down, brother. That's what Josh Smith says. Hey, good to see you, man. That was a fun stream earlier. Looking forward to doing some more of those. I feel like you might have unintentionally energy vampired me a little because I'm sitting here just trying to keep my eyes open. I was all high octane with you. But hey, we'll dial in. I'll dial in and keep the juice going all day long, because I'm excited, guys. We're gonna be getting a lot more content for y'all, and it's gonna be just nonstop alpha coming at you, left, right, center. It's gonna be a good time. It's gonna be a good time. Unless you're a long SPY at this very moment, that is not a good time, because it is having a hard time catching this bid into the close. We're seeing that continued little bit of a washout here. So definitely selling happening on the mock. We could probably expect a little bit of a pullback tomorrow, and then to kind of renegotiate from there, looking for a higher low off of today's price action to try to retest that 660 wall above. That is our 200 SMA, and that is the line in the sand. We get through there and we could get some squeezy action to the upside, but until then, the pressure remains down, guys. Don't believe everything Trump tweets. So we will see how it progresses. VIX pushing up substantially. And ETH a little weak. I'll take one off. There we go. All right. Risk has been managed. I've done my due diligence. Meanwhile, Qs just keep pushing lower. Let's get a little bit of a zoom out just to see where we're at in the range today. Hey, Mike, good to see you, man. Woke up a little drunk. Yeah, that's a no trade day. That's a no trade day, brother. Good call there. Having a good weekend, I see. I love it. All right, VIX, they're the top wick. Is that the pressure release? Is the selling in the end of the day done, or are we driving lower? Might see a little bit of mean reversion move up as we kind of try to gauge the strength into these brave buyers that are trying to fade the mock candle. Oh, that's not it. Keeps on sliding, and that's a little bit of a shake there, a little bit of a pressure release. So we are getting some decent follow through down here, and now we're starting to look like it's an ugly daily candle. It's not what bulls wanted at all. Yeah, look at that daily. That's not a good candle. Last time we did one of these, we had a puke stick. So let's see. Let's see if we can form a higher low, maybe off that 650. That's starting to look like potentially on the cards. So higher low off 650 could be a nice target to look for if we're trying to carve out a bottom and get a little bit of a rally going. Otherwise, I think we are just looking for any kind of pop to short again, ideally into that falling 9-day moving average. So what do we see into the close? 3 minutes left, a little bit of a bottom wick on Qs, a little bit of a top wick on oil, but really that's just been the name of the game. Oil go up, Qs go down, and vice versa. So not the most riveting meta, I will say. But it's nice to have a solid inverse indicator, right? Just something that keeps on working. I mean, for a couple weeks now, it's been really good. So I'm keeping the VIX on my screen, but I'm making sure that I don't have any beefs with the oil chart. You know, I want to see alignment there. I want to see alignment between the two. All right. So 30 seconds left on this 1 minute stick. Started to push down, found a buyer. You like to see this because then it usually means it resolves up for the last 20 seconds. It's trying. Nope. Wasn't ready. So in the same way we watch 15-minute and 30-minute candles, I watch the 15-minute and 30 seconds on 1 minutes when I'm scalping because I want to see how the intra 1 minute candle move progresses. And it's interesting. It works the exact same way, just on a fractal. I wonder how deep it goes. I wonder how deep these computers are trading. You know, they're 10 second, they're 1 second, they do a Fibonacci range on the 1 second candle, and then they play that range. I don't know. Who's to say? Maybe it's Fibonacci's all the way down. Ethereum showing a tiny bit of relative strength. I'm loving the close on ASPI. This thing's strong, strong like a bull. Another name that I picked up today we should check on, ACAM. ACAM. All right. Yep, popped the 15, made a new high, coming back, retesting the previous highs. I think I still like this one. I got in pretty much right after the open at 110. It undercut 110, and when it reclaimed it, I slapped ass at 110. So nice round cost basis there, feeling good, up about, what, 3% or so? 3% on the first day. I'm going to hold that one. That's going to be one of my only risk-on names that I've added today. That, ASPI, and there is the bell. Sorry about that sound. I forgot my other program is open there. So, guys, daily candle printed a little bit red. Are we going to see a further slide tomorrow and overnight? We'll find out. So, coming up tomorrow, we have, it's going to be, what is it? Big Money Mitch and Michael Noss in the morning. I believe we got some Josh Smith and Jane in the mix as well. So that's quite a panel for you guys tomorrow. And then we just got stuff every single day. We're going to be having, of course, the lunch show, the new lunch show starting or continuing on the Wednesday. So Monday and Wednesday at 1 p.m. Eastern. That's going to be a good time. Come on in. It's like an oasis on a hot day. We're going to hang out. We're going to catch our breath. We're going to talk about what we see and just chill out because, it's lunchtime. It's not going to be a ton of great trades, but that doesn't mean that you can't prepare for the next one. So that's what is on tap, and we're just going to keep on coming at you with new content. Thank you so much for being here. I'm seeing, still 160 viewers, so I appreciate each and every one of you. Larry Boyd, I see you. Talk says pencils down. Mike's looking at Rigetti. Interesting. All right. I got a few names to check out after the bell. But for now, I'm out, guys. Hope you had a great day, and we will be doing it all again tomorrow. Have a good one. Take care.